on the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trend.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. We're bringing this to you from the NDTV Profit Suzlon studios, and we have to see if this is an end of the week that we could actually be happy about after everything that's happened. Folks, long speech by Donald Trump today, a lot of it political, and one word saying that we're going to end the war soon. Problem is, we've heard that now so many times. For months now that you don't know where that's really going to happen. So I think India and a lot of other markets have now begun marching to their own tune. I mean, the Strait of Hormuz situation is happening. Everyone's watching it, but then there are other things to focus on.
Yeah, you know, in some sense, because it's not new news, we are not unduly reacting. So crude being high, will it cap Nifty upsides? Yes. But that excessive volatility that we saw in April, May, end March, April, May, that's gone away. And thankfully for us, now you think of it just from a volatility perspective, thankfully we do not have a Samsung and an SK Hynix dominating our market so much, because if they are volatile, Kospi is volatile, and those numbers, we'll talk about it a bit later on the show, those numbers have gone through the roof in terms of volatility there. We are smelling like roses right now on that aspect.
So it's the same thing that you benefit from on the way up, right? If two large companies are doing incredibly well, the equal thing is you have to face the music when you're going down. Concentration is a problem.
Completely agree, Alex. The limited point is so great for investors if they make money, all for it. Just that it should happen in a measured fashion, and not in such an extreme volatile fashion. That's the only point.
So boring is looking good. India was,
you could argue,
in that sense, seeming boring, right? There's no AI trade. Where is your
boring
chip?
Is always good.
Where is your chip company? Nothing is happening.
I mean, we need them, but not this volatility. That's the point that I'm making. Sorry, just to clarify.
No, we need them as a nation.
Yes.
But I'm saying as an investment destination from the foreign investors' lens, maybe boring is looking good. Well, nothing boring about the show today. We have a cracker of a show to you for you. And let me start with what's happening with global markets. US markets have closed lower as semiconductor stocks have lost steam, and that's a theme across the board. Neeraj was referring to what's happening in the Kospi, but you saw that in US markets as well, especially the NASDAQ, where the concentration of some of these companies is very large. It was the Taiwan semiconductor company which actually disappointed after its results came out. Results were fine, but the amount they're going to spend on capital expenditure is also very high. That's raising some concerns. Let's pull up US futures for you as well and look at what's happening there in the same line, right? You have the one that went the fastest on the way up, also seeing the most beating, which is the NASDAQ. Having said that, this could see a quick recovery as well. Bond yields stayed elevated as tensions persist in the Strait of Hormuz. The 10-year was at 4.55%. The last jobless data read was also decent, so that's keeping the volatility in bond yields capped. Oil prices have stayed on the boil after reports that Iran has asked the Houthis to now close the Red Sea route. To double down. Remember, 7% of oil from the world goes through the Red Sea route. But having said that, look at how Brent reacted, and nothing too dramatic, I must say. It's about 1% up and at $85 mark, but it's been in that 83 to 87 range for the last few days. Just a while ago, in his address to the nation, US President Donald Trump also said that the United States is winning big in Iran. Listen in.
We won in Venezuela, which is now working with us to produce millions and millions of barrels of oil. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
Okay, let's pull up Asian markets for you this morning and see if we have the Kospi on, because that's really the one where all the action is. The Nikkei down about 6%, the Kospi down about 6%. So you're seeing the punishment for having too much concentration on a certain set of AI-driven players, right? Let's pull up the implied open for India. In contrast, we're looking like we're going to open flat, which is not half bad. John Salzfels is joining us, Managing Director, Chief Investment Strategist at Oppenheimer Asset Management. John, a very good morning to you. I hope I've said your full name correctly. Excuse me if I haven't. I want to start by getting your view on how India is stacking up in the emerging markets pack.
Well, we must say, when we look at India right now, it is certainly bounced off of the lows that were from March of this year. We've seen the index, the Nifty, move up very nicely. Back, it looks like it's up about 8% almost from those lows. And overall, it is still, of course, it's off for the year on a year-to-date basis when we look at it. I think a lot of this is, what happens to markets, in my experience, I've been in this business for 43 years. The problem is the structure of a market meets changes in the structure of the global markets. And there's also an element of sensitivity towards things that develop geopolitically. The price of oil has been a big thing, I think, for India, for Europe, many European countries, and other countries around the world. It's been difficult because of what has been happening in the Middle East. That said, we look at India as an intermediate to longer term story. And I believe I've been on this show before. I've mentioned we believe that India will be a great beneficiary of the diversification of the process of globalization away from China, where over the course of the last 40-some years, increasingly for many of those years, all roads led to China for the global supply chain. And it appears that now the world is going to begin to share that globalization process, where China will still be most certainly a part of it, we would expect, but other countries will share a bigger piece of the action. And some of that just has to do with relationships between countries. And I think in the case of India, India is well situated based on businesses related to finance, industrial strengths, and as well as pharmaceuticals and technology. So we can't help but think we'd like to continue to see India doing better this year. And the fact that it had a spell after a long period of upside is just, it's not uncommon, and that is always, there are challenges that occur. Some are external and some are idiosyncratic related to domestic policy.
John, very strong point that you're making. I do want to try and understand what the mood is where you're at on Wall Street, particularly in the context of the recent drop that we've seen in semiconductor stocks globally. See, Wall Street and everybody else is absolutely happy while the party is still raging, and there's no sign of it slowing down as things stand right now. The question is, how long do you expect it will go?
Well, I think where we are right now, this is transformational technology in terms of the development that is being presented by AI. But like any major watershed event in technology, one has to consider the structure of where technology is on the timeline when this occurs. The good news is, these hyperscalers that are investing so much money into the process of the data centers and building all the support efforts for AI and the demand for chips that has happened have driven things up very high. But you've got to remember, many of these hyperscaler companies were companies that existed during the tech bubble. They survived the tech bubble and then they thrived. And technology today is both business and consumers. We're all, whether we like it or not, on the upgrade cycle. There's usually resistance, both even within business and certainly within the consumer, to upgrade one's technology. But already we can see when we speak to colleagues who are upgrading their laptops, for instance, they need stronger chips. They need more powerful chips to be able to access the type of work they hope to do with AI. So I think initially things may have gone a little bit too far, gotten ahead of themselves. We saw spectacular gains in semi stocks during this year. And it still is. Many of those gains are very much, a large portion has been retained by many of those companies. They're still up significantly, but they were up to a superlative level a little bit earlier. And in the course of since June, I wouldn't say they're quite paying the piper, but I'd say they're taking a haircut.
Sure.
That's what we like to say.
Yeah, sure. John, good evening to you. And in late March, early April, the market got this oil shock because the narrative before that was the oil is lower for longer. And then suddenly we had this $110 per barrel mark, and the world markets got a bit dizzied, maybe except US, but even I think the US also corrected. Now that we've seen a shock, a retreat, a pull back again to about $85 a barrel, if crude were to say at $85, $90, $95 a barrel, will it shock world markets more, or do you think the world will come to terms with it because now this is a known devil?
I think the latter, I would say, would be more likely. I think there's always the element of playing the shock, where you get highly leveraged traders love the drama that can be created at moments of heightened geopolitical unrest and volatility. But at the same time, we've got a pretty good picture that this is not the 1970s. It's not the 1980s, not the 1990s, not even the early 00s. This is 26 years into the new century, and the development in terms of technology related to oil, and also I think the response when it comes to what you see from governments around the world, within the Middle East, for example, right away, many things are being done to create pipelines that can go around, essentially pipelines that will go by territory instead of by water, transporting by tankers. Everything is today, the markets tend to discount good news and bad news much quicker for several reasons. The media process of the news organizations like yours, for example, people know what's happening almost instantaneously. They get to hear the both sides from bears, bulls, and skeptics all the time. And as a result of that, people are less likely to hold on to either a negative or a positive before they discount it away and move on the next step. And if you look at the markets, just last week, I think it was 2 down days, three up days. This week out of 4, it's 2 and 2, as I recall. We'll have to see how Friday works out in the U.S. But the thought is here, This is, whenever you get this type of environment, you've got that the traders versus the intermediate to longer term investors that today are represented by more individuals investing for serious purposes, whether it's retirement or legacy, whatever it is, because of the knowledge they have on them and their advisors. So I would say, volatility to be expected, certainty to be digested, and the discounting of both good news, bad news, and the ability for offsets for both of them, positive offsets, negative.
Sure, John. Absolute pleasure speaking with you as always. Thanks so much for taking the time.
Thank you for having me on the show. I appreciate that.
Okay, let's talk about what happened in trade yesterday. And foreign institutions selling more than they have in the recent past in trade yesterday, 4,206 odd crore rupees on a net basis. Domestic institutions buying to a lesser extent, about 3,000 crore rupees thereabouts. The benchmark shuttling in a pretty narrow range if you think about it, just about 130 points or thereabouts, but it ended the Nifty 50 unchanged but at the day's low. For the benchmark, that 24,000 level has proven to be a strong support, but equally that 24,200 level on the upside has been a significant hurdle to cross. Large private sector banks were underperformers in trade yesterday in terms of point contributions. You had HDFC Bank and Axis Bank that ranked among the biggest point contributors on the downside. The mid-cap 150 has underperformed in trade yesterday, but remember, it trades very close to all-time highs, and it is down. It ended down just about 0.4%. The small cap index ending flat, but with a very marginally positive bias. The market breadth deteriorated through the day, and in fact, if we have the advanced decline chart, you'll see what I'm talking about. It ended with the declines higher at the end of the session. Of course, it crossed paths multiple times over the course of the session. Most major sectors lost ground, with the realty index losing the most at 1%. The Nifty IT sparkled, but it gave up quite a bit of that ground towards the end of trade. Auto FMCG consumption eked out gains, and among the individual stocks, you had ICICI Lombard, that was a stock of the day. It was the accident of the day as well, down over 10% off the low point of the day. MRPL, Chennai Petro, Dixon Tech all stood out for different reasons, and by the way, the read-through for MRPL is pretty strong for the OMC pack. ITC Hotels, though it had a pretty decent set of numbers, I think the acquisition that they announced did not really sit well with the street, and the stock ended lower by 5%.
And somehow their strategy, right? Indian Hotels is going a way of taking some smaller boutique hotels. ITC is capturing that super premium luxury place as well. So interesting to see how this shapes up. But the trade setup for the day today, I think it's just this. I think one single biggest factor, everything else notwithstanding, is that oil price uptick results in no steady uptick for the equity benchmarks at least, and therefore it remains very, very bottom-up stock specific. Remember, even on a day like yesterday, after BHEL numbers came out, in a matter of 15 minutes, that very expensive stock did rally 5%. So in some sense, you're seeing bottom-up moves and strong bottom-up moves happening, but market-wide mood staying sluggish because of the oil price uptick. The good part though, India is performing way more steadily versus some of the other Asian markets, including, namely KOSPI, but some of the others too, which is a positive for traders per se, because you do not have that heightened volatility that really kills you on the stop losses. It does on the Nifty, it doesn't necessarily do on single stock futures or options for that matter. And yesterday we heard Minister Goyal speak about the India-EU FTA as well, agreed to be signed by year end, put into effect early 2027. I think textile stocks are being accumulated with every new confirmation of the FTAs, because I think that's one sector we've mastered the art of exports alongside in goods, gems and jewelry in goods, but textiles continue to be out there, and therefore keep an eye out for that cohort of stocks. Lastly, guys, I like this comment that came in from the ITC ED Hemant Malik, wherein he's saying that we've seen improvement, and I think the improvement should continue in consumption, if you will. Everything is not always linear. There might have been pent-up demand which is coming up now, so I'm hopeful that this demand for discretionary will continue. Let's see if indeed the second half has good consumption numbers.
The high frequency indicators, the business updates are indicating that things are not as bad. So let's hope if we weather the storm and then what is happening externally eases, then we'll be in a good position. Okay, some of the factors today, markets are remaining in a consolidation phase. That's for all to see. Investors are waiting for major Q1 earnings. Reliance Industries will report after market hours today. Large private banks will report all across Saturday. So the next, I would say, 48 to 72 hours in terms of understanding what India Inc. has done in Q1 become very, very crucial. Now, this is also while geopolitical developments continue, right? And you have this somehow as a pattern, events which unfold over Saturday and Sunday when it comes to the Strait of Hormuz, and then you have crude prices going all over the place. So we have to wait and see what happens there. The index has extended its choppy, directionless price action into a third consecutive session. The index continues to trade with a tightly compressed multi-day consolidation band, and as long as the Nifty successfully defends the key support levels of 24,000 and 23,930, the broader underlying uptrend remains structurally intact. A closing breach below 23,930 will trigger extended profit booking down towards 23,780. For the Bank Nifty, it remains locked within a well-defined 1,200-point structural consolidation bracket. Immediate support, the pocket is 57,200, 56,900. Immediate resistance barrier at 57,800, 58,200. The key validation level to monitor is, of course, 58,200 on the upside and 56,900 on the downside. I quickly want to go through this take from Chris Wood in the Greed and Fear note and what he's saying about India. He's saying main driver of foreign selling was nothing to do with India and everything to do with surging natural weighting of Korea in the MSCI Emerging Market Index. And of course, he has some more details on that. But what I found interesting from his note, and I have picked, is him saying most interesting feature of Indian markets has been the massive outperformance of the small and mid caps at a time when the big caps have lacked. Main positive for the Indian stock market remains the continuing evidence of inflows into the domestic mutual fund industry. For foreigners to return in size, they need to believe that the AI trade has peaked, which is why the recent rotation is interesting. Or foreign investors need to see much lower valuations in India, which is only likely if there is suddenly a stampede out of domestic mutual funds. There remains no sign of that at present, with most inflows remaining monthly systematic investment plans. So this is something that is noted by Chris Wood as well. Let me go across to Puneet though for the setup this Friday.
Well, thank you for that. It's largely a flattish setup because you're seeing not too much happen on the implied open as well. So no kind of cues, at least at this point of time, having a negative impact, but largely we closed below the 24,100 mark, and as you guys rightly mentioned, directionless is where we are on the benchmarks at this point of time. And it's an important day tomorrow, multiple key banking names. So the Bank Nifty will be heavily in focus on Monday. ICICI, HDFC, Kotak, RBL, all of those coming out with numbers tomorrow. Multiple commentaries will be in focus, and hence this index right now in the middle of that 57,200 to 58,800, that 1,600 point band will be crucial on Monday morning. You'll also have those implications on the Nifty 50 as well, and that's one of the key triggers. So positions will be light going into Monday at this point of time. For foreign investors, we've seen a second key consecutive day of meaningful selling come back again. So from those hundreds of crores that were either getting sold or bought, you've seen almost 2,000 to 4,000 crores being sold over the last 2 days. And if this is a trend, it will be something to watch, because the F&O positions, largely skewed towards the short side. The index long very depressed at this point of time, and that's visible. The range bound Nifty move is visible on the open interest distribution as well. So the 24,000 mark continues to attract important levels right now. But you've seen 24,100, 200 as well as 24,300 to some extent seeing a very high call open interest. So you're seeing a major increase here, which signifies that the market will be in this very tight range of 24,000 to 24,200, and that's what the option data is also suggesting. For stock specific action, yesterday ICICI Lombard was definitely one casualty, was down 10%. We saw a massive buildup of shorts too. And on RBL Bank, actually also going into the results go with some short positions. So if the second day in a row, if that continues, will be something to watch. On the open interest loser side, yesterday Dixon, Amber and the EMS counters were in focus. Short coverings, long build up seen on both those counters after a good positive new scheme for the mobile manufacturing space. While Kalyan and Swiggy, both counters that have done well, have actually seen longs either being unwinded or shorts being covered as well. So both those stock specific counters also continue to do well, but as you guys rightly mentioned, directionless is where we are at this point of time.
I think it's quite cool that Swiggy is including delivery of gas cylinders in 10 minutes. It's a pilot project. Let's see what happens with it. All right, on my watch list, I'm starting with Wipro. It's a thumbs down. The numbers are a miss. Margins are down 160 basis points, lowest in 12 quarters. Some will argue it's a miss, but it's in line. That was expected. The quarter-on-quarter constant currency growth for IT services is at minus 1.2% versus 0.2%. BFSI segment continues to be weak. It's down 1.2%. The Q2 guidance at minus 1.5% to 0.5%, that's the range. That's the issue. Q1 saw the guidance at minus 2 to 0%. Total bookings at $3.3 billion versus $3.4 billion in Q4. Large deals are up 12.9%. The fact that the guidance has not improved dramatically or actually in any real significant way is something which may bear on the stocks today. Core numbers, revenues up 0.99%. EBIT was down 8.5% at 3,828 crores. Margins were down 160 basis points at 15.64% versus 17.25%, and net profit was down about 4.5% at 3,352 rupees. Here's what Jefferies is saying on it. They've maintained an underperform and cut the target price to 150 from 180. They're saying it's another soft print. Guidance implies delayed recovery. Guidance for September 26 being the key negative surprise. Wipro has struggled to grow organic revenues for 3 years in a row, and FY27 is unlikely to be any different. They've cut the revenue and the PAT by 2 to 5% on the slower growth outlook, and over FY27 to 29 they expect a 5% EPS CAGR, which along with 5% dividend yields makes the risk reward unattractive. You will hear from the management in about 6 minutes from now. So watch out for that. Piramal Finance is the other one. This is a good set of numbers, so thumbs up there. Retail disbursements led by strong demand. Retail segment led growth seen in AUMs. Retail and wholesale AUM mix was 85 to 15. Larger ticket loan against property and mass affluent home loans are growing faster. Margins saw slight decline sequentially despite low funding cost. Growth picks up in unsecured business segment. Asset quality remains stable. They've approved a fundraise as well up to 4,000 crores. In terms of financial metrics, asset under management was up 25%, net interest income was up 43%, and operating profit was up nearly 90%. Their PAT is up 67%. Though margins have declined very slightly quarter on quarter from 7% to 6.8%. The GNPA has increased to 2.4% and net NPA is at 1.6%. Very quickly going to go through the last one. Heritage Foods, it's a thumbs down. Bottom line has been impacted due to industry-wide milk shortages and a 7% year-on-year increase in milk procurement prices. Last quarter was one of the most inflationary milk procurement environments witnessed by the dairy industry, and the company undertook calibrated price increases across its portfolio. Average selling price of milk was up 4% and procurement volumes have improved amidst the elevated raw milk costs. If you look at the core numbers, you will see revenues were up, but EBITDA is down 16.3% and margins have dropped from 6.5 to 4.6%. So not a good set of numbers for Heritage.
And not a good set of numbers for CIAT either, and that it has a negative read-through, I think, for the rest of the tire pack. There is impact of higher input costs that is visible. Margins have deteriorated. Operating profit margins have contracted by as much as 561 basis points on a sequential basis, 253 basis points on a year-on-year basis. Remember that the management had guided towards this, and the cost of materials as a percentage of sales stands at 69.2% compared with 59% in the fourth quarter, and a little over that a year ago. So the PAT number is actually much lower, and that despite a revenue increase. By the way, they're also going to add capacity. This was known, so I think the reaction will more have to do with the margin performance and the PAT number. WeWork, second on my list. The net losses narrowed on a year-on-year basis, but the performance is actually weakened on a sequential basis. I think the street will take a positive view though Let's find out soon enough, right? The margins have actually contracted on a sequential basis after adjusting for ESOP costs by as much as 339 basis points. The adjusted EBITDA margins up 478 basis points on a year-on-year basis, though. You had both finance costs and depreciation that seem to have weighed on the bottom line, and that net loss has come in at 4.3 crore rupees versus a loss of 14 crore rupees in the year ago and a PAT in the previous quarter. Finally, Servotech Renewable, we're speaking to them later today. They've won a significant order in Uttar Pradesh, 900 kilowatts. This is for the solar rooftop projects, but I'd be curious to find out what the value of this project is.
Yeah, should be interesting to see. By the way, what Wipro has done, Tech Mahindra has done quite the opposite. Actually, Wipro has been the sore spot. The others have actually done okay for themselves, right? So, Tech Mahindra, the numbers look okay. Net profit maybe a bit lower than estimated, but the revenue numbers were exactly in line with estimates. EBIT margins did okay as well. EBIT at 2264 versus estimates of 2168. So I think on all those counts, I think the numbers were okay. Just that it's an expensive stock. So Citi's note, I kind of sums it up very well. So quickly go to that. Citi's saying they maintain a sell. They've hiked the target price to 1345 from 1220. They say it's a good Q1, partly aided by one-time revenue and lower SG&A. Tech Mahindra, they say, trades at 20 to 40% premium to peers, and the industry remains challenging. Better performance needs to sustain for Tech Mahindra to be able to live up to these valuations. The summation, I think, of their numbers. Borosil Renewables had no such issues around things because the numbers look stellar. Net profit at 86 crores versus a loss of 167. There was an exceptional item in the corresponding quarter last year. But be that as it may, it's a good number because if you look at revenues as well, 17% higher, which is good. EBITDA at 127 versus 63. I think the margin performance was stellar for Borosil Renewables. So don't be surprised if the street rewards Borosil Renewables. The third one on my list is 361, and I'm using the Citi note again to just kind of explain what they did. Citi maintains a buy. They've hiked the target price to 1600 from 1525. The numbers came in yesterday, but they say that they've seen solid non-institutional flows into wealth and the AMC flows. They expect the momentum to sustain in a sweet spot to benefit from gradual formalization of managed wealth. So these are the top three on my list. But we have to talk about Wipro, guys, and I think the management commentary will be important because the quarter was ho-hum, the guidance was ho-hum. So maybe take it to the management of Wipro in just moments from now. Just keep in mind, viewers, what's happened with Wipro is that it was a weaker than expected first quarter numbers. Let's get the chart going of Wipro, yesterday's chart if we can. It was weaker than expected first quarter number, with the revenues declining in constant currency terms and the margins falling to the lowest level in 12 quarters. To discuss this in detail and the outlook ahead, I'll be joined by the company's CEO Srini Palya, CFO Aparna Iyer, and CHRO Saurabh Govil. And this is my question, right? Let's start with Srini. Srini, can I start with you? Of course, all three of you, thank you so much for joining in firstly, of course. But here's my key question, right? When the 1% QOQ growth, can you quantify the contribution from Olam deal ramp up versus the recent acquisitions?
Sure. Neeraj, let me give you a color on revenue, margins and bookings. On the revenue, if you look at it for quarter one, we had a year-on-year growth of 0.9% and a sequential decline of minus 1.2%. And if I were to give a color on Americas, tech and comms really grew double digit. And if you look at consumer was getting stronger. Having said that, I would say that BFSI is something that, we got a good traction and we got some good deal wins in consumer as well. And we'll look at going forward, some momentum picking up there. If you look at Europe, obviously it has a year-on-year growth. And if you look at specifically in the context of the opportunities and the pipeline, we have it across the countries and regions. And if I were to call out, some of them would be, the top two would be UK and Nordics. And APMEA has shown a significant growth. And this is across, secular across countries as we speak, Neeraj. So that's a broad color on the revenues. I also want to bring your attention to the top 5 customers and top 5 clients and top 10 clients of Wipro. They have also seen a sequential growth despite the broader numbers that you saw from a quarter one. Now, coming to the bookings, Neeraj, we had $3.3 billion bookings. out of which 13 deals were large deals, which contributed to 1.6 billion in terms of bookings. With also it includes Mind Sprint that you talked about, which is part of that bookings for the quarter. And if I look at from a margins perspective, we had a drop of 120 basis points. Clearly, there were two big factors. One is the MSI, and second one is the investment that we are making for the future of Wipro, including our AI native unit. So that's a broad reflection of quarter one, Neeraj.
Okay, Srini, appreciate. Can I ask you a follow-up? Is BFSI looking stronger? And because the results of the American banks that came out day before yesterday are looking quite solid. So therefore, are banking conversations looking as strong too from the spends for the year ahead?
So if you look at the reason I called out specifically BFSI in Americas, right, and I can also call out Capco and BFSI in Europe, I think the conversations are definitely trending to, how do we reimagine with AI for each of the banks across the various functions and various processes. They're also looking at traditional cost takeouts and vendor consolidation, because the more cost they take out in this cost optimization deals, they can actually transfer that into AI budgets. But having said that, the banks are really looking at leveraging AI. But again, Neeraj, we have to, they're also being very careful in terms of the token cost. How do you balance between the human capital and token capital, if you will? So they also want to focus on return on investment for each of the processes, and some of the conversations that we are having with them, especially Capco, which is our BFSI consulting arm globally. I think there's a lot of good conversations around AI consulting, AI advisory, and how do we prime data for deploying AI. So those are the kind of conversations that we are having.
Okay. Aparna, can I come to you? How do you see the margins evolving through FY27? What are the key levers? And the reason I ask this to you is because some of your peers are very confident that while Q1 has taken a wage hit, their margins will move up or even shoot up during the rest of the year. What's the scene for you?
For us, if you look at the levers that are at play, 55% of our revenues come from fixed price programs, and there is a lot of productivity cost takeout that we will continue to persevere in those programs, and that's something that will be a lever. If you look at utilization year on year, we have decreased our utilization in order to invest for some of the deals that we are looking at. So that will also go up through the year. That will also be a lever. Pyramid, as we continue to optimize in terms of identifying rotation of people which are there in certain programs and doing the left shift, classical left shift. All these are levers that will play out as we go through the year. Apart from that, we will continue to look at how to optimize our G&A overheads and integrate some of and drive synergy benefits in some of our recent deal wins and acquisitions. Those are the levers that we have. And if you look at it over the last 8 quarters, we have improved our operating margins quite substantially, right? From where we were at 15, we moved it very definitively to 17 to 17.5. While that's the aspirational band that continues to be there, and we will take all steps to get back there, we have to invest for growth. And when we will get back there will be a function of how much we need to invest for AI to a point where we feel confident that we are well invested, and then we'll be in a better position to share that. But we will continue to optimize.
Continue to optimize. Well, we need to optimize this time and move into a break. But the full interview management conversation with Wipro will come at about 9:25 a.m. For now, we slip into a break, get back to the day's trade on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into, and it's a very judicious mix of people to choose from.
Welcome back. You're watching India Market Open. We'll pull up the implied very quickly, and it's dipping further into the completely flat zone. So don't expect any fireworks when we start. Will it build through the day is the question. Parag Thakkar, Kush Bora in our studios. Very good morning to you. Parag bhai, I'm going to start with you on your take on the two IT majors which have that have reported last evening, because we had this conversation when TCS came in, and then some of the others, the things are maybe looking up. This is balancing the scales with Wipro.
Well, I would say that, see, Wipro continues to be, unfortunately, a laggard. So there's no bullishness in Wipro's results.
So when you're saying laggard, you're talking about the stock price or the performance?
Saying stock price is also a laggard. Stock price is 177. It is trading at only 13p. Dividend yield should be around 6%. But, there is no growth at all. I would rather prefer TCS, as I've always said, over Wipro. And TCS is my largest IT holding, by the way. Tech Mahindra, of course, results were fantastic. 2.6% CC growth. EBIT margins improved to 14.6%. And Mohit Joshi has done a phenomenal job. I think when he joined, EBIT margin of Tech Mahindra was below 10%. Now it is 14.6%. So I would say that, but there is only one catch in Wipro. It trades already at 18 times. Which is
TCS or Wipro?
I'm saying Tech Mahindra. Tech Mahindra trades at 18 times FY28 versus TCS, Infosys of say 12.5 to 13 times. So it already trades at a premium. And there in this 2.6% CC growth, I think 130 bips came from one-off, which is a European auto manufacturing thing, which is not going to recur. So I think overall 3% EPS upgrade. So stocks should go up 2 to 3%, but I would not buy today. I would buy on a dip which comes maybe later when Infosys announces results.
Sorry. You are saying there will be a dip when Infosys announces results?
Maybe. That is my guess.
Basis?
The basis means what I'm trying to say is that Infosys generally, as I said earlier also, right, that if you don't count into that acquisitions, then the growth will be very minimal. And so that is the time I think again IT stocks might take a little bit of hit, and that is the time because directionally what Mohit Joshi is doing is absolutely right in Tech Mahindra. Deal wins were also strong. I would look to buy Tech Mahindra on dips.
Okay, buy Tech Mahindra on dips. Kush, let's come to you with, before we go to the IT numbers, what is happening with the Nifty?
You could take the last 4 days of discussion.
Copy paste
and
it.
copy paste and just play it, same ही लगेगा.
No, but don't try and get out of it.
No,
I'm
I'm just saying IndiaVix died and took the markets into a mourning period with it, right? It's just gone so flat. It's so flat. And also the 24,200, I mean, it's exactly the same. 23,800 support, 24,200, 300 resistance. We've been in that tight band. But honestly speaking, that was on expected lines, right? I mean, Reliance will announce the results today, the 4 big banks tomorrow. So the positioning was anyway going to be light. Now, couple of areas of concern, right? FIIs are at 91% short, so in percentage terms it's still heavy, and they are reducing the number of contracts. That's perhaps a positive sign. By the way, this seems like a familiar script because we heard this script last week as well, and then Trump announced the cessation of ceasefire with Iran, right? Could it be something this time around? Who knows, right? But by the way, I've heard the T word come back to play again, which is tariffs. I think the makeshift placeholder section 122 deadline ends on about July 24th or something. So maybe,
they can just extend it.
There is some political pressure, I hear, why it may not be as easy. But who knows, right? So maybe that is also an overhang that is playing on the markets, crude prices also. So right now, I would have a positive bias, ever so mild, but a positive bias. Monday would obviously be a gap opening, either up or down, most likely up, because we're respecting those 24,000 level and flirting with the 20 DMA on Nifty. So the bias remains positive. If you want to play the results, which I usually don't prefer, then go long or stay long, but a tight stop loss or a hedged position, on the Nifty. Bank Nifty better placed, still respecting the 200-day moving average. So here too, like I said, I mean, the bias is positive, but you might want to keep your positions hedged if you're taking them overnight.
Individual stocks that you want to look at. I was just looking at yesterday's to try and figure out what you'd pick.
What did you do?
I'm trying to find it.
You write so much.
I'd say go 2 days back because everything is starting to now work with a lag. Day before we said PG Electroplast and Chalet, they moved yesterday. Yesterday's stocks, Alembic and all really consolidated, and that's actually my worry. I've been speaking about that for the last 2-3 sessions, right? The advanced decline ratio not so great. We start off pretty low on the decline numbers and then it actually inches up, actually more than inches up during the day. That's a mild concern, but like I said, right now I'll take that also more of a consolidation than anything else. So the 2 stocks on the radar today, Deepak Nitrite and Vijaya Diagnostics, both of them have had a good run. There is a good up move as well in Deepak Nitrite in particular on the back of very heavy volumes. So 1800, 1855 target, 1690 is where you keep that stop loss. Vijaya Diagnostics, you'll recall, has had a phenomenal run, and then it just went into a positive biased consolidation. Yesterday it gave a breakout. Also the volumes were slightly higher. So Vijaya Diagnostics for targets of 1455, 1515 and a stop loss at 1375.
Okay, let's talk about some of the others that have reported, and we have so much to unpack today. Let's go into a bit of detail on CEAT. CEAT's quarter reflected the impact of surging raw material costs. While revenues remain strong, there's a sharp margin erosion that has dragged profits. In fact, Puni joining in with more details.
Well, thank you for that. While we're still awaiting some more commentary from the management in terms of the conference call, I think it's a surprising number to say the least, because the price hikes has actually led to higher realization and hence the revenue is up 22%. But you've actually seen a very big margin erosion on the EBITDA side with, at 8.5% versus 11% on a YOY basis. Profits have actually vanished completely at just 4 crores versus 112 crores in the same time last year. Now, we were estimating a number between 70 to 80 crores in terms of profitability. So hence, this is a much bigger impact seen. And one of the key impacts is, of course, raw material prices that has inched up. But natural rubber, crude, all of those have inched up materially in this particular quarter. But the cost of materials is up 33% versus revenue growth of 22%, and hence, gross margins are down 287 basis points when you compare it to the same time last year, but 575 basis points compared to quarter 4. So more pronounced price hikes taken, not yet visible in the margins for the company. The other aspect that since they've integrated Camso acquisition, now Camso wasn't in numbers in the last quarter, like quarter 1 of FY26. It only got commissioned in September of last year. So the employee costs have inched up 30% on a YOY basis, and the other expenses are also up 18%. So expenses have continued to inch up. What you have to watch out for is that the realization, while being higher in the domestic and international markets, are not helping margins. And the other factor that this will have a potential impact on the other stock prices, of course, of the other companies, but also the expectations might be pared down for the other tire makers too. We are expecting a 200 to 350 basis point margin impact for the other players, but now with CEAT numbers, there could be on the upside or on the higher side of this bracket and this range.
Okay, so CEAT has seen some pain there. Just want to get a quick view from you, Parag Thakkar, and this, this is something, and as Alex rightly pointed out, this is something that the management came and told us that I haven't passed down everything that's showing in the numbers. Do you expect a negative reaction to this?
Yeah, it should be negative. The reaction should be negative because the stock price has actually remained quite resilient. In spite of this known threat of rising input costs. That is because, in between this crude oil fell down to 78, 77 zone, and that gave a good relief. But right now what I feel is that this is a temporary situation that crude oil is rising, and still we are at 85 only. But I would say that as soon as this West Asia war conflict settles down and crude oil eases off, this is a stock one can keep on radar. See, on a structural side, I always prefer Pidilite. On a cyclical side, you can buy CEAT or some cement names, which benefits from oil price fall.
So these are the moments where, just to make the point, you said that you would buy.
Suppose stock price falls big time.
Yeah.
Suppose if it tanks to say 3,500, 3,550, then you should start buying.
Because you said when Pidilite falls, when crude oil prices go up, you love to buy. The same case is true for CEAT.
This is slightly higher risk because it's a commodity. But I would like to say that,
the nature of the business inherently is very different from a cash flow perspective, right? But I think also CEAT's 2031 vision and the goals that they reach make it a very attractive long-term play if they manage to do it.
So basically, if it falls big due to this result, because the profit fall is also dramatic. So if it falls say 7, 8, 10%, I would definitely like to buy.
I mean, we haven't spoken about it, but they're operating at 95% capacity utilization, and they've just announced a massive capacity increase. So when that comes on stream, there's going to be a significant improvement.
So if you just knock off this crude oil spike and rupee depreciation both, combined, carbon black price is going up, all these are going completely against them, right?
Expected for any other company in the same space as well is what we have to see.
All the companies
because no one has
the same.
No one would have been really able to pass anything on. Okay, let's go across to Somit Sarkar joining in this morning with all the chatter from the dealing room. Somit, what do you have on your radar today?
The first stock on the list is Kotak Mahindra Bank. Now, there's a buzz of the new MD announcement coming in with the results of the company. Now, dealers indicate that an internal candidate will be elevated to the MD's position. So, keep an eye out for Kotak Mahindra Bank. For Sona BLW, there are buy flows on PMS desk. Dealers are expecting a JV announcement and a positive note that could come in from a foreign broking firm. For delivery, dealers are expecting a block deal very soon, but they have also said that the block size is not expected to be that big. It could be just around 1 crore shares. And when it comes to earnings, SBI Cards and Jaiswal Neco, there are buy flows on the large HNI desk, and dealers are expecting a strong Q1 numbers from both these counters. And multiple other stocks that we did indicate earlier based on earnings. Piramal Finance was part of our segment yesterday, where we did indicate a strong set of numbers, and post-market the numbers have come out to be quite strong for Piramal Finance. For Wipro, there were sell flows because of weak numbers. We indicated about this yesterday, and the numbers of Wipro and the guidance that the company has given, the implied guidance for the second quarter is quite weak. For Tech Mahindra, we did indicate on 15th that the numbers are expected to be strong, and hence there are some buy flows coming in. And yes, the numbers are quite strong, analysts are quite bullish, and most of them have hiked the target price on Tech Mahindra.
Okay, so Tech Mahindra, watch out for this morning. Some other companies that reported, I just wanted your take, Parag Bhai, on Piramal Finance. So Piramal Finance is reported, so is Geo Financial Services, and we'll have a report up on GFS as well. I talked about Piramal this morning. On the face of it, Piramal Finance seems like it's done a good job this quarter.
So Piramal Finance, if you remember, we had done a show, and I think by God's grace, I was thumping the table and saying it at half the price of today's price. But I would say that Mr. Jairam and his team, and they have done a phenomenal job. First of all, cleaning up the legacy book, which was full of real estate loans, and that too very large ticket size loans, that got reduced to minimal amount now, and created a retail book with large part of that into mortgage and LAP and all that. I think they have done a phenomenal job. I feel that stock, say even if you give 1.7 time price to book on FY28, the stock price can touch 2,400. But I would say that after such a big rally, I would not venture out and buy into the stock. It will continue to do well as long as the economy continues to do well. And they are very conservative also in terms of provisioning and all. So I would say that at this price, I am not a buyer, but yes, they have done exceedingly well.
Yeah, they have. By the way, speaking of numbers which have looked really good, Borosil Renewables, what did you make of those numbers? Because it's been under a bit of a cloud, right? But the EBITDA numbers and the margin numbers look very, very solid.
Sorry, Ned, I don't look into this space. You can ask me about finance. So
okay,
361.
361
yeah, 361 for example.
Just a question though. One is, Parag, why the numbers that 361 has put in, but two is beyond the numbers, the kind of flows that it is managing to attract, which are non-institutional in nature. And that is what I think one of the brokerage notes was highlighting as well. What do you make of, one is the numbers, but two is just the surround sound around the business?
Yes, absolutely.
Three is also the relative underperformance
They
of
are
the stock.
doing, So I feel that it's an annuity kind of business. If you knock off what they have earned due to this NSE IPO in last 2-3 years, the remaining part of that is recurring in nature. And it's a very good stickiness with their clients, right, who are happy with them. Plus now they have acquired BNK as a broking entity, right, which gives them further edge in investment banking deals and all that. So I feel that at 43,000 crore market cap with PAT of 1,200 crores, which means a trailing PE of say around 33, for an annuity business like this and for a management like this, I think it is underappreciated by the markets, and so stocks should do well. In 12 to 24 months, it should be significantly higher.
So 360 at 35 times trailing, Nuvama at 32 times trailing, and there are some others roughly at that valuation.
361 I typically track, and that stock looks good.
Okay. While we're speaking about the financial space and the broader space in particular, let's talk about Jio Financial Services. That's in focus today, and the company reported a sharp rise in its first quarter profit, and that was aided by dividend, of course, from Reliance Industries and improving operating performance. Let's head across to Sharad to find out what the numbers are. Sharad, a lot of attention on this stock to find out what the business on the ground looks like. What are you picking up from the numbers?
Well, Alex, now from the investment portion of the businesses, now the unit economics have started coming across the arms for Jio Financial. But the bump in PAT which you are seeing, that's one of the key reasons is the dividend income coming in from their parent. It's like a treasury income to be put. The net profit is at 830 crores if you include that, and the consolidated PBT, which is ex-dividend, that's just risen 18% at 461 crore rupees. And yes, net interest income has doubled. And looking at the unit economics, the operational turnaround is coming in key categories. And if you look at it, the NBFC saw strong organic growth coming in. There's a little bit of product diversification at play, and the margin expansion is also playing out in their payments business. A little bit of value unlocking still left for the Jio Payment Solution business. And if you talk about the two arms, Jio Credit, the profitability was there because of a strong AUM growth and disbursements, and the borrowing cost, however, they saw a slight increase coming in at 7.07%, and Jio Payment Solution, the net processing margins have improved. So yes, interestingly, there is an operational turnaround with some unit economics coming, but the majority of the PAT jump is because of the dividend income.
Okay, just because we spoke about Piramal Finance as well, Parag, how do we look at JFS? A lot of focus on this. There's an upcoming IPO. Reliance Industries will report this evening. How are you looking at that whole space of companies?
So Jio Finance I hold in my portfolios. Why? I'll tell you. The market cap is around 1,55,000 crores. The value of their holding in Reliance itself is around 1,25,000 crores. They hold 7% stake in Reliance. Reliance market cap is around 17,50,000 crores. So around 1,25,000. If you give holdco discount over there of 20%, it is 1,05,000 crores. So for 50,000 crore, you are getting Jio Finance. So whatever they are going to do in future, plus I think FY28 net worth, X of Reliance holding will also be 50,000 crores. So whatever they are going to do in future in terms of NBFC scale up or AMC scale up, everything is available at one-time book. So it is not an expensive stock. It is still building up businesses, and large part of the income is due to dividend income. So I don't think that will be taken too positively by the market, because large part of it is dividend income, the PAT part. But I would say that from valuation perspective, from long-term perspective, there is nothing to lose in this stock.
Okay, and how are you looking at Reliance Industries? What will you be watching out for ahead of the results today?
So basically, see, I'll tell you what I'm expecting is there was no tariff hike, right? So nothing to look forward in Jio's results, Jio Platform's result. Retail, I don't think will fire. The thing is oil to chemical, because that is so volatile.
Yeah.
You can take my word, even companies cannot imagine how much, how much variations happen on a daily.
Especially this quarter.
Yeah, petrol, diesel cracks, and there is export tax by government on them when they export. So I think it is too unpredictable. But in my view, overall the cracks have remained positive. So oil to chemical should do well.
So is there a read through for them through MRPL? I'm sorry.
Yeah, there is a read through. There is a read through, and plus they have that SEZ refinery on which there is no export tax.
Okay.
And plus they have a fully integrated this thing. So I would say O2C can surprise on positive side. Retail if retail surprise on positive side, stock will react very positively, because that is where the surprise lies. But if retail is muted, oil to chemical is anyway expected to do well. So there is not much there. And the oil and gas exploration is also likely to be muted.
Kush, Reliance Industries alongside a couple of the other heavyweights in the benchmark right now, been the reason why the benchmark as a whole is underperformed, right? Because Reliance Industries is through this year as well underperformed. What are the cues that you're getting on the charts for some of these large companies?
So Reliance in particular is still consolidating. There was an attempt at breakout where the stock actually closed firmly above the 20-day moving average, 1325, 1330 levels being hit. But then, last week, once it, gave way, the recovery has been slow, gradual, perhaps, react on the results. But right now, the cues are very neutral to mildly bearish. 1330, 1335, that remains an immediate resistance. So definitely not a buy from a result perspective. Positionally, yes, this has been a long-term support zone. So with supports at 1250, maybe if someone wants to consider a positional long, you can still consider.
Okay, let's go across to Parth now. He's got some other stocks that should be on your radar this morning. Quickly, before the pre-open session starts, Parth, what are you tracking?
Yeah, so I've got 4 stocks in my list. The first one is PhysicsWallah, which has acquired an additional 11% stake in Sarthi IAS for almost 72 crores. And as a result, PW's stake in the company has increased from 40% earlier to 51% now. Now, Sarthi is in the business of providing coaching services for civil services and other exams. So it aligns with the business model of PhysicsWallah. And its sales actually have shot up from just 1 crore in FY24 to almost 76 crores in FY26. The next one is Vedanta Group, where CRISIL has upgraded its long-term ratings in the group companies. For 3 companies basically, Vedanta Aluminium and Vedanta Oil and Gas, the long-term ratings have been upgraded to AA+ stable. The next one is HCL Technologies, which has signed a 7-year AI modernization partnership with Guardian. Under this partnership, HCL Tech will acquire the Guardian India branch for $10.5 million. Around 2,000 employees will join HCL Tech, and a dedicated unit will be set up to serve Guardian exclusively. The last one is PC Jewelers, whose board has approved a QIP of 1,000 crores and an increase in its authorized share capital from 1,310 crores earlier to 1,460 crores. So these are the 4 stocks that you should keep on your radar for today.
Okay. Certainly keep an eye out for these. So many news makers today. Just the number of result reactions today are going to be very, very strong. By the way, very, very large. Some will be good, some will not be. Polycab is also a news maker, by the way, and we'll talk about that too. But it's 9 a.m. So very quickly, before we get in, Kunal Shah from Mirae Asset Share Khan, let's just mark the markets as they open up. Mild tick of green maybe. Let's see if it were to last. The IT names will be in focus. Wipro and Tech Mahindra both post their numbers. I reckon Wipro will be down. Yes, Tech Mahindra could be up. It's an expensive stock, doing well on results. Yes, I don't think either will have a 10% move, by the way. So keep that in mind. But the others, there is 361, there is Borosil Renewables, there is Piramal Finance. All of these could well be in focus this morning. So keep an eye out. We could have exaggerated reactions on a lot of these. So something to keep an eye out for? Anything else you guys are spotting?
CEAT, I'd like to take a look at how CEAT reacts, and you can pull up the rest of there you go, it's down about 9%. I wonder what the other tire makers are doing. So pull up an MRF, an Apollo Tires, a JK Tires as well. Not too much of a reaction here. Apollo, yeah, there's not too much there. It's basically CEAT that's losing ground. And WeWork, I was curious to find out what the reaction would be, because there's a narrowing of a loss on a year-on-year basis. Yeah, okay, it's not doing too much. On your list?
Yeah, so I want to pull up Geo Financial Services, and the first tick was very positive for Geo Financial Services, still staying up there in the first minute. We'll see how this settles. The numbers are looking robust. Some of it is largest from dividend from the parent company, but we'll see how the stock reacts. I want to see other tire stocks. I think we pulled up some, but let's look at Apollo, etc., and what's happening over there. Let's look at HCL Tech and Clean Science as a result of that tie-up announcement, and what the impact is, if any. Clean Science is looking decent. Servotech has some order wins, so we can pull that up and look at what's happening with Servotech. We'll be speaking to the management as well. About 3.5% up. You have Neil Kamal, again another buy from Abacus. So we saw this happening with Mrs. Bector yesterday, where a buy from the same investment house was positive. And let's see if Neil Kamal, NILKAMAL, is also looking interesting. So we can pull that up in a bit as well. There you go, 6% up right now. Kunal Shah, what are you looking at when you see the indices today?
Good morning, Tamanna. Good morning to everyone. See, I think on the indices perspective, I think it's better to stay away. For the last 4 weeks, Nifty has been trading in a broad range. There has been, on the technical front, on the weekly charts, 4 doji candles, so clear-cut indecisiveness. Today we have Reliance coming up with results, and tomorrow there will be 4 banks coming out with results on the same day. So I think it's better to avoid index at the current levels. I don't think there will be any directional move. From an intraday perspective as well, the view will be sell on rise. If you get bounce, utilize that as a selling opportunity for lower targets of 23,900. And for Bank Nifty as well, it has been consolidating in this broad range of 57,000 to 58,500. Once we break above 58,500, then probably a clear-cut upside would continue towards the mark of 60,000 on the upside. So I think it's more of a broader market participation that has happened in the last couple of weeks. So broader market continues to be strong, but indices, I think consolidation will still continue.
What about individual stocks that you're liking this morning?
See, I think 2 stocks on my radar on the buy side only. First is from the chemical space. I think chemical entire sector has been buzzing, and finally SRF has given a strong breakout with volumes in yesterday's trading session. The resistance which was there on the technical front around 28.50, 28.60, that has been taken out with volumes. So again, there has been a change in the trend, and we expect this momentum to continue on the higher end towards 29.50, 29.80 on the upside. So SRF is a buy with a stop loss of 2800 on the downside. Second is from the cash market, and the stock that is there on my radar is Gabriel. I think Gabriel India again has been trading in a strong uptrend. A couple of days back, there had been a consolidation breakout that had happened with volumes, and we expect this momentum to continue on the higher end for Gabriel. So Gabriel is a buy even at the current levels with a stop loss of 1250, looking for targets of 1450 to 1500 on the upside.
All right, in the two-wheeler manufacturing space, manufacturers shock absorbers. Let's talk about another automotive company. It is, in fact, the selection for the big brokerage call of the day. And this is on the back of Kotak Securities, which has turned bullish on the stock, upgrading it. And this is to an add from a sell rating. Let's find out what the target price is and what the rationale is. Let's go across to Sharad to do so. Sharad, morning.
Good morning, Alex. Kotak Securities has upgraded the stock, and it's now add rating from sell rating. And even the target price also, we see a good up move has come in from 6,500 rupees to 7,950. So that's of course a 15-20% upside potential jump coming in. But remember, the growth drivers are in place. That's what Kotak is talking about, and now it's going to go for the next level, a point of inflection, to be honest. A near-term demand momentum might be there, and that will remain robust going ahead. There's a long runway for growth, especially if they're talking about the premiumization and the state-wise convergence coming in, and potential 250cc entry adds a new growth lever for this counter. Now they have increased the EPS estimates also for the next 2 years between the 5 to 7% range, and that is why Kotak Securities is bullish on Eicher Motors.
Got it. Okay. I want to quickly find out from Parag Thakkar what he thinks about Eicher Motors, and let me throw in for good measure Bajaj Auto as well, which is one of his favorites.
You've missed the smile. You've not seen the long shot and missed the smile.
Yeah. So Bajaj Auto is undoubtedly the best buy. Exports of around 2.5 lakh per month and rupee at 96. Imagine the combination. They are going to report results on 21st, which is I think Tuesday.
Yeah.
I think I would look out for great positive surprise. I would not be surprised if they do 35% EBITDA growth YOY. Exports 2,50,000 per month, and Mr. Rakesh Sharma has said on in media that actually they would have clocked 3 lakh per vehicle if the logistic constraints would not have been there. So that part plus EV, I think that is why promoter has not taken 3,000 crore ka check at 12,000 rupees.
Yeah.
Right, and let other investors have got 5,630 crores out of the company.
Sure.
And in the meantime, promoter has increased stake by 0.9%, right? So I would say that 21 times FY28 earnings with electric three-wheeler booming and exports booming. I think Bajaj Auto, there is no other stock like Bajaj Auto in auto OEMs in my view.
Okay, and so with that caveat, what do you think about Eicher Motors?
So it's okay. I think, see, Eicher Motors, the company is fantastic. They are doing well. The volumes are good. Demand is good. The only thing is that EV shift, how it affects them, that is.
But उनका तो मोट है ना पराग भाई. Ultimately,
so somebody ultimately come out with EV model, right?
हाँ, but किसी को अगर बुलेट खरीदना है तो फिर they won't.
But that thesis was right when it was 3,000 also, na? So that is the same thesis which is continuing. I am not saying it's a great company doing well on all fronts, but this export part of Bajaj Auto or TVS and this EV booming are not there in Eicher Motors. Although the volumes are good, demand is good, products are superb.
Indeed. What about the charts for both these counters, Kush?
Actually, surprisingly, the setup on both of these is very identical. Even if you look at the medium-term perspective, both of them have a very strong rising trendline support. And if you come closer to date, for the last couple of weeks, both of them have been consolidating with a mild positive bias after seeing a downtick about 2 months ago, right? So, like I said, the structure on both of them is very positive. Parag Bhai's weightage on Bajaj Auto comes in, so perhaps that makes the priority. But like I said, technically both of them fairly positive. Eicher also has a strong support near the 6,900, 7,100 mark. So if you have a position, no issue, continue to hold Eicher Motors as well.
Kunal, what do you make of Polycab?
Yeah, I think Polycab already has been seeing a weak trend and there has been low top, low bottom formations. The stock has been trading below the short-term moving averages, so I'm expecting further downside for the stock in the near term. The next support on the downside is placed at 8,900. So probably we can see a more 100 point kind of a fall from the current levels.
Okay, quite a few, I would say, mid to positive notes on Polycab after the results. But I want to look at Neil Kamal in a bit more detail. And I'm going to ask Parag Thakkar for his fundamental view. But Kunal, on the charts, have you seen Neil Kamal?
So again, for Neil Kamal, I think even if I look at the long-term charts as well, it has been consolidating. On the monthly, it has been trading below the 20-day moving average as well. So that is placed at around the mark of 1470. So once that is taken out on the upside, probably the momentum will start building up or the change in trend will start coming up. And then probably you will see the stock heading towards 1600 on the upside. So currently it's in a sideways consolidation phase. A breakout above 1420 will lead the momentum on the upside.
You know, there is often this trend, and we saw it with Mrs. Bector yesterday as well, and I suppose investors look at this, that if you have a well-known investor like Abacus and Mr. Sunil Singhania coming in buying something, to lagta kuch to dekha hoga, they've done their homework, then you kind of ride those coattails, right, that he's done all the work. One should first of all look at what works for you and not necessarily jump on everyone else's great idea. But having said that, have you looked at Neil Kamal?
Yeah. So basically, my roots are in plastic industry. Neil Kamal is a plastic business, so I have looked at it very closely. So market cap is around.
The curious tales of Parag Thakkar. We discover new things. No, but please continue.
So market cap is around 2,100 crores and they make around 120 crore PAT. So trailing pay, it is around 15-16 PE. cash profit is very good, depreciation number is, so both these stocks, Messrs. Bectors and Nilkamal, one common thing is very high depreciation, which means what Mr. Sunil Singhania must have thought about is that the capex part is over and now the operating leverage will kick in. I'm just trying to guess. I have not spoken to him, of course, but because in Messrs. Bectors also depreciation was very high, and that was one of the reason why the PAT number remained at 143 crores for last 3 years. So company was investing. There were some export benefits which were taken off, and so that was, so last year was also muted. In this case, also there is a huge capex, there is a huge depreciation number. So in fact, depreciation number is more than the PAT number. So if you look at it on cash profit basis, it is 10% cash flow yield company, and basically into plastic molded furnitures and crates and all those rakes which you see in this warehouses of Amazons and all those things. So, and a decent promoter, and because I know them from plastic.
और हर garden party में आपको दिखेगा नीलकमल का चेहरा.
So I think an undervalued stock, I would say. Undervalued stock.
Your humor has hit new highs, I must say. If there was a chart, I think it will be trading at all-time highs right now.
Which garden party Alex is recovering from?
No, but that's true.
No, but
Red or white color ke chairs.
No, and can I tell you, for high rain weather like Bombay, in terms of sturdiness, plastic chairs.
It has always been there. By the way, Kunal, I just want to get your view on stocks which were actually trending for the last few days. We've asked Kush enough about MRPL and Chennai Petro. I'd love to get your view. Big moves yesterday, big candles. Can they do more? Particularly Chennai Petro. Can it do more?
I think, definitely Chennai Petro is on our radar as well. So we have been initiating buy on this. And I think here we can see this move extending towards the mark of 1360, 1380 on the upside. So overall, there has been a rising trend line. And whenever it has been touched, we have seen some good buying interest from the lower levels. Again, even from the current levels, there is decent upside which is left. So my targets would be 1360, 1380 on the upside.
Okay, by the way, it looks like broadly the tech pack is going to start off with gains. Infi, Tech Mahindra, TCS, HCL Tech, all at this moment after the pre-open session are trading. Except Wipro. I think you have to add that as a caveat every time you talk about the frontline IT companies. Unfortunately.
It depends. But this time on their results.
On the results.
Clearly.
But I was going to ask Kush on the charts very quickly on this pack as a whole. Would you trade it on the upside?
Actually, you could just very well skip Wipro like we've been doing for the longest time, right? I mean, we just skip Wipro, TCS, Infosys, HCL Tech, and then we directly go to the Coforge and Persistence of the world. Same thing applies right now. I think emphasis and Coforge in particular crossing 200-day moving average. Volume's fairly okay, but this is a better structure, so I would focus on the emphasis and Coforges of the world.
Okay, emphasis Coforge. Last call, Kunal, before we go into the opening session. One top call.
I think one stock which is there on my radar where I can see some decent upside that is being played out over here. The stock on my radar is Adani Ports. So we have recommended this on buy to our clients as well. And we expect this momentum to continue on the upside. 1826 is where it is currently trading. One can see an upside of at least 1890 to 1900 on the upside.
Okay, and Kush, what about you?
I'll go with one of the picks we discussed earlier, Deepak Nitrite, opening with a decent 0.5% gain, 0.75% gain. So 1800, 1855 targets, 1690 stop loss. Maybe, if you get at these prices, bump up the stop loss a bit. But yeah, 1800, 1855 targets.
And keep an eye out. I think stocks like Deepak Nitrite have a tailwind of a very strong quarter after a fairly strong quarter in quarter 4. So I think if they do this 2 quarters in a row and a few capacities coming on stream fructify, there might well be a fundamental reason why Deepak Nitrite has done what it has done. It has marched from 1600 to 1754 in a short while. Let's see if there is more in store for this one. By the way, CET is down 5%. We'll ask post-open if Parag believes this fall is large enough for him to start buying into CET or no. But here comes the first trades. This Friday morning, 2 days before Messi will beat Spain. That was for Kush Bora. Nifty 50, 42 points higher or 32 points higher in the green. Advanced decline looking okay, 966 to 701. Nifty mid caps flat. Banking flat. Actually, it's a fairly flattish market. I wonder if IT is actually doing okay, and which is why the Sensex of the Nifty. Yes, it is. This is pulling the markets higher, despite the fact that banks are absolutely flat. Mid caps and small caps are okay. Let's get the heat map up on the screen. I want to see what Tech Mahindra is doing. and whether Wipro is not shaving off too much or not. So Wipro is not shaved off too much, 1% lower. Look at that. Infosys is up 3% incidentally. TCS continues to march on. Last Friday, it was a table thumping buy pre-market hours by our very own Parag Thakkar. Due credit to him. I think he doesn't give a trade call, but due credit to him. I think the stock has done very well, and you heard the management commentary there. I think there's a reason for why this is doing what it is doing. But Tech M2 up 4%. Geo Financial, good numbers, 4% higher. HCL Tech, of course, higher. Eicher Motors in the green. ICICI Bank, Bajaj Auto ahead of the numbers is in the green as well. Reliance is not doing too badly. So even Stevens, advanced decline. IT shining, Geo Financial right up there in terms of the winners, and Wipro not really getting hammered, which is and therefore a good start. In fact, we picked up some steam now, 0.4% courtesy what IT is doing, Tamanna.
Yeah, and compared to the rest of Asia, Indian markets actually an outlier, thanks to result performance more than anything else. Because if you look at the rest of Asia, that semiconductor win is now looking like a bit of a drag. Let's pull up what's happening in the broader indices this morning, the small cap and the mid cap. Mid cap actually a little muted. This is more of a nifty gain today, 0.5% down on the small cap. Declines more than advances coming in. So it's the heavyweights which are pulling up. Should we pull up the nifty contributors just for a second to see what's working there? Is it all IT? It is IT and a smattering. Infosys, ICICI Bank, Reliance and TCS. These are the four which are actually doing most of the heavy lifting. Infosys leading the pack, then of course some others as well. On the lower side, it's Eternal, Hindalco, ITC and Wipro coming in, but none of the heavyweights are actually flailing today, which is why the Nifty is up in the green. So when you look at that headline, it's a bit of an illusion. The overall market is not that positive today. Let's pull up the sectoral heat map. It's going to give you a clearer picture of what's going on. Do we have more red than green? Yes, we do. I'm going to start with the reds. Pharma companies seeing a bit of a knock, but it's muted. You know, it's not a massive sell down. The Nifty Pharma is just less than 1% down. Healthcare, etc. also coming in. A smattering of small cap stocks is what is pulling down the broader advanced decline ratio. Nifty IT is the outlier, standing out once again, 2% up right now. I think we have to see over time whether there's a correlation being formed between what AI stocks are doing globally, and is it an inverse correlation with what the Nifty IT is doing. Auto stocks are doing okay as well. Let's get to individual stocks. That's really where the story is today, and I'm just going to put out all of those major results together for you, and let's see how they're doing. Wipro was a disappointment. We all talked about it, about 2% down right now. Tech Mahindra, good set of numbers. Some brokerages are concerned about valuations. The street is not. About 3.5% up. Borosil Renewable was okay. Piramal Finance and Geo Financial. Let's pull up both of those. Piramal Finance actually 2% down despite a stellar set of numbers. 6% up on Geo Financial. The numbers bumped up by dividends. The street is liking what they're seeing. WeWork, not a great set of numbers. Losses narrowed, but negative impact on the stock today. I want to look at 361 WAM, CEAT, and let's look at Alok Industries as well. 361, decent set, 2% up. CEAT, they have said they're not passing on rates. It's optically not looking great. 7% down on that stock, as is Alok Industries, but not to that extent, 0.64% down. I want to see if there's a read-through from CEAT on some of the other tire players, and yes, you're seeing it across the board. JK Tire is about 3.5% down there as well. Neil Kamal is another, Abacus is going shopping. We're looking at what's happening to that shopping list. Yesterday was Mrs. Bector, today is Neil Kamal, about 6% up on that stock, and some order wins coming in from HCL Tech, Clean Science, all of this reported after markets yesterday, and you're seeing a positive impact there. But overall, I would say more negatives than positives this morning.
It is indeed, and for the broader markets in particular, that breadth is pretty negative. For the benchmark, of course, it's bucking the trend. So opposite ends of the spectrum this time around, where generally you've seen resilience in the broader markets, today that is not the case. The small cap index at the low point of the day with cuts of about 0.75%, and the mid cap index losing about 0.4% at this point. Some of the stocks in the broader markets that have not yet been mentioned that are doing reasonably well, you have Suven Pharmaceuticals, that's up about 3.7% or so. You have Federal Bank that is up and about, it's up about 2% or thereabouts. Clean Sciences is up about 2% or so. Kalyan Jewellers is also gaining ground. But that's the long and short of it in terms of the large gainers in trade. Among the losers, you have HFCL that's losing ground. You have Torrent Pharma that's down about 3.4% or thereabouts. ICICI Lombard lost about 10.5% in trade yesterday, and it continues to slide in trade today. You have Pfizer that is down about 2.5%, and Polycab, which we went into some detail on, which is also losing about 2.5% or thereabouts. For the tire pack though, Kunal, let me come to you first. You have a Seat that is now trading at the low point of the day, 7 plus, close to 8% lower. JK Tyre catching up with that, and Apollo Tyres also looking a tad bit weak. What would you do with this pack?
I think if somebody is holding from the lower levels, I think definitely continue to book some profit at the current levels. Fresh entry at the current levels is not recommended. JK Tyre is something which I'll keep on my radar. If it breaks above 420 on the upside, then probably one can go long on JK Tyre.
Okay, so let me ask you, Parag bhai, whether an 8% drop on Seat,
staggered manner.
It's a good opportunity, isn't it?
Opportunity, staggered manner. So as and when this oil settles down a bit, you will get a good bump up.
So it's not a table thumping buy.
No, it's not a table thumping buy.
So and okay, let me ask you this as well. If you're looking at the tire pack as a whole, and there are so many to choose from, let me throw in a Balkrishna Industries as well, which is a large export play, as people who track the space know, and they are in the off-road tire space. So their margins have relatively been higher, right, in the past.
Correct.
Would you say that is a better pick, or Seat is a better pick, or something else?
See, if you want to play a downtick in oil price after of course, right now we're in the middle of war, but we know that after 1 month, hopefully before, as soon as possible, we end this. As soon as you get that downtick in all the tire stocks will go up, and there Seat, especially after this fall of today, will become more sensitive, and so it will rise faster. But Balkrishna, structurally, yes, it's a great company and differentiated products, and majority exports into Europe and US. So benefit from rupee depreciation also. So and that stock is also corrected. So that also looks like a good stock. Yeah.
Ganesh Chaturthi, things will turn around. It always does. It always does.
Achha.
Yeah. We'll see this.
What happened to Kush? Kush is making some. You are actually stunning him constantly today.
You know why?
पहले बोल दिया कि Messi will beat Spain. ये ऐसे इशारा करने लगा यहाँ पे. And now, right now, you said Ganesh Chaturthi, it'll turn.
I will tell you why I was surprised when Neeraj said Ganesh Chaturthi.
Which?
So, I've always said that the second half of the year is my favorite half. सारे festivals तभी आते हैं, Ganesh Chaturthi, Navratri, Diwali, Christmas, everything, right? It's a happy feeling, especially I'm sure you guys have noticed in Bombay, alongside the road, now you get these sheds, और उसके अंदर गणेश जी की मूर्तिज and all बनना चालू होती हैं. Such a happy feeling. And the moment I saw that, I remember Neeraj's comment from last year where he said कि गणेश चतुर्थी के आसपास, I'm sure it's more observational than analytical. Yeah, कि गणेश चतुर्थी के आसपास turn होता है. I had remembered that I'll come back and say this on air also, and perhaps to Neeraj as well, but he beat me to it.
Not bad. Okay.
So yeah, maybe who knows? It might just play out.
But yeah, interesting. So good thoughts on Seat as well. That staggered it out, viewers. Just credit to the management. They spoke to us mid-quarter and they guided to this, that Q1 numbers and very likely some bit of Q2 also will not be strong. So in some sense, the management had communicated this to the street well in time. Okay, what else? And I wonder, we spoke about Polycab briefly, but I wonder, Parag Thakkar, is that again a quality name in which dips can be used to accumulate? 8914, it's not exactly cheap.
Yeah, it's not exactly cheap, and the volume growth was not that much because copper prices went up so much that revenue growth looked very good in the cable and wire and cable business. Of course, there is a huge potential due to data center and all those things, but I think the stock is pricing in that positive. What they have done well is FMEG segment,
electronic goods,
fast-moving electric. There they have delivered really good numbers. But I would say that stock is also gone up too much. But the execution of management is again here phenomenal.
Parag bhai, ये नहीं चलता है कि ये भी और ये भी. आपसे viewers
I'm not a buyer.
You are not a buyer because of the valuation.
Because of the valuation.
Okay, perfect. This is great. Okay, Kunal, Kush, Parag bhai, gentlemen, all three of you, thank you so much for taking the time out and being with us today. Have a great Friday, and I'll get the kerchiefs on Monday morning for Kush Bora.
Go Spain.
No. May the best team win, really. I mean, while I'm a Messi fan, let the best team win. It's too much at stakes. The World Cup final. Okay, but quite a bit of at stake for Wipro as well. And thankfully, the stock hasn't really reacted too much simply because Wipro is also not an expensive stock. But you could argue that it's a top loser in the IT trade because the Q1 numbers miss estimates. Now, let's try and understand from the management about a few other things. We've spoken to them earlier about the setup as it stood and the key performance of the margins. But I want to take a follow-up question to Aparna. And Aparna, my direct question is this. I understand you will try to optimize, but do margins stay stable? Do they inch higher, or do they have a potential of galloping ahead? Because a lot of peers are saying they will gallop ahead for them.
Our endeavor would be to keep improving it, through the quarters. But like I said, it'll be a function of the investments we need to make. These could come also in the way of deals that we are contesting, we are looking at winning. So, it's going to be a function of growth as well.
Okay. Saurabh, can I get you in on manpower requirements? How are you hiring talent right now? And considering that talent has to be less expensive, but if it's AI-enabled talent, it will be more expensive. How do you juxtapose all of these factors and do optimum hiring?
So all the forces are in play. We'll have to make sure that we take care of our existing employees. We'll have to invest. Aparna and Srini spoke about it in future talent. Some of the AI skills are rare, so they are coming at a premium. So all forces are play. We'll have to invest, grow, and make sure we maintain our margins. I think that's the way we look at it. Our overall headcount and hiring will be linked more to the demand environment, which is right now a bit muted. But I don't see a headcount going up drastically. I see that the gains of productivity, which we were talking about, will have a play as we move forward.
Noted. Okay. Srini, the Q2 guidance is muted. What needs to happen for acceleration in H2? Beyond the Olam and the acquisition tailwinds, what are the biggest organic growth drivers that you have which could facilitate growth in FY10, considering you said that the demand uncertainty is already baked into the current guidance?
Absolutely, Neeraj. We have baked in all those aspects when we give the guidance because we just give a quarterly guidance. Having said that, going back to your question, and if I were to look at the three markets in Americas, I think, we talked about BFSI. We're seeing a good momentum there. Consumer, we have won some deals, and that's another one. Healthcare is somewhere due to the government regulations, especially in the payer and provider segment. We are working with the client to client in terms of the changes that they are going through from their side, which will take a little bit of a time. And if I look at Europe, clearly, the momentum is building up in energy manufacturing resources, which was traditionally very soft sector for us, and we have seen some good deal wins there, and that should reflect in that. BFSI continues to be strong in Europe, and specifically in few countries that like UK and Nordics region. And if you look at APMEA, it's a more secular because it's a much broader market. But having said that, in addition to the Olam deal that this market has won, they're also looking at country to country opportunities around AIDC, opportunities around sovereign AI, and so on and so forth, which is becoming more important for some of these clients in some of these countries as well, Neeraj. So overall, the deal pipeline is healthy, more skewed towards cost takeouts, including vendor consolidation. But there are a lot of deals on the AI side as well, which will be consulting-led and which will be more advisory and leading to data and cyber security and other aspects as well, which continues to create the momentum. Right now, they are much smaller deals, but as the client shifts to at an enterprise level, there will continue to be larger deals as well.
Okay. Srini, you emphasized a consulting-led AI-enabled approach. How much of that FY27 growth in pipeline is coming from AI, Gen AI deals versus traditional services? And, any update on this embedded AI engagements as well? Also, maybe just a comment on the token cost versus human cost, and how are you baking that in client conversations?
Sure. So the way I see it, Neeraj, in terms of AI, Our approach is AI first. We are pivoted to AI. So you have three types of conversations with our client. One is, I call it as run and operate, right? There, it's a traditional application management, infrastructure management, business process management. Here, every solution that we do is AI first approach. And for that, we have built a platform which is Wings, which gives us agents and agentification of the client's end-to-end process. So to me, you lead in with AI and you give in the productivity benefits for the client. And we bake that into our solution and our cost. The second part, Neeraj, is around software development lifecycle, especially the build AI, which we call it as that, which is also product engineering lifecycle and package implementation. There, I think the disruption is much higher because the productivity benefits that one can get in a software development lifecycle, specifically if it is a greenfield or a program like Python, you get a huge benefits in terms of productivity, right? Having said that, if the code is lot more complex, a lot of modernization that's required, how you deploy and take it to production, the complexity increases. There, the productivity is much lower. So that's how I see, because that's more of a brownfield. There are a lot of legacy applications. You got to be careful in terms of how you deploy. Now, both in both the scenarios, Neeraj, it's going to be human plus AI because human intervention will become very important. I'll tell you, if you look at software development life cycle, I'll break it into three pieces. The one is testing and coding, which is in the center. A lot of productivity benefits you can get from AI. But if the target environment is legacy and if deployment and production has to be there, a lot of human intervention one needs to do. Also, business requirement gathering, user stories becomes very critical because only then you know what is the right tool to deploy. So the productivity and the way we come into picture for our clients is around telling them what's the right tool to use in that aspect. The last part you asked is on tokenization. So what is happening, Neeraj, is that you don't need to deploy a high-end LLM for a simple workflow because the cost is going to be prohibitively high, but the return on investment for that workflow will be much higher. Second, when you have to get the real return on investment from AI, you got to really reimagine your process, redesign your process. Only then you get the benefit. But if you do a piecemeal approach, you have the AI cost, you get the benefits in that piece, but net you may not get the overall productivity. However, the token cost is sticking, right? So when do you use a large LLM and when do you use an open source kind of an LLM? When do you think it better to continue with the human? The balance between the human capital and the token capital will become very intense as we move forward. And that's where companies like us, we have the depth of expertise, we have deep tech knowledge, but we also have the business context, the client context. We are able to stitch that and articulate that to the client in terms of what it should be as part of our advisory and consulting, Neeraj.
Okay, Aparna, my final question really, and that is around the optimum use of cash. A lot of your peers are doing inorganic moves. Would you do that, large inorganic moves or buybacks or payouts? How would you do it?
We have a very clearly carved out strategy around M&A. We've been very, very consistent in our approach. We have never shied away from taking bets on acquisitions that are central and fundamental to our strategy. And it will remain a very, very important aspect of how we look at growth and accelerating growth in Wipro. So we will be very, very open to doing M&A. B, if you look at it, we've raised our capital allocation to 70% of our net income over a batch of 3 years. And as of the last financial year, I think our payout ratios was in the ratio of about 87%. What we've done is we've returned the excess cash that we have through a buyback. Now, buyback again will remain a lever wherein we will use it only to return excess cash after having enough for M&A and for everything else that we will need to invest even organically on AI. So that remains a strategy. The best use of cash for us is to actually invest in our business organically. But as you know, as an industry, we do our operating cash flows as a percentage of net income is 98%. So we are fortunate to have that kind of cash conversion. We have enough. We've got good net cash of $2.4 billion even after completing our buyback. That leaves us with a good war chest to pursue an M&A strategy or make investments through our ventures and or make investments organically.
Okay. All three of you, thank you so much for joining in today and giving us your thoughts. That's Wipro. You heard them first on NDTV Profit at 8:30. We've got you the second part of that conversation just right now, simply because that stock was amongst the top losers. And, well, it's actually gained a little bit as the management did this conversation. I'm not saying it's only because of that, but maybe the street also says that, hey, there is enough punishment meted out to IT, which brings me to the point. What are some of the other IT names doing? Because as Wipro is perking up while this interview was on, some of the others, Tech Mahindra 2.47%, Infosys, HCL Tech, TCS also, well, has lost a little bit of ground, but still in the green. So top tier IT is doing very well. Another IT major, right? Tech Mahindra is definitely reacting, as I said, to the strong first quarter numbers. Puneet joins us with this earnings fine print for TechM. Puneet, take it away.
Well, thank you for that. Well, 4 key takeaways, right? I think the margin story is now starting to, be very visible for the company. A 15% target that they had set in FY27. This was set way back a couple of years ago, but at 14.4% for this quarter, things are starting to shape up in terms of the reality. That's point number one. It's also the 11th consecutive quarter where they have shown margin growth improvement. The second one being constant currency. It's coming at 2.6% on compared to the previous quarter. This is also a higher number compared to what it has reported over the last 12 quarters. And point number three being that manufacturing as a segment, apart from communication, which is its biggest segment, has started to slow down communications, but manufacturing is now starting to show good growth on a lower base of a growth of 9%. It will be important to see the communication vertical come back, because you have seen that impact for HCL Tech numbers in terms of communication and telecom over the last couple of quarters. The final key point on deal wins as well has been a strong $1 billion deal wins in this particular quarter, similar to last one, and that's visible in both the EBIT numbers as well as net profit in terms of growth that they have reported as well. Ramp up of large deals continues to remain on track, and that's some of the key commentary coming through. But let's also listen in to the CFO, Rohit Gupta, who spoke about the shape up of a good start for FY27 and what lies ahead.
Thank you for that, Puneet.
Quarter performance reflecting the momentum we are carrying into this financial year. We delivered the strongest revenue growth since the start of the transformation journey, while continuing to expand margins for 11th consecutive quarter. We also maintained strong deal momentum, as Mohit mentioned, securing another quarter of over $1 billion deal wins. In Q1, we reported revenues of $1,660 million, representing a growth of 2.2% and 6.1% on a reported basis, YOY.
Sandeep Agarwal joining in. He's fund manager and co-founder of Sovilo Investment Manager. Sandeep, great to have you back on the channel. We're tracking IT very closely this quarter because this is a sector and a group of companies that has caused so much division and confusion in opinion on what's going on. You have Wipro, which has reported yesterday, and clearly the street not too excited with the numbers. You have Tech Mahindra on the other side of the spectrum. How have you looked at both of these?
No, so good morning and thanks for having me on the show. So I think, confusion is in the minds of investors and analysts. There is no confusion, I think, in the minds of the companies. They are very clear. I was listening to the previous guest from Wipro, and he was so nicely explaining all the three layers, how they are working right now. And I think exceptionally explained. I believe that, we are too much worried about the short term. As I mentioned earlier also, and I reiterate that, I think the enterprise AI will start now at some point of time. And when that starts, then all the fear of X growth, this industry's X growth or no growth, all that will, I think, go away slowly. You will see good growth coming in. The reason is very simple that, the hardware players have benefited. Foundational players are building and selling. They are also commercializing, and they will definitely at some point of time need two things. One, to service those, and second, enterprise AI also they will come into. So whenever that starts happening, then obviously you will need IT services players to go and implement it and service it. So I am very positive from that perspective. I think the large part of the pain is behind. The sector index itself has fallen by 40-50%. So the valuation comfort is also there. I don't see any reason to be, worried at this level except ER&D, because in ER&D I still think there is a lot of froth in valuation, and also the disruption in ER&D will always be more than IT services. So that is what is my understanding, and I think all the companies in this quarter have reported decent number. Remember that this is probably inflection quarter, or maybe the next one, where all the deflation of AI will be built in. So we should see numbers from that perspective as well, and not only go by what they're reporting.
Very interesting, Sandeep. If I remember correctly, you've said in the past that it's a good time to buy the index, right? I'm just wondering what the view is now that you've had a chance to look at all of these numbers, at least from the frontline companies, whether you've crystallized your view and you think that there could be winners even from this pack, and some that might do better than others. And I know what you're saying on artificial intelligence or enterprise AI coming through, but is there a possibility that there could be a little bit of chunkiness in the earnings, and therefore the predictability that you've gotten so used to in the IT space might go away?
No, so I will speak the contra. I would say that chunkiness is behind.
Okay.
I feel that from here there will be positive surprises. You won't see any negative surprise from here on. The reason is simple. The amount of deals which have come. See, I was very skeptical that this will be the quarter where there will be 20-30% decline in deal wins, but that has not happened. They have all done either in line or better, which means that despite the deflation, they have been able to win so many deals. I'm very positive. I think from here on you will see big surprises coming in the sector. Again, I would reiterate that my all optimism doesn't say that I'm not saying that they will grow double digit and all that. This sector is a matured sector, but 6-7% dollar growth for large names and a better growth rate for mid and small cap, and on top of that much better margins is what my call is. And if that happens, I think cumulatively 45-70% EPS growth in next 3 years should happen. And even if the multiples don't re-rate, you will make that kind of return from here on in the sector. So I am still very bullish on the sector. I think the pain has been behind, time has elapsed, disruption has settled. This is the time to be in, and so you will make decent money. I will not say, I can't compare it with some of the small companies in other sector and all that, but it is a stable, good sector with good corporate governance, good margins. So I think for funds, it makes a lot of sense.
Fine. Okay. But Sandeep, if I were to push you to try and distinguish between the companies based on the share of revenue that they have, and in traditional metrics, you would look at BFSI, you would look at healthcare orientation, and you would try to gauge based on what the US-based BFSI companies are reporting, whether there would be a greater benefit to certain companies or others. Would you look at it from that lens? How would you try to separate the wheat from the chaff?
So, we have left those lanes in 2020. After 2020, when COVID came in, after that, all these traditional methods of tracking the sector has gone away. And whoever has tried to gauge anything from that, they have become very negative in March 21 when it was bottom. So the problem is that in technology disruption, what happens, not only the technology does disrupt but also the method of tracking the sector has to be disruptive. I think the methods have changed. I don't think that segments make a lot of sense now. Neither do the markets. What more important is today is the technology stack. So we are tracking the companies based on the tech stack, and based on tech stack right now, the limited number of results which have come, broadly everyone is a neck to neck competition with each one. So there is very tough to call or single out one versus the other. I think they have done phenomenal job. The number to track will be the workforce which is trained in AI and what is the revenue of AI in next 2 to 3 quarters. If you get that number close to 35-40%, I think we are home. You will have very, very good growth going forward. If that takes more than 4-5 quarters, then obviously the growth will be slower for some more time. So we have to see. I think the progress till now is very good.
I know you won't give specific stocks, but Sandeep, if I were to ask you how you are looking at the companies that have reported so far from the IT pack, how are they stacking up?
No, they are good. So I will say the results are quite decent for everyone, and first time in a long while, I see, and this is the reason I'm so confident that stability has returned. If you see till last quarter numbers, two were good, two were bad, two were okay. This quarter, I haven't seen a bad number, to be honest. So I that gives me more confidence that we are in a stable environment, getting into stability
When you're
phase.
saying I haven't seen a bad number, even Wipro, you're including Wipro in that.
So I will not call out again name, but I would say broadly numbers are decent to good. So I think that stability has come into the sector, and incrementally in IT sector, what happens when in one quarter you see stability, then from there things improve always. So last 25 years data, if you see, it has never happened the other way, that once the number has improved, then suddenly next quarter they have fallen. It doesn't happen in this sector because you are building month on month, month on month, month on month. So it is not possible that you will come out with a big negative surprise next quarter. See, the problem is that we are so priced to perfection that 1% Q on Q growth, if it becomes 0.5%, the stock goes down 10%, all that. So don't hold me for that. But I think structurally, you will not see big disappointment from here. There are big surprises, positive surprises, which are more probable than disappointment from here.
Credit where it's due though. Sandeep, I think a month or 2 months ago, or maybe 3 months ago, I don't remember the timeline, but he mentioned that he will buy into IT services, and he will avoid ER&D stocks. And I think we've seen the fate of the ER&D stocks, at least, even if IT's kind of been steady to marginally higher.
And
so
6 months ago, Sandeep moved from saying that IT is negative to 4 to 6 months ago. IT is negative to now I'm constructive on IT.
So he's got it very, very right. Spot on.
Yeah. All right, Servotech in focus as the company has bagged an order win from the UP Rural Livelihood Mission. Before we speak to Prem Prakash, the Chief Operating Officer of the company, to understand their action plan ahead, Varsha is joining in to set up that conversation.
This is a hybrid rooftop order that they have received, and this is the another government-backed solar order that the company has got, and the total capacity, if you see, now stands at around 900 kilowatt for this project. A company will install system across 12 locations, each with 75 kilowatt capacity. Now, project also includes battery energy storage system. But the story for this company is, of course, there are some key triggers. One is the solar plus EV charging strategy that they have. Retail business is actually becoming big, and they are expecting almost 50% contribution from retail business in FY27. Also, they are expecting battery energy storage system demand to grow, as solar adoption rises, and they are also betting on this high power EV charges, which is also gonna add growth for the company. And lastly, if you see, FY27 will be a focus on utilization because largely capex has been done by the company.
Got it. Okay. All right. Thank you, Varsha, for that. Prem Prakash, who is the Chief Operating Officer of Servotech Renewable Power System, joining us this morning. Prem, thanks so much for taking the time, and pleasure having you on the show. I'm curious about this latest order, and a lot of people have spoken about the opportunity and the prospects of the solar rooftop program. This 900 kV that will be executed over the course of 6 months. What is the value?
Okay, so thank you for having me here. The project is of great significance for a company like Servotech, as we are now providing an integrated platform from power generation to power consumption. The value is something which has not been disclosed so far, but what we have disclosed is that we are taking care of from design to engineering to installation, commissioning, and also taking care of the project for maintenance. So, value is something which as a practice, we don't disclose unless it is required under the specific applicable regulations. But then it is of great significance, and this is first of its kind that we are doing a solar project with BESS attached to it, which is going to help the organization, help the state with its mission in a longer run.
Yeah, so Prem, that sounds incredible, and kudos to you for getting that project. It means that you will likely have the opportunity to take up more projects like this in the future. But I'm still trying to understand and gauge what the financials of this project will be. What is the value of the project, and how will you book that revenue?
So, value is something, as I said, for us as a practice, we do not actually disclose the value. What we have disclosed so far is that we have got the project worth 900 kilowatt with 12 locations, and each location would have approximately 75 kilowatt of allocated capacity. The total allocated capacity would be 900 kilowatt. We would disclose the value as it comes. I mean, at present, we will keep our the total understanding of the project in public domain, and this is what it is.
So then let me ask you something from a different perspective then. You had sales of 210 crore rupees in the quarter gone by, from what I can see. And this is a 66% improvement on a year-on-year basis. 202 crore is what it stood at in the third quarter, that is in the December quarter. So it's a steady growth that you've seen and tremendous growth that you've seen from the first half of FY26. Based on the acquisition of this project, is that growth that you have showcased from 102 odd crore in September quarter to 200 plus crore in December quarter going to be possible from this base in the March quarter?
Again, I'll not be very specific with, I mean, our financials are getting disclosed on 21st of this month. So you would get to hear about the results on financials. But to come back to your question, see, we, for us, doing solar project with hybrid grid tied kind of technology, we have been continuously adding value to the green mission from various state governments. I mean, if you talk about railways, which is the one of the highest consumer of solarizing their properties and assets, we have been doing Walters, we have been doing Rangias in the past, we have been doing Jaipur Railways. So today it's not okay for me to comment on how the financials would look like. But then, of course, this is a significant project which we have bagged, and we have been experiencing, the growth because of the kind of projects which we have done in the past. And there is no reason why they should not add value to our financials. But for me to comment on financials is something which I don't find okay today.
No, that's perfectly fine, Mr. Prakash. I understand that you're in your silent period. You know what's exciting about this space and this conversation is it also gives us an opportunity to understand to what extent there is widespread retail adoption as well of the solar rooftop space. Can you give us a sense there? What is the kind of retail adoption that you're seeing? What are the numbers there? Because this is a space which has huge government push. Is it actually now fructifying on ground? Is there anything that you can share on that end?
Of course. To start with, when we started doing our solar projects, we were completely focused on B2G, doing government projects, as I said, at the cost of repetition. I mean, we have been doing railways, we have been doing UP NEDA. We work with the UP government very closely in terms of solarizing, various. We do it in bits and pieces. And when it comes to retail market, I mean, we have been continuously growing in retail market as well. We started off with a very small number. Today, we deal with approximately 400 distributors in our kitty, and those distributors are, few of the distributors are exclusive distributors of our solar solar products. So we have started focusing on the solarizing the rooftops both through government tenders, state government tenders, and also through retail channels, and it's growing significantly for us. I mean, if you look at our past financial results, you will find that we have been, the major portion of our growth has been attributed to the kind of retail expansion which we are doing. And it has added a lot of value.
Just trying to understand, and again, I'm not asking for numbers which you can't give. Are you doubling down on that space? Do you expect the distributor number, which you're saying is 400? Is that dealer and distributor? Do you expect that to grow? Is this a space that you're doubling down on? Is that kind of demand being seen? Or is it more a government push?
Okay, so if you're asking me whether we are growing in that segment, yes, we are growing, and there is an exponential growth. If you want me to, comment on double or triple, I'm sorry, I'll not be able to.
Because doubling down, not whether it's double or triple. Doubling down in the sense, are you emphasizing on that space?
Yes. I mean, we are focusing on that. Past 1.5 years has been a great, financial year for us. The way we are growing on, doing the retail business on solar solutions is significant. we are considered by various media houses, various research and all, that we are one of the leading solar solution providing companies. And yes, we are actually banking on this particular segment.
And now, what about the high power EV chargers? Because that's another space that you're looking at, battery energy storage space. What is the latest over there? How many new orders are coming in there?
See, I mean, there are two things. One is from just being a product manufacturing company, Servotech has evolved as providing an integrated solution from solar plants to EV chargers to now the battery energy storage, along with lithium-ion batteries. So, in terms of, I mean, if I come back to your question, so in terms of EV chargers, last year has not been that great when it comes to government orders or various, I mean, because of various policy matters and all. But this year, we are expecting this to be a great year for all of us. I mean, the entire EV charging market is banking on this particular industry, and we are very hopeful. We expect it to be growing significantly. And we would certainly, pick and choose our market and grow with the bandwagon. I mean, so far, we are ready with our product. We have state-of-the-art product with the latest technology to cater to the high value or high power EV chargers, and we are all game for it.
Okay. Thank you so much, Mr. Prem Prakash, for speaking with us. And I understand there were some restrictions because, your results are yet to come. We hope to catch up once your numbers come through as well. We're talking to Servotech Renewable over there. We'll take a very short break, quick market check before we get into that break, and an interesting set of conversations. On the other side, you have the Nifty chugging along quite well, actually, above the 24,200 mark, 151 points up. And it's largely a Nifty story today. I just want to pull up the small cap index and see if there's a recovery in the small cap index. Started off weak and was the big dragger and continues to be. So this is a reversal of a trend we've seen for the last several days, but the Nifty is doing fine, but the broader market's not necessarily. Nandan Chakravarti is going to be speaking to us on the other side from DAM Capital Advisors. Stay tuned for that conversation and a lot more.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV.
The stakeholders are becoming more important than just
Welcome back. You're watching India Market Open. Quickly dipping across to an interesting conversation. The RBI Governor Sanjay Malhotra in conversation with DD News. Let's just listen in to what he's saying.
इसका कारण यही है कि हमारे जो मैक्रो इकोनॉमिक फंडामेंटल्स हैं वो बहुत सुदृढ़ हैं, बहुत मजबूत हैं। जो विभिन्न पॉलिसीज, नीति, चाहे वो मौद्रिक नीति हो, मॉनेटरी पॉलिसी हो, चाहे वो वित्तीय फिस्कल नीति हो, औद्योगिक नीति हो, सभी नीतियां मजबूत हैं और उसकी वजह से ग्रोथ अच्छी है। मुद्रास्फीति भी नियंत्रण में है, हालांकि अभी थोड़ी बढ़ी हुई है जैसा कि आपको मालूम है, पर कुल मिलाकर के मैं समझता हूं कि जो हमारी विभिन्न नीतियां रही हैं उसकी वजह से आज हम एक अच्छी स्थिति में हैं, जिससे हम प्रत्येक जो भी हमारे सामने खतरे हैं उनको हम अच्छे से उनका हम निपट सकते हैं।
सर, आपने वैश्विक अर्थव्यवस्था को लेके जो अनिश्चितताएं बनी हैं उनकी बात की, तो इस समय जिस तरीके से टैरिफ संबंधित अनिश्चितताएं हैं, भू राजनीतिक तनाव हैं, इन सब में सबसे ज्यादा चिंता का विषय आपके लिए कौन सा है? और साथ ही ऐसे समय में आप भारत की अर्थव्यवस्था को कितना मजबूत, कितना लचीला मानते हैं?
नहीं, जैसा मैंने आपको कहा कि बिल्कुल मजबूत है हमारी स्थिति सभी क्षेत्रों में। बैंकिंग क्षेत्र की ही जैसे कि अगर हम विस्तार से अगर उसके ऊपर में हम बात करें तो उस जो कैपिटल एडिक्वेसी है वो 17% से ऊपर है, 17.5% है। लिक्विडिटी कवरेज रेशियो वो भी 100% से ऊपर 120% है। तो सभी सेक्टर्स हमारे मजबूत हैं। जोखिम जो आपने कहा
जी,
जोखिम में जो बाहरी क्षेत्र की जो अनिश्चितता अभी भी बनी हुई है, चाहे वो पश्चिम एशिया में जो खतरा है, पश्चिम एशिया में जो युद्ध है, हालांकि एक सीज फायर वहाँ पे रहा लेकिन वो भी एक टेंटेटिव है, वो हमारे लिए आज के दिन में एक जोखिम है। और हमें इस बात का भी ध्यान रखना होगा कि मॉनसून हमारा क्योंकि हमारी काफ़ी अधिक जनसंख्या कृषि के ऊपर में आधारित है और लगभग 1/6 हिस्सा हमारा अर्थव्यवस्था का भी कृषि के ऊपर आधारित है। तो वो किस प्रकार से आगे विकास करता है उसके ऊपर में भी हमारे को सचेत रहने की आवश्यकता है।
Right, that's the RBI governor, and sounding sanguine about the prospects of the economy, which is actually a good thing. I wonder if the Q1 results thus far have kind of pointing towards that, the updates, not the results actually. And actually it's a good cue to get in the next conversation going, because DAM Capital expects a mixed Q1 and they're cautious on macro risks from Hormuz disruptions and all the other factors. Nandan Chakrabarti, Head of Research Strategy at DAM Capital Advisors, with us on the show. Nandan, great having you. It's been a while. Thank you so much for joining in. My question, Nandan, though, is, and I'm starting off with this based on the lead-in that I gave for your interview, that you are cautious on Q1 earnings, but that would be a natural outcome of the fact that all the geopolitical disruptions happen. Have you been positively surprised by the spate of Q1 updates and the few results that have come out thus far?
Not really, because only IT has come out, and the worry in IT right now.
The updates, the Q1 updates, Nandan.
Yeah, so there are too few. Most of them are still to happen, so it's no point here. See, IT is a little bit of a worry, because the worry is that, in case layoffs start this year. So far, we've had degrowth. We've not had, negative growth. And that's a worry in IT. But I think as far as this quarter is concerned, more important than what happened last quarter results, because they're not really relevant. There are too many things have happened, is what is the management speak on outlook in 3 areas. So one, is this whole Hormuz constipation, as I call it, that's going on off, on, off. The inventories at sea and in the factories have got over. So, whether people have been able to raise prices or not depends on both how much inventory they've had as well as, their pricing power. So that will be tested this quarter. So we would like to know from managements how much inventories they have, how much pricing power they have. I mean, are they passing on costs and so on? So some of them, like PVC, happened yesterday. They've been able to pass on fully, and some of the others are not so much. That's one. Number two is this El Nino. Now, forget about Super El Nino because that's after our monsoon season. But the El Nino may be offset by what is known as the Indian Ocean Dipole, IOD. And that we will know only in the first week of August or so from the Australian Met, maybe our Met also. And the third thing is, yes, the macro has generally improved across the board. For example, your credit growth, then the capex, all this sort of stuff has grown. But it is much of this has been on a YOY basis. On a month-on-month basis, some of them are faltering. So it's a base effect for some of them. So question is, going forward, especially the lead indicators, which are BFSI and IT, and auto, how will these three do? The outlook on that, I think, is fairly important for the markets.
Nandan, interesting turn of phrase there, the constipation of the Strait of Hormuz. Not to stress on the point too much, but do you think the impact of this blockade is now easing in the way Indian markets are behaving? We're not quite jumping in panic to every uptick on crude prices. And why do you think that is?
So I think as a government and as RBI, I think we've managed better than most other, countries, at least in Asia, given our very high vulnerability both to crude as well as the rupee dollar. We are probably the most vulnerable to currency among all major economies of the world because, our twin deficit and various other reasons. Despite that, we managed very well. So kudos to, RBI as well as the government of India for that. Having said that, now it is so unclear because now, for example, we are exporting oil to Russia. So I don't know if, US will sanction us for exporting oil to Russia now. I don't know. So things are too murky to make a call on those. I would bet on the macro improving. I would bet on the El Nino and the two Damocles swords, that is El Nino and this, sort of resolving. And two more things which are key at this point. One is this is the third critical year of the government in power, which is the last year before it may have to be populist because next year is 7 state elections, including the big ones like UP and Gujarat. So either the government will do something absolutely tod-fod, which will increase the PE of our country. I don't want to, think about what they can do, but
where is the scope, Nandan? Where is the scope of tod-fod? We've utilized all of our fiscal room to make sure the ship is steady during this crisis in the last 3 to 4 months.
It's not only economics. Politics is many other things. So it could be the US trade deal. It could be common elections across India. I don't know. I mean, this is the only year they can do it. The problem is that next year, if there are going to be so many elections, and if either of these eventuate, which is the Hormuz thing continuing for a long time, or the El Nino happening, then the government may have no choice but to, do a lot of giveaways and take away from capex and so on. But maybe the other way around, one of these other things may happen. And the US trade deal is important, not so much for trade. I mean, we'll get a few more Bourbons and Teslas and whatever. That's not so important. The importance is in terms of capex. Because remember that gross FDI has still been improving. It is the net FDI because, exists from PE, which has been a problem. So therefore, if gross FDI goes up, if people have confidence, then Trump and Mr. Modi are sort of back on even keel, not just words outside, but actually, then obviously there will be confidence in FDI. So these are the things which are important now. This quarter is critical in terms of all these factors that I've mentioned so far.
Okay, Nandan, thank you so much for joining in for that conversation. We look forward to a longer, more detailed conversation going ahead as well. That's the view coming in from DAM Capital Advisors. Trin Nguyen is with us, senior economist at Natixis, covers emerging markets and emerging Asian markets as well. Trin, always a pleasure to have you on. And, we love it when you're in person in our studios, but we'll make do with the Zoom call this time around. How are you looking at the last few weeks with first some optimism returning on what's happening with crude and crude supplies, etc., and then that kind of overturning immediately? From the Indian perspective, is this now a very tricky space that we're in?
Well, I think the good news is Brent is much lower. It's edged a lot higher since it went lower, but it's still sub 100 in the 80s and sub 120. So the peak of the shock is over. But underlying that, you still have supply shocks, right? So even if you had Brent easing, you still have commodity prices and PPI very high. So the latest India PPI and WPI in India is almost 10%. It's not just in India, in China, PPI is higher, in Japan, in Korea, and across the world. What that means is that irrespective of what's happening, it takes a long time for this to rebalance. We still have supply shocks, and that is going to continue to squeeze margin. The second factor that's squeezing margin is obviously higher interest rates, particularly in the U.S. The hawkish tone by Walsh has taken the markets by surprise. He's turned a little more dovish, particularly with lower gasoline prices. Has pushed inflation lower, has helped that dovish tone, but fundamentally the longer end of the yield curve remains very high. If you look at the 30-year, that's very elevated yields. So that means that investors are getting rather decent risk-free rates. And that puts pressure on the rest of the world, particularly India, where the central bank has done a lot. It has done a lot in easing taxes. It's done a lot in qualifications for foreign investors to invest in bonds. It's done a lot in lowering the costs of hedging. But all of these things continue to still not do enough because of the pressure that I just mentioned. And as a result, the INR stays weak, and it's weakened since rallying in June. And I think that pressure is going to push the central bank to fundamentally do what I think it should do, which is hike the policy rate. Headline inflation is rising. And if you look at the RBI bulletin, they focus a lot on also the fact that you have food prices potentially rising, supply is ample. But this year, you have weather events that are not so favorable. So as a result, I think the one thing that emerging markets have to be mindful of is you have a lot of upward push in costs and in erosion of margins. Now, that leaves less space for corporates to react in the short term. Yeah. For central banks and for the macroeconomy in general, you have to arrest that slide in depreciation expectations, and fundamentally rate hikes are coming through.
Yeah. So, Trin, and very good morning to you. And it seems like the administration and the central bank working in tandem has managed to a certain extent to steady the ship as far as the currency is concerned, and the policy action has been measured and has proved in retrospect to be appropriate for the situation. The question is the path ahead, and the lead indicators seem to suggest that there is still resilience in the Indian economy. Consumption still remains robust. At this juncture, the signs are that corporate earnings are not taking a massive hit. I'm just wondering, as someone that looks very closely at the Indian economy, what do you think are going to be the big drivers of growth in the second half of this year?
Well, the driver growth continues to be consumption, continues to be services, and I think that will power it through. Now, the question is whether or not net exports will contribute very positively to growth. I think it remains to be services, but for investors looking beyond short-term service resilience, they're looking at what's going to happen if AI is actually quite productive and these agents are able to replace a lot of the IT export services, right? And that already you can see in the headcount demand in these firms. They, stock price have taken a hit, and while earnings have not, perhaps, but really you have to take a look at the fact is that they're not really increasing the demand for headcounts, and that has an impact on the overall economy. Consumption is resilient, but the reality is that we're not seeing growth accelerating and firing on all cylinders. And I think there's a lot of question marks on long term ahead. The second, of course, is depreciation of the rupee. It has stabilized, and there have been inflows. And one thing that India has going for it as well is that, and this is something I argue in my op-ed in the FT this week, is really the fact that it has that diversification trade. Investors have become very concentrated in the AI trade. So trying to diversify from the US has led investors become even more concentrated rather than more diversified. But it's not a given that if investors want diversification, that they are going to flow to India. You have to take a lot of measures to attract that. And the Indian government has taken heed in doing that after the significant pressure on the rupee. And I think that pressure is going away short term, but long term it remains, because a lot of countries are also very aggressive. In the US, they're quite aggressive with deregulation and corporate tax cuts and so on and so forth, and capex. So is Korea, so is Japan. So an EM used to be able to be very comfortable saying that we have a strong domestic demand. Our households and corporates are not very levered. Our potential growth is very high, and the flows will come. That is not necessarily the case. You do have to be much more active in competing for that capital. And May June show that India does need to compete for that capital through aggressive measures, and I think more aggressive measures will come. Now, if you were to juxtapose that, you look at Korea this week, hike rates by 25 basis points, and I think they're going to hike further. And I think that's the environment we are in. We're in a tightening cycle in Asia. Competition for capital will be very scarce, and reforms must be very aggressive to really lure flows, even if it offers that diversification trade.
Got it. Twin, and very rightly put, Neeraj here, good morning or good afternoon to you. But, and the FCNRB measures have not really shored up the rupee except for that brief period intermittently. What do you think in terms of further measures need to be done to attract flows? Simply because on global side, even the AI hyperscalers doing those bond issuances are stretching capital away from other markets towards those issuances too. So even on the debt side, there is competition, right? What more can India do to attract flows, both equity or debt?
Well, first on the debt side, they haven't raised rates. They've refrained. So even the recent acceleration of CPI, the central bank has been very dovish. I think they have room to raise rates.
But that has repercussions, right? At a point of time when the economy is looking to recover from the shock that came in from the Hormuz conflict.
Well, but the good news, I think, for India is that the economy is not very leveraged, right? So the transmission from rates raising to household is not very high. So if you look at the household leverage, it's not very high. And also, even without raising rates, equities, the biggest sectors have been taking a hit. So this argument that rate hikes are going to really hit the economy and the equity market, I don't really buy it, just because the concern for Indian equities has really not a lot to do with rates at all. It has a lot to do with its structure, right? The equity market structure, where the IT services itself is being to question. Whereas if you look at the banks, they've done really well with the steepening of the yield curve, right? Banks generally do well. So it's a question, which sector are you positioning yourself? And this idea that rate hikes are going to blow the market over, I don't really agree with that, because the appreciation of rupee will anchor expectations. And the one thing is that India, unlike other countries that can benefit from a weaker rupee, does not have, the Indian companies are very domestic in nature, right? So the depreciated rupee is not going to translate to significantly higher revenue for the Indian companies, because it's a very big domestic demand economy. Whereas if you look at Korea or Japan, the depreciation of the currency brings a wealth of positives. The one positive is that in yen or Korean won, it's very positive. The second thing I would say, beyond rate hikes, I would think reforms. One factor is that there's a big emphasis on IT service exports, but tourism itself is a sector that it's long ignored by India, right? Given the fact that domestic market is so large, it really doesn't spend a lot of time attracting the outflows. Or one thing is just even to keep domestic Indians at home. And one of the areas, if you look at countries that have been very aggressive, even China, they've very been aggressive at liberalizing the visas, aggressive at trying to attract the flows to mitigate the outflows, right? China has a 1.5 trillion surplus. Meanwhile, they still have capital outflows concerns. And meanwhile, they're spending a lot of energy to attract tourism. So there are a lot of sectors that India can grow that hasn't been really addressed. And I do think that the government itself has a lot of room to address it. So rate hikes are short-term measures, and I think this is a call that I get a lot of pushback, and really hasn't really gotten traction. But I do fundamentally think that it's probably going to be the case. If you look at inflation, it's really moving in the direction that I thought it would move, which is higher. That's where inflation is going across the world, and central banks have had to hike. And if India is a country that wants to attract flows and compete for flows, it cannot have this unsynchronized monetary cycle when everyone else is raising rates.
Yeah, no, so that's the case for rate hikes. Does that become stronger if the monsoon is not as good as it's being predicted? It's been predicted we're going to have a tough monsoon. Will that sharpen things up? Are we underestimating the impact of a poor monsoon right now, Trin?
Well, I do think there are a lot of pressures. The PPI is one that's putting pressure. A depreciated FX is putting pressures. The monsoon is another one that could add pressure. The good news is at least you have very good supply. India has a lot of measures. It's a food exporter, net food exporter. So not only it can do so via having its own supply, but it also can curb exports, right? And that's what it's doing with refined oil right now. No, so I do think that it's not the most vulnerable country in Asia when it comes to this external shocks. I can think of the Philippines being much more vulnerable. But if you were to think that that the rupee would be fine without pressure when everybody else is acting much more aggressively. Indonesia already hiked by 100 basis points, right? And that can be sheltered from the storm, given how big its domestic market is. I don't think that would be the case. And it has to react to changes in external environments and other central banks as well. The fact is the longer end of the US yield curve is almost 5.1% tells you that that's the risk-free rate. That used to be a high yield rate for EM. And so that is what India would have to compete with.
Okay, thank you so much, Trin, for speaking with us today and giving us your time. We always enjoy our conversations. Trin Nguyen there,
Thank you.
a senior economist covering emerging Asia at Natixis. Let's take a look at the markets today, and compared to the rest of the Asian markets, India actually doing much, much better at nearly 1% up on the Nifty right now. Will we look at 24,300 today is the question. And Neeraj, compared to, say, Korean markets, we're smelling like roses.
Yeah, that's what we started the show with, right?
Yeah.
Less volatility. And guys, I just thought, let's try and put it into perspective what's happening globally, right? And there are some interesting data points. So if you can pull up these things on this video wall, and the meltdown that we are seeing in single stock ETFs, and SK Hynix is the poster boy of that. Why is that the case? Simply because if you pull up the data, you would see what I'm talking about. The 3x SK Hynix fund, which gives you 3x the leverage and therefore 3x the return, both on the upside and the downside, was launched just over a month ago. The 3x SK Hynix fund peaked at a level of 36 3 weeks ago. It's trading at 4. That's a 90% erosion in the value or the price at which the ETF was available. The 2x fund is down 70% from its highs and still has over $6 billion in AUM. Can you think of this? A fund that is down 70% still has $6 billion. Imagine what it had at peak capacity. Now, what's happening as a result of this and as a result of the dominance that Samsung and SK Hynix have is that volatility is shooting up. The volatility, Kospi volatility, stood at 89 on Thursday after hitting a record high of 97.99 on June 29th. And remember, by the way, this was about 25, I think in the month of December or January, right? End of 2025, December. It was at 28.85. it was at 79 and it was actually hit a peak of 97. That's the extent to which volatility has gone up in the South Korean markets, as a result of which now the regulator has pulled out some measures, as every regulator would and should. So what they have done is that they have put out new rules as of yesterday that leverage ETF entry threshold has been raised. The minimum deposit for retail investors is raised 3 times to 30 million won for participating in this, and the number of units that you can trade as well has moved up from 1 to 20 shares, right? So they are trying their best, but the point being, why we said that India is smelling like roses right now is simply because Korea has great companies out there, but the volatility is so high that a lot of retail investors won't be able to digest it, and which is why I'm sure, guys, that the last ones left holding the can in that levered ETF would be retail investors, and they are really licking their wounds right now.
Yeah, that usually is the case, unfortunately. The last ones on that bus and the last ones off are usually the retail investors.
No, but in Korea, people took huge leverage.
Yes.
People mortgaged their homes to go and invest in markets and, run that tide. And that is a scary thing.
Yeah.
So that's, I think, a word to the wise for any of us.
It certainly
I
is.
think there was a story that you shared, Neeraj, about how an investor, actually there was violence against someone who was suggesting that there should be...
An advisor or social media influencer.
Someone on social media was saying buy this and buy that, and there was an assault on that person from an investor that has lost money. So these ugly things can happen when you go overboard. So always be careful, I suppose. If something is too good to be true, it probably is. Well, what's definitely not too good to be true is how super the show was, if we do say it so ourselves. Thank you so much for joining in today and watching us through and through. And from the team that put the show together, thank you so much for watching. We'll take a very quick break. Ask Profit on the other side. Stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India?
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Well, the Bitcoin is below that $64,000 mark on macro-driven concerns. Softer US inflation fuels leveraged Bitcoin Ethereum rally. BlackRock records Q2 highlights with tokenization push. And lastly, Visa introduces platform for stablecoin minting. First one is that Bitcoin is below the $64,000 mark, and remember there is a macro-driven concern coming in, especially on US and Iran tensions. And remember there is a chance of a hawkish Federal Reserve outlook. There may be a technical pause in the momentum in the coming sessions. Looking at the June US inflation data, which came in below the forecast, slashing the July Fed hike odds, and of course lifting the Bitcoin to the mid $60,000 mark, and for Ethereum near that 1900 mark, as the spot ETFs have absorbed roughly $239 million when it comes to the net inflows. There's a very interesting data I would like to share with you, and that's BlackRock's record Q2 highlights, the tokenization push, and almost there is a $139 million of Bitcoin ETF inflows coming in. Now the firm has filed the Securities Exchange Communication registration statements for tokenized money market funds, and this also includes Ethereum-based share class. Now, to put that in perspective, this is a positive signal for the institutional support for crypto. Lastly, the Visa has announced the Visa stablecoin platform, which is a new enterprise platform, and this is designed to help the financial institutions, fintechs and crypto natives, where you can access the stablecoin capabilities through a single Visa managed environment. Now this includes the on-chain wallet infrastructure and of course the connectivity for minting and burning OpenUSD, which is a stablecoin which was newly introduced. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. And lastly, we see a sell-off happening for Bitcoin and Ethereum between the 2 to 4% mark, and other coins also seeing a selling pressure, a little bit of profit booking, I would say. And the range has shortened between that $63,000 to $65,000 mark when it comes to Bitcoin. Well, time to now take a look at the crypto strategy for the day. Here's what's there to keep in mind today. The market outlook is cautiously bearish right now. Now going ahead, the key monitorable would be Fed chairperson's commentary and rise in treasury yields, which has happened recently. That's also a key trigger we'll be looking out for. But as of now, you should avoid new large trade positionings as the macro concerns are still there, and as we're heading towards the weekend, there might be more volatility across the asset classes. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vashajani, and with me, as always, is Puneet Zaveri. And this is a show, of course, that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing at the moment. The Nifty 50 trading almost at the day's high point. 24,200 levels is what we're seeing on the Nifty 50, up by about 0.9%. Let's try to pull up the heat map and see as to what are the counters that are doing well in trade right now. And you have Geo Financial Services, of course, on the back of that dividend bonanza and numbers trading 4% higher. You also have Axis Bank trading 1% higher. Tech Mahindra doing fairly well in trade today after a good set of numbers. Reliance Industries ahead of earnings, also trading 1.8% higher. And you also have counters like Eicher Motors, Hindustan Unilever, Bajaj Finserv and Bajaj Finance. So both Bajaj twins also doing fairly well. Also names like Kotak Mahindra, Infosys that are trading higher in trade right now. In terms of where there's profit booking being seen, Wipro is where the counter is down by about 1.5% after the Q1 numbers. Dr. Reddy's is also seeing a downtick of around 1%. Hindalco is where today we're seeing some profit booking coming in. And you also have names like Max Healthcare, Cipla and Bharti Airtel, which are down in trade right now. Let's also pull up the Bank Nifty because that's trading 1% higher today after 2 days of pressure that it's seen above the 58,100 levels. Yesterday we saw it closing below the 5,700 odd levels, and today 57,000 odd levels, and today is when it's trading 58 above that 58,100 levels, up by about 1%. Let's also try to pull up the sectoral heat map to see as to what sectors are doing right now. And you have realty, which is back in action, up by about 1.2%. 2 days of profit booking and now up by about 1.2%. There's pharma, although, which continues to be under pressure. And you also have metals that are slightly in the red. But the mid cap 150 and the small cap 250 is where the real pressure is, because the mid cap 150 is down by about 0.4% and the small cap 250 is down by about 0.8%, and that's reflected in the advanced decline ratio, because the broader end of spectrum is where we are seeing some profit booking coming in. There's just 900 odd advances versus that of 600 odd declines. So that's with regards to where the markets go. But let's start taking your stock related queries, and to answer them we are now joined by Rahul Sharma, who's the Director Head Equity Research at Equity 99 Investment Advisors, and Tapan Doshi, Research Analyst at CA joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. Before I start taking the queries, quickly, Rahul, your take on the indices right now, in terms of somebody who already has a position. Over the weekend, we have a lot of earnings coming in. What should he or she do?
Good morning, Mahima, and good morning to all of our viewers. I think it is a actually great morning because we are seeing the indices crossing the upper resistance level, and it is been powered by the banking basket, because only the Nifty Bank was lagging behind when IT and other sectors were supporting the index. So I think today's closing is very much crucial to watch, because if at all we closes above the resistance zone, which was around 24,280 points. So I think above it, if we close, then in coming week, I think will be not in a surprise to watch Nifty going towards 24,500 and plus levels.
All right, okay. So that's the view coming in on the indices, but let's start taking all your stock-related questions. The first one that we have is from Aarti, who's writing us from Bengaluru. She's asking about Balrampur Chini Mills. She's got it at the levels of 530, and she wants to know whether she can sell today. The stock is currently trading around 610. Rahul, I'll come to you again for this one. It did see a good breakout, and since then it's been rallying. What's your view on the charts? Can she continue to hold for further upside?
Yes, I think the buying level has been really good for Ms. Aarti, and I think currently the stock, when we see the charts, the structure is really positive. It has already been over the important exponential moving averages, and I think the next resistance is towards 624-25 levels. So if at all it sustains, then I think it can show a massive rally towards 650 levels. So I think she should hold on. Currently, it is trading around 610. So keep a stop loss of around 590. for the next levels, which are 624 to 650.
Got that view, Rahul, and welcome to the show. But let me also go across to Gurugram now. We have a first caller for today. Manav has a stock query for us. Manav, very good morning. Welcome to the show. What's your query?
Hi, good morning to everyone. So I have a query on BSE today. I've been holding on to these 10 shares of BSE at an average price of 2,300. A little, almost about a year now. So the stock is showing a little bit of down momentum for the past few sessions. Like if we compare like for the past few sessions, I have no issues on holding on to it a little longer, maybe 2 years or 3 years. So will it be advisable to hold on to it, or should I book profits and re-enter at some different price?
Got it, Manav. Got your question, and a fair one as well. Tapan, good morning. Welcome to the show. What would you recommend on BSE? Because you know you have the big impending NSE IPO coming across as well, and I think from those 4,000 odd levels corrected somewhat, as Manav also pointed out. What's your recommendation for him? Should he book out?
Good morning, Puneet. Yes, the NSE IPO will be the bigger trigger, and we have to see at what valuation NSE is going to list. That will decide the future of BSE. But if you see that BSE option market share will rise in future, again the derivative products are expanding. Again, retail participation is going to go up. Capital market penetration is increasing slowly and gradually. Of course, there are some regulatory issues which will be there. But my take is now, please hold this stock. The stock is good. I think still the volume will go up in the future. Of course, you have to keep an eye on NSE trigger how it is. But as currently hold for the long term. Let's wait for the NSE IPO.
All right, okay. The next one that we have is coming in from Vijay, who's writing us from Chennai. He wants to know the short-term targets for Avenue Supermarts. Rahul, any view on the charts for this one?
See, Avenue Supermarts, as per the charts are concerned, it is showing some weakness because it is trading below the important moving averages, which are 200 MA and 100 MA. So I think till the time it is holding the level of 3,890, it is okay to hold. But if at all it crosses these levels, I think the stock can further decline to the levels of 3,700. On the upside, firstly, the resistance will be at 4,120.
Got that view, Rahul. But the next question, and this one's coming in on EPAC Durable. Our viewer Bindu, who's a regular viewer of the show from Hyderabad, is holding 300 shares bought at 252 odds, so close to the current market price. Asking a long-term view. Tapan, actually, you know, over the last quarter or so, this has been a disappointing, quarter 4 results. The whole PLI essentially got wiped out, and so did the profit. So how are you looking at this counter now? I mean, generally quarter 1 is good for the AC makers. So should she hold on, probably take another view and then take a call?
I'll tell her to hold only, because if you see the RAC demand has been robust. Again, this time, you know that summary is going to longer little bit. Plus capacity expansion is underway. New customer addition is expected. If you see now, the small appliance business for EPAC Durables now is expanding. Of course, competition is there from the EMS peers. But I think margin profile and all that, yes, last quarter was disappointing, but I think that will come up. So yes, please hold this stock. I think things will be better for the EMS sector in future.
Okay, the next one that we have is on BHEL. Bhuvana from Bengaluru is holding 500 odd shares bought at the levels of 104. So quite, an entry price for her, because she's sitting on a loss of, on a profit of over 1.7 lakh rupees. Tapan, I'll come to you on this one, because yesterday when the earnings came, it took a while for the stock to run up, right? But it did run up and close around 5% higher. Today it's trading just by about 0.8% higher. But overall, a good set of numbers versus what the street was expecting, right? So overall, of course, what do you make of results? And because she's entered at such attractive levels, do you think it's time to book some profits?
Yeah, I'll tell her to book some profit. See, the problem with BHEL was always an execution, but from last 1 or 2 quarters, now execution is coming. But still feel that now valuation is on a higher side. Again, now overall competitive bidding pressure is there for this company. Of course, in future, thermal and nuclear opportunities there. Again, railway defense sector is doing well. But looking at the valuation, still I feel that now book some profit, and there are better stocks in this sector. So some part of the profit should be booked.
Got that view, Tapan. But अगला एक और कॉलर ज्वाइन कर रहे हैं, शर्मा जी ज्वाइन कर रहे हैं अपने एक स्टॉक रिलेटेड क्वेरी के साथ. शर्मा जी, गुड मॉर्निंग, शो में आपका स्वागत है. कैसे मदद कर सकता हूँ आपकी?
मेरा टाटा मोटर पैसेंजर व्हीकल ले रखा मैंने 395 में 2200 शेयर। अभी लिए थे वो कुछ महीने 1.5 महीने पहले। वहां से बस वो जैगवार की इन्होंने वो निकाल दी रिपोर्ट और शेयर को बिल्कुल नीचे ले आए और ये मार्केट पार्टिसिपेट नहीं कर रहा, बाजार बढ़ रहा तब भी।
करेक्ट।
इधर में 10 दिन से 330 और 40 के बीच में घूम, आज भी इतना मार्केट तेज है, ये कल के ही भाव पे ही घुमा रहे हैं मतलब इसको। तो मैं थोड़ा चिंतित हूँ, क्या करूँ, इससे निकल जाऊं तो बहुत लॉस लग रहा है और होल्ड करूं तो क्या करूं मतलब इसमें।
और शर्मा जी आपने ये टेक्निकल चार्ट देख के लिया था 395 पे, ये करेक्ट अनुमान है?
नहीं, मैंने तो उस टाइम ये अच्छा चला, इसकी सेल रिपोर्ट अच्छी आ रही थी मंथ ऑन मंथ, तो मैंने ले लिया था मतलब इसको।
करेक्ट। वैसे शर्मा जी गॉट योर क्वेश्चन। देखिए लास्ट ईयर क्या था कि जैगुआर लैंड रोवर की परफॉर्मेंस अच्छी नहीं थी एंड गाइडेंस जो है वो अभी इतनी कुछ खास नहीं आई है। बट तपन जी आपका क्या राय है टाटा मोटर्स पीवी पे? बिकॉज 70-80% रेवेन्यू अभी भी जैगुआर लैंड रोवर से आ रहा है। न्यू मॉडल्स लॉन्चेस हैं अगले 12 से 18 महीने में, बट क्या राय देंगे आप? वो अभी एक 1.3 लाख रुपये के लॉस पे है, 395 पे लिया है, क्या उनको बने रहना चाहिए?
जी देखो, ये स्टॉक में टाइम लगेगा रिकवर होने में, क्योंकि जो गाइडेंस दी है वो काफी कम दी है और मार्केट का एक्सपेक्टेशन काफी हाई था, प्लस ये ऑलरेडी 400 क्रॉस कर चुका था, तो एक अच्छी खासी हमने गिरावट देखी। लेकिन यहाँ से मुझे ज्यादा नहीं दिख रही है, मे बी 320 के आसपास जा सकता है, ज्यादा गिरावट नहीं है। लेकिन फिर आपको 1-2 क्वार्टर राह देखनी पड़ेगी रिकवर होने में। मेरे हिसाब से यहाँ से 5% मैक्सिमम डाउनफॉल है, लेकिन अगर 2 क्वार्टर के बाद देखो अगर रिजल्ट अच्छा है तो ये वापिस तेजी पकड़ेगा। तो अगर आप रुक सकते हो तो रुक जाओ। आई थिंक काफी हद तक जो चीजें हैं वो ऑलरेडी डिस्काउंट हो चुके हैं। लॉन्ग टर्म के लिए आई थिंक जैगुआर वापस रिकवर होगा, बट लंबा समय हो तो रोके, नहीं तो फिर आप निकल के दूसरे स्टॉक्स में जा सकते हैं।
Got that view, Tapan. But the next question, next caller from Pune, and Varun has a stock related query for us. Varun, good morning, welcome to the show. What's your query?
Yeah, good morning. So actually I'm from 25 share of Sigma H8 at 1300 rupees.
Okay.
So I would like to know more share. So should I wait for that or wait for the quarterly result to come and then add on, or is it the right time to add?
And Varun,
just a few days back, I think Semiconductor 201 that notification came from the government. So would like to know from the investment point of view. Yeah.
And Varun, did you look at the fundamentals or the technicals while entering the stock? Fundamentals. Okay, got it. Tapan, on Sirma SGS, it's had a spectacular move just in this year, even in the last year, 12 to 18 months or so. What would you recommend Varun to do, as well as, should he, given the strong outperformance, just temper his return expectations also a little bit?
See, at this level now, the valuation already gone up a lot, and of course, it's one of the exceptional performance in EMS sector. Also, if you see 27 revenue growth will be much better. EMS outsourcing is accelerating for this company. Again, they are adding new capacity, and export contribution is also increasing. Though only thing is my negative point for this stock is valuation. So don't add it now, wait for 10% drop, then add it. But otherwise, if he's holding, please hold. I think this may do well over the time also.
All right, okay. The next question that we have is coming in from Manoj, who's writing us from Mumbai, and he's asking if this is a good time to invest into something like a DB Corp. It's a small company per se, Tapan, but any view on this particular counter? In fact, for anybody who wants to know about the company, we spoke to the company yesterday, and the conversation will be available on our YouTube channels as well. But it's done a good growth in Q1 FY27, but overall, if you take a look at as to how it's done in the last 3 years, it's been a muted performance per se.
Well, I am not too much positive about these two stocks because a lot of headwinds are there now. Again, little bit cyclical. And if you see, digital media competition is rising. Again, printed demand is also quite a cyclical. Again, you can see the dependence on ad revenue is much more on the higher side. So if sometimes revenue goes down, the ad revenues, then this company will be in a problem. Of course, they are market leader in Hindi print and all that. But still, I feel it's not a strong mode to have. So better to ignore this one.
Got that view. But the next question, and this one's on Bandhan Bank. Mohit from Ludhiana is holding shares at 187. Rahul, he wants to know a 3-month view of the stock. What would you recommend here? Should he book out his profit now or continue to hold?
Puneet, I think he should hold on. The chart structure is quite positive, and 2 sessions before, it was almost ready to give another breakout. And I think holding on to the stock will be a good idea for now, because it is already trading above all the important exponential moving averages. The chart structure is strong, and I think as the banking basket has started performing, and Bandhan Bank is quite likely to have a good on the upside range. So I think holding on for the levels of 230 to 240 will be a good decision, keeping a strict stop loss at 206 levels.
Okay, the next one that we have, I think we've got a caller. Pawan is calling us from New Delhi. Pawan, a very good morning to you. Go ahead, ask your question.
Okay, good morning. I have been holding Oracle Financial Services shares from past now. It has been 1 year, and the buying price was approximately 6,900. That is an average price, and I hold 25 shares of that. And I know that there's a decent profit that I'm sitting on. I just wanted to understand that should I make a partial book a partial profit, or should I add more, considering the uncertainty that is going on, specifically in the IT sector? So if you can please help me and guide me in that.
Sure. Pawan, just want to ask you one question. Did you see the financials while buying this, or did you see the technicals?
No, I saw the fundamentals, because I saw I've gone through the cash flows. The cash flow is very strong in that, and yes.
Okay, all right. I got your question, and I'll take this up with Tapan, because this is one of that stock in the IT space which has done very well for somebody who's invested at the right levels, right? And he's already sitting on a good profit. Tapan, what would you recommend? Should he consider booking some profits or continue to hold?
First of all, congratulations to him, because very rare someone earns from IT sector currently. So yes, if you see, already the stock has gone up. So I think book partial profit. I'm not saying stock is wrong or something, but I think the stock valuation is on a higher side. And if you see there, client concentration risk is there. Again, largely conversion, we have to see the timing risk and all that. Of course, the demand is good. AI-led banking transformation is growing and everything is good. But looking at the IT sector and current scenario, my take is book little bit profit here.
Book a little bit of profit. That's the recommendation from Tapan as well. It's been a good run, Pawan. Hopefully that answers your question. The next one coming in, it's on Jio Finance. Definitely, a stock that's buzzing on the back of results as well. But Tapan, our viewer wants to enter this stock currently. This is Arun who's writing to us. Would you recommend that, given the results, given the dividend policy, amongst others?
Yeah, I'll recommend that stock. You can enter at this level also. It's been not going up for a little time, and I think most of the segments like mutual fund and digital finance platform, insurance, broking, all these are going to expand a lot in next 1 year. And from there you will see the revenue. You see even this quarter, yesterday, whatever result came, good profitability came. So AUM is going to increase for mutual fund. So yeah, I'm quite positive. I think this stock you can add at this level also.
All right, okay. It's time for a rapid fire round now. Tapan and Rahul, try to keep your answers as short as possible to buy, sell and hold. The first question that we have is coming in, and this is on Apollo Microsystems. Our viewer wants to know if this is the right time to maybe enter into this one. Tapan, I'll come to you on this one. What would you suggest?
At least 15-20% now.
The next one coming in, and this one's on Sharda Cropchem. Our viewer, Mahesh is holding shares at 1130, stocks at 906. What should he do here, Tapan?
Hold.
All right, the next one is coming in on Tata Power. Our viewer Prashant has bought at the levels of 390. He wants to know whether he can continue to hold. By the way, he's also holding a lot of other names in the power space. But Rahul, for Tata Power specifically, your view on the charts?
View on charts is negative. Till the time it doesn't crosses 400 levels, it will be under pressure. So I think it will be good decision to exit from the stock whenever you see any jump.
Okay.
Also, Rahul, on Ujjivan Small Finance Bank, Lalita has bought shares at 54. Stocks currently at 66 odd. Is it a good time to book profits?
Yes, I think, but there is no hurry. If at all there is no need of liquidity, then I think she should hold on to the levels, because charts are quite positive.
Okay, all right. The next one that we have is coming in, and this is on Aeroflex. Our viewer Raj has bought it at the levels of 422. He wants to know from a near-term perspective, should he continue to hold or book losses? Rahul, any view on the charts for this one?
You're talking about Aeroflex Industries?
Correct, Industries.
Yeah, so chart structure is positive. He should hold on. The support levels are coming around 362.
Okay.
The next one's on Venus Pipes. Ram from Hyderabad wants to enter this counter right now. Tapan, at this price, would you recommend that?
No, don't enter.
Okay, the next one that we have is on MTAR Tech. Radhakrishnan from Bengaluru has bought it at the levels of 7,000. He wants to know whether he can average a little. His time horizon is for the next 6 months. Rahul, what would you recommend?
To MTAR Tech, I think the structure is quite weak, and in coming days also, I don't see any upside. So I think he should use any jump if he sees. The downside limitation is towards 5,676 levels.
The next one's from Murthy from Andhra Pradesh. He wants to enter a battery stock, Amara or Exide, over the next 2 years. We've also had a conversation with them on the new energy business, so you can catch it on YouTube if you haven't. But Tapan, either that you like right now?
Amar Raja.
All right. Okay. The next one that we have is coming in on Dixon Tech. This is from Mohammad Danuf, who's writing us and asking about views on Dixon Tech based on recent rally. Rahul, on the charts, what would you recommend?
I think the rally which we have seen on Dixon Tech may continue, so I think he should hold on. And the upside, I think 15,700 and 16,000 levels are yet to come.
The next one's from Venkat from Andhra Pradesh. He wants to buy HDFC, ICICI or Axis. Tapan, all coming with earnings tomorrow. Should he wait and probably take a call then?
Yeah, you can wait, but my preference will be ICICI.
Okay, SG Mart is the other one. Our viewer is already holding at the levels of 614. There was also an initiating coverage on this one, I think, if I'm not wrong, by Nuvama today. But any view on the charts, Rahul, as to whether it's looking attractive or not?
Yes, the chart looks attractive to me. It is showing good strength, and I think on the upside, 700 levels will come soon if the rally continues, and downside 620 will be the support levels.
Kiran from Bengaluru is holding on to V-Guard at 378, holding on for the last 1 year. Tapan, should he continue to hold on to V-Guard?
No, sell on rise.
All right, the next one that we have is coming in from Raj Shekhar, who's writing us from Hyderabad asking about HFCL. He's got around 500 shares at the levels of 77. He is holding this from a long-term perspective. Is that the right thing to do, Tapan?
Also, congratulations to him. Yes, hold it.
All right, okay, that brings us to the end of this first rapid fire round. But it's time to slip into a very, very short break. But viewers, we'll definitely be taking more queries on the other side, so do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura, Har Raste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Welcome back. You're watching Ask Profit right here on NDTV Profit. And as we take your stock related queries, do start sending them if you haven't already on the numbers that are flashing on the top of your screen. But the Nifty is continuing to be holding on to its gains at this point of time, and that's a good positive show, because we're back again at that 24, 200, 250 odd levels, and still yet to recover those 24, 400 odd level from where the global market geopolitical crisis has started to have an impact on the Nifty 50. So that is expected to continue at least for today. Have a good week, have a good end to this week hopefully, but also the advance decline ratio as well. If you can pull that up and see if there's been any change, not too much. The declines continuing to be having an impact on the advances, and also the BSE 500 too. Because you have seen more individual names that have been buzzing, and Relaxo, PNC Infratech, Campus are some of the ones which are continuing to gain in trade today. Relaxo also, after a really long time, we are seeing such a good strong move on the counter, while CAT on the back of results continues to be down by almost 7.2%, and the real question continues to be of how much impact will we see of raw materials in Q2 as well. And as we spoke and we discussed PNC Infratech up almost 4%, they've also come out with an exchange filing about a new project win by NHA as well. So all of those stocks, individual stocks that are continuing to buzz in trade today at this point of time. We also have Tapan Doshi, who's continuing from the previous half an hour. Devin Mehta, manager, technical and derivative analyst at IDBI Capital, now joining in. Devin, thanks so much for joining in as well. Let me go across and take the next stock related query, and this one is coming on Cyient DLM. Now, stocks actually seen a good run up. Let's pull up the counter of this week, the last month if we can. He wants to know if it's a good counter to enter, and this is Srinivas who's asking us this question on Cyient DLM. Q4 results, Tapan, largely weren't the greatest, right? I mean, FY26 is a year, it's something that they can write off, but the stock's up almost 24% in this month. What do you look at the stock as right now? It's cheaper in the EMS pack, but the performance is not justifying it, right?
Yeah, correct. Performance was not so great, but still I am hopeful with this stock. Now, if you see the defense and aerospace demand is going to go up, again, the order book is quite robust. Of course, there was a execution problem and their working capital, that is where the putting pressure on the profitability. But I think electronics manufacturing for them is scaling, export opportunities are coming. So at around EBITDA margin around 13.5%, I think that's a good thing in EMS sector. Healthy order book. So I am positive on this. So yes, you can hold on this stock for a little bit longer.
All right, okay. The next one, I think we've got a caller. Vaishak is calling us from Mysore. Vaishak, very good morning to you. Go ahead, ask your question.
Yeah, I have 1,348 shares at 121 rupees at Canara Bank. So any views on it?
When you bought this, Vaishak, was it the charts that you saw, or did you see the fundamentals?
I just saw the fundamentals and I brought it. I just got it on 8th July.
Okay, all right. Got your question. I'll take this up with Tapan then. Tapan, Canara Bank, what's the view like?
Now hold on to the stock, because if you see, I think credit growth guidance is around 12 to 14%, and retail loan mix is expanding, and Canara Bank is doing well. Their NPAs are in control. If you see ROE is going to expand. Of course, treasury gains may normalize, which was there earlier, lot around, but strong asset quality improvement is there. So yes, please hold on to the stock, and I think it may do well.
Got that view. But the next one's Uno Minda, and Venkat Ramani from Bengaluru is holding these shares at 890. So bought at a very attractive price actually. Asking if she should continue to hold her 600 shares. So currently in profits of almost 1.5 lakh rupees. Wants to know a slightly more longer term 12-month view. But Deven, how are you seeing this counter? Very good morning to you. Because she also bought it at a very attractive price, right? And I think between that 1,000 to 1,400 range that has been going on, given the current state of affairs, should she continue to hold?
Yes, good morning. I think the way stock has moved and the buying price is very much attractive. So I think one can hold this counter. One can keep a trailing stop loss of 1,100, just 50-55 rupees of risk from this particular level. But I think that can be the good risk reward ratio. There is a slight resistance on the higher side, which is 1180. But if the view is a bit long term, then I think definitely one can hold. Once the stock surpasses 1180 levels, we can see stock moving towards 1250. So overall, one can hold. The structure is good, and obviously the buying price is very much attractive.
All right, okay. The next one that we have is coming in on NetWeb Tech, and this is from Siva, who's writing us from Vijayawada. He wants a view on this particular counter. Tapan, I'll stick with you for this one because it came out with its earnings. There was also a BOFA note that initiated a coverage on this one, but it's also run up quite a bit. What would you recommend on this one?
Yeah, of course, the valuation is on a higher side, no doubt about it. But you can say the AI server demand is going to be strong in future. And this is one of the company who is supplying it. And 2027 growth will be much, much better. You see AI HPC pipeline is expanding. Again, global hardware demand is rising. They can export also. So it's a strong cash balance sheet, but problem is the valuation. So if he wants to enter, I think better 15-20% down he can enter. But long-term prospects looks good.
Got that view. But the next question, and this one's from Kaushik, who's dialing in from Mysuru. Kaushik, very good morning to you. What's your query?
Hi, sir. Good morning, sir.
Good morning, Kaushik. Go ahead with your query.
Sir, Tata Elxsi 100 quantity in average price of 3,700. Current level profit loss, sir. 21,000, sir. Seller road, sir. Please technical analysis, sir.
Okay, got it. Got your question, Kaushik. Deven, what would you recommend on Tata Elxsi? I mean, he's currently sitting on loss of almost 21,000 rupees. Should he wait back for his buying price of 3,700 to come back, and what would be a strategy then as well?
No, I think the overall structure remains weak. If you consider daily, weekly charts, I mean, we have seen continuous lower top, lower bottom formation in this particular counter, and from last 3 days, the stock is consolidating, but after a breakdown near 3,590. So I think one should try to exit at current levels or try to exit on small bounces. But again, as the structure is weak, I think one should try to exit.
All right, okay. I think the next one that we're going to talk about is Nelco. Overall, in terms of where the numbers go, it's been a steady quarter. Of course, profit did see a jump of around 30% odd. But to try to understand as to how the quarter has gone by and how things are kind of shaping up and what FY27 is going to look like, we're now joined by Mr. PJ Nath, who's the MD and CEO of Nelco, joining us now. Sir, thank you so much for taking out the time. I think my first question to you is that this quarter has been on a good footing, but overall, if we take a look at how in the last 4 years the company has done, the revenue growth has essentially been in that range of 300 odd crore only. So just wanted to get a sense as to what is the way forward from here. What is going to be the growth trigger in FY27, and any targets that you have in place for the top line growth?
Yeah, thank you for getting me in. Yes, you're right that the revenue has been flat for the last 3 years. We have started the first quarter in a positive note, particularly from the bottom line perspective, and then we believe that this will continue. You are aware that in satellite communication services in India has been a very niche segment. We have been waiting for some of the newer technologies to be allowed into the country, which has got a bit deferred. So that has been one impact. But in the meanwhile, we as a company have been creating a lot of new services, new markets. new infrastructure using the geo-satellite capacities which are available. We have got the most extensive multi-frequency band geo-satellite infrastructure today from extended C, KU band as well as Ka band. So these developments have happened in the last couple of years, and therefore we see a fairly good prospect for us in FY27 in terms of getting a new business from the new markets that we are creating, and that we hope will get further improved with the LEO services being allowed into the country in the next few months.
Give us more perspective in terms of what this new pipeline looks like. What is the order book right now? Plus, in terms of where competition goes, because there are new entrants in the space that will compete with you going forward. So, give us more sense on that.
So I would not like to give any specific number because we normally do not give any guidance on any numbers. But I would like, therefore, try to explain in terms of the way we see the market. As I said, we are a technology agnostic service provider and multi-orbit service provider. So we are doing quite well in terms of the geo-satellite capacity, the services. And as I've already said, we got all the frequency bands right now, extended C, K, UK. And therefore, we are in a position to create very, very unique solutions for each of the market segments. So that's one part.
Mr.
In terms of the news, sorry, you're saying something?
No, Mr. Nath, please continue your point.
So in terms of the new operators which are coming, we see it as an opportunity. With new technologies coming, new be it in terms of geo-satellite operator or LEO satellite operator which are coming in, we see that to be an opportunity because we get more technologies, more capacities to create unique solutions for our market. So that's positive for us.
Mr. Nath, just one question, because you spoke about these low Earth orbit satellites as well, and it's Puneet this side. Thank you for joining in. So essentially, would your customers would essentially be the likes, and just as an example, the likes of Starlink or OneWeb of Bharti Airtel, would those be the kind of customers in this particular product? And in terms of regulation too, you mentioned that that the approvals might come through in the next few months. But that is of course dependent on the government. So is it the fact that would be a correct understanding that it might take some time to come through? So what would be the immediate near-term FY27 trigger for growth for you?
For FY27, we are selling we continue to serve the market using geo-satellite capacity that we have. And in the last 1 year, we have also increased the infrastructure capability of ours. We've increased the capacity. We've added new satellites onto the network, and therefore we have got, and we also see some newer types of satellites coming in. So that will also give us a growth till such time that the LEO satellites are becoming operational in the country.
And would those be your customers then, Mr. Nath, the likes of Starlink or OneWeb, because they also have a lot of products? So just to get some clarity, when you mentioned that you want to go into low Earth orbit, the first part of the question is, would those be your customers, and what would be the products we'll be providing to them?
So when I say what I meant was that we are a satellite communication service provider. For us, the geo-satellite capacity and the LEO satellite capacity are inputs, right? And we combine them and offer a comprehensive solution to our customers. So to that extent, we will be utilizing all the geo-satellite capacities and the LEO satellite capacity that come over India and create solutions for our market. So that's what our game is.
Well, Mr. Nath, we leave it at that. Of course, a long conversation warranted, but thanks so much for joining in, giving us a view about the business as well as what Q1 looked like. We appreciate your inputs, but let's continue, with your stock-related queries now. The next one coming in is on Sterling and Wilson. Now, Bhavdeep, who's from Mumbai, has bought into this counter at 330, but he's holding almost 10,000 shares. So he's currently sitting on a loss, asking what he should do with this. Now, Tapan, I think the latest trigger on Sterling and Wilson was that the results were largely showing some growth, but the market wasn't having it. Given this massive holding of 10,000 shares, he's sitting also on massive losses. Would you recommend him to probably reduce his position on every rise as well as just continuing to hold, or what's your strategy?
See, today this is a bigger underperformer. This stock, I think from last 2 years in underperforming. Again, there are a lot of working capital issues. EPC execution risk is much more here. Again, international projects are delayed. Commodity price volatility is there. So, lot many negative are there. So, I think he should reduce his holding at every price. Because for the long term, I don't go for this stock. Again, there will be a pressure on solar EPC companies also. So yes, please reduce. I think there is too much of stake in one stock.
And I would also urge you to tune in on one of the days where we have Bhavdev also to when we have Samir Darar as a guest. He's been talking about this stock on our show. And probably preferably that would be also a good view to have along with the key pitfalls that the company has been facing, as Tapan mentioned too. But the next question, and this one coming in on Zensar Tech, another stock that's been actually performing very well. If you can pull up this week as well as a month's chart on with Zensar Tech, Subrata Mukherjee is holding shares at 525. So bought it recently. This week stocks up almost 14%. Tapan, should he continue to hold for the long term?
Well, here if you AI and cloud demand is accelerating, large deal pipeline is there, but I still feel the margin expansion will be gradual, and the stock has run up. So honestly, I'm not too much bullish on this stick. I think he should get out when there is a rise in the stock.
All right. Okay. The next one that we have is coming in, and this is from Jaya Krishnan, who's writing us from Kerala, asking about Polycab. He's looking at this from a 6 months perspective and wants a view of whether to enter right now or not. It's gone down significantly post earnings yesterday. Also today, also it's down by about 3.6%. Devin, what would you recommend on the charts?
No, but I think the structure is getting weak. Overall, we have seen a good rally, but we can witness some profit booking after results. So I think one should wait. Do not enter this particular counter. This can correct further towards 8,400 levels. So I think one should wait for buying fresh.
Got that view. Next one, and this is from the solar space. MV Photovoltaic. Rakesh from Hyderabad wants to enter this counter for the long term. Again, this week, I think the move's been very strong because of results. If we can pull that counter up today, down 4%. But this week, if you can pull the stock up as well, has been and was up almost 8 to 9%. So giving up some of his gains. Is this a good time, Tapan, to enter this counter for the long term? Or if you don't like this one, any other in that solar space, renewable space?
Well, honestly, I'm a little bearish on solar space. No reason, too much of supply is there. Again, margin pressure across the companies. Okay, of course, these stocks look like they are going to go up, but I think wind energy is a better space to be in and comparatively. So here, I think for this company also valuation is also on the premium side. Again, if you see the raw material price volatility is there, of course, their scale is going up, but honestly, I'm not too much bullish on it. So my recommendation will be sell.
All right, okay. The next one that we have is coming in on HPL Engineering. Uma from Bengaluru has bought 400 shares at the levels of 730 for the next 1 to 3 months. What are the targets that you're seeing on the charts, Devin?
It's HBL Engineering, right?
Yes, HBL Engineering is what I'm talking about.
Okay. So I think one should try to exit on bounce. The overall structure is weak. There is a support near current levels near 730. But if it breaches, then I think the corrective move can further come and we can see a decline towards 700 odd levels. So I think one should try to exit. If we witness a bounce back towards 760, so that can be a good levels to exit. Or if it reaches 730, then definitely one should try to exit with small losses because the stock can correct further towards 700.
But also, Devin, if you can ask one more on Ipca Labs, Gautam, who's from USA, wanted to enter this counter right now. At the current price, would you recommend it's a good one?
No, I think the stock has already rallied well from last 3 to 4 consecutive days. The stock has been making higher lows. We can witness some kind of a profit booking, some kind of a sideways move in this particular counter. But yes, definitely the structure is positive. So one should try to enter on dips. 1750 can be the good levels to enter. So one should try to enter this counter on dips near 1750.
All right, okay. So that's the view coming in on Ipca Labs. I think we've got Yogesh who's calling us from Jaipur. Yogesh, very good morning to you. Go ahead, ask your question.
Good morning everyone. Actually, I have IT shares and KBIT 200 shares. 671 by last month. And I hope that this was down last half an hour, 30% for IT sectors. So what are their views? What your views? That I want to know.
Okay, Yogesh, when you bought this, was it the charts that you saw?
No, yeah. I got it. Actually, that was correct. After that, it already more correct, 600 or 530. So that I am very shocked about it.
Yeah, I get your point, and IT has been a pain point for a lot of people out there. But Devin, for KPIT Tech, do you think that he should book his losses, continue to hold for maybe some recovery? What is the view?
No, I think one should try to exit. The overall structure is very big. I think this can correct further towards 450 gradually. So try to exit some partial quantity right now. Try to exit some other quantity on bounce back towards 580. But overall structure is big. Try to exit.
Got that view, Devin. The next one, and this one's coming in on Marico. Vignesh, who's from Bengaluru, wanted some inputs. If it's a good time to enter this counter at the current levels. I think Tapan, one of the stronger players, right, in terms of both the results, quarterly update for quarter one also was very strong. But has the stock run up a little bit? Would you recommend buying at the current price?
Yeah, totally agree. It's one of the best stock in FMCG. Every quarter they are giving a good result and volume growth is double digit, which rarely all the FMCG are not able to provide that type of result. Again, if you see from here also good growth will be there. Again, demand will be better. Food portfolio they are expanding. But as the stock has run up a lot, I'll wait for 10% down, then only enter.
All right, okay. The next one that we have is from Sumit, who's writing us from Jammu. He's asking about Radico Khaitan. He's bought around 500 shares. I'm not sure of his buying price, but he wants to know whether to continue to hold or sell because he's mentioned that his buying price is 450, which is, if at all the stock was at those levels, that would be an attractive level to enter at, but not sure of the buying price. But overall, structurally, Devin, what are the charts indicating for this one?
I think structurally the stock is very much good. I mean, the stock has performed really well. From last 5 consecutive weeks, the stock is making higher lows. So I think overall structure is positive. Definitely one should hold this counter. If the view is very short term, then I think 4020 can be the immediate support and that can be the stop loss. If it breaches down, one should try to book their profits. If not, if the view is slightly bigger, I think the next support on the lower side is at 3700. So if the buying price is really very at a cheaper rate, then I think 3700 can be the stop loss. And if the view is very much small, then I think 4020 can be the stop loss. But overall structure is positive, one should definitely hold.
Got that view, Devin. But it's now time for the rapid fire round in this edition of the show. Viewers as well as Devin and Tapan, you know the drill. Keep your answers as short as possible. The first one coming in from Viru from Bengaluru. He's holding on to 600 shares of JSW Cement at 120. Tapan, should he continue to hold?
Yeah, please hold.
Okay, the next one that we have is on Inox Wind. Ray from Bengaluru wants to know whether this is a good time to enter. Devin, what would you recommend?
No, I think one should avoid entering this particular counter. This can correct towards 75 level.
The next one's on GE Shipping. Ekambarai, who's a regular viewer of the show, bought these shares at 1300, asking 1350, asking if he should still continue to hold. Tapan?
Yeah, hold.
Okay, the next one that we have is coming in on Dr. Reddy's. Bala from Coimbatore is holding 30 shares at the levels of 1245. Right time to invest more, Tapan?
Maybe 5-10% down from here you can invest.
The next one's a view on the QSR space as well as RBA, which is Restaurant Brands Asia. Ram from Chennai wants to know on either of those. Tapan, would you recommend either?
No, both I'm bearish.
All right, the next one that we have is coming in, and this is on Crompton Greaves, and this is from our viewer Sarath, who wants to know whether to continue to hold this one, maybe enter right now. Tapan, what is your view?
Currently hold, enter at around 230 level.
Gokul from Chennai wants to know about Just Dial. He's bought at 827 Devin, so I think probably post the run up. Should he still continue to hold his 50 shares?
Yeah, I think hold with the stop loss of around 720.
The next one is on Cummins India. Raj Kumar wants to know whether he can continue to hold this counter or not. Tapan, any view on this one?
Yeah, please hold and buy on dips.
Vijay Kirti is holding on to NMDC at 91, holding 3,000 shares. Devin, would you recommend him to still continuing to hold for the next 6 months?
I think try to exit on bounce near 86, 88 levels.
Okay, KFin Tech bought at the levels of 928. 150 shares is what Padma from Bengaluru has been holding. 3 to 6 months targets on this one, Devin?
So I think hold with a stop loss of 840. This can move towards 920 and 960 level.
Sona BLW bought by Gaurav Kasare from Pune, holding at 586. Tapan is holding 170 shares, sitting in good gains, asking a 3 to 4 year view.
Yeah, hold.
Okay, the next one that we have is on Force Motors. Ravi Vittar from Bengaluru has bought it at the levels of 20,100. Should he continue to hold this one or sell out, Devin?
I think one should try to exit. The overall structure is weak.
Garware High Tech bought by Sumana from Dubai at 4,600 odd. 35 shares is what she holds. Is it a good time to book out, Tapan, as stock's trading at 6,800 odd?
Yeah, maybe 50% profit you can.
Okay, the next one is on DCB Bank. Mohammed from Dubai says he's holding 200 shares bought at the levels of 183. Is there more upside on this one from here on, is what he wants to know, Devin?
I think one can hold this counter with a stop loss of 178. The stock has resistance around 195. If it breaches that, 205 will be the next target.
Got the next one coming in, and this one's from Rajesh Maheshwari on ICICI Lombard. He bought these shares at 661. So Tapan, he's still in good gains. Should he still continue to hold? What's your view on the stock now?
Yeah, the stock has fallen yesterday, but currently hold.
Godrej Properties bought at the levels of 2184. Siva is holding 500 shares. He wants to know from a year point of view, continue to hold, Tapan?
Yes.
The next one's from Kathiravan on Wipro. Wants to enter the stock. Would you recommend that, Tapan? I think the results were very disappointing.
No.
Okay, PG Electroplast is the other one. Our viewer wants to know whether it's time to book profits. He's bought it at the levels of 472. Devin?
I think one should try to book partial profits and hold with a trailing stop loss of 575.
Alright, okay, that brings us to this the end of this rapid fire round as well as the show. Devin and Tapan, thank you so much for taking out the time and helping us answer almost 55 queries that we managed to get answered in the last 1 hour or so. But viewers, like I said, completely out of time on this edition of Ask Profit. But do stay tuned in because KYC is coming up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the nominees.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this show is one of the hottest in town, and I get you the best stories, and also is there any alpha to be made for your portfolio? I get all the details for you. But today also I've got a very interesting story, not tracked so much, and that is why we have these companies in KYC to show you the entire picture. But before that, try to guess it. What does the company do? They provide vessels for charter or hire to larger oil and gas companies. Second hint, try to guess it. Their clients include ADNOC, Aramco, and also they have large charting coming in from ONGC as well. But look at the stock from November 25 lows, it's up 80%. Try to guess. I'm sure there are 3-4 names by now. It's in your mind. The company is trading at a 60% discount on your 5-year average PE. A little bit maths, yes, but try to understand this stock is largely the offices are on land, but the products are on sea. I'm talking about CMEC. This is the company which we'll be talking about and understanding why they are announcing so many charter wins and is there any opportunity at play or not going ahead. The key questions to be asked in our show in KYC, the order flow, the charter rates, how is it looking like for the company? Is there any volatility at play or not? Second question I'll be asking is the vessel charter business cycle. How does this actually work? Oil and gas is so confusing at times, and at times it gets very difficult to explain. So we'll try to get that. West Asia crisis, is there any opportunity here? That's the big question to be asked. And the offshore exploration, how this is becoming a strategic necessity for India and what happens for the company in this. Also, India's government push for the exploration industry. What are the key numbers? How big the industry is going to get, the CAGR numbers, and the pricing pressure. Is that also coming up from competition? We'll try to understand that from the management and the acquisition and the asset monetization plans for the vessels. That's also an important point to talk about. So these are the key questions we'll be having a conversation with, and the whole time, Tech 10 President at Operations at CMEC, Naveen Mota, he is going to be answering all our queries. Let's understand the business, and it's a very interesting take. And yes, a lot of viewers write to me that Sharad, it's a very complicated sector. And this is where I come in and I'll simplify it for you so that you understand what's happening. It's a provider of diving support vessels, DSVs as we call it, and offshore support vessels. Oil and gas industry, they provide their support services. That's the first thing. Fleet includes DSVs, OSVs, and one accommodation barge. Barge is also very interesting, element, but that will come in short while, so stay tuned with us. The current operations include offshore shipping, bulk carriers, and also a small arm of tunnel construction. And moving ahead, let's understand more details about the company. It has a large charter with ONGC, and ONGC, there is a huge oil and exploration ancillary business. Nippon Mutual Fund has 3.6% stake, and promoter HAL Offshore, that's a legacy and a strong parentage, they have 70% stake in the company. Also, what you should know, धंधा कैसे होता है? सबसे पहले product तो समझो. So, diving support vessels, they specialize in shipping for offshore diving operations around a project. Secondly, barge. What is a barge? Barge specializes for transport for navigable waterways like a river or a canal. That is where they also have one product. So now we know the definitions of it. But do you know what is dry docking? Vessel is brought to a shipyard and removed from the water. This will definitely be there while we have a conversation in this industry or the company itself. These are something you should know. But how is the company gets onboarded? ये भी धंधा पहले समझ लो. And you can share it with your friends and understand what this business is all about. Oil gas discoveries are done, wells are established, exploration has started, then the company gets onboarded and it comes in as a partner for inspection, maintenance and repair services and other services. Remember, these services go till the end of a project. Let's understand the key clients, and these are the big names which I'm talking about. Locally, we have ONGC, but the bigger names, the international names, we have Saudi Aramco as well as ADNOC, Abu Dhabi. You could say Abu Dhabi entity from the sovereign fund itself. Apart from this, the story is the industry triggers for India. The India's oil field services market, they are expected to grow almost $1.6 billion. That's the first trigger. Second trigger, expected to peak around 2027, and the KGD basin projects is there. That's where the momentum is coming. A तीसरा point, $67 billion of investment expected to be spread across the next 2 to 3 years. So you can see the government push, how oil and gas and the shipping ancillary segment is playing out. These are the industry developments which are the positive triggers. Government reduced the royalty burden on the oil and gas producers. This augurs well. The second important point is the open acreage license policy. That is where a positive momentum or a policy is working out. ONGC appointed British Petroleum as technical services provider for Mumbai High Field. So this is a positive trigger coming in. So what may work for the company? Higher deployment of vessels. The news flows are coming in. I'm sure you're checking it. The government support in form of incentives, and it's continuously going in. So the long-term strategy is there. FIs have been increasing the stake. I'll point out the numbers also in our KYC ratings. Also, high return ratio business है, आ गया है, ROC, ROE दोनों अगर आप track करें तो. So that's something to watch out for, and strong parentage and client. So this is the moat, you could say, of the company. But what may not work? The West Asia crisis. That's a one risk which is there. Of course, opportunity also comes with a risk. The risk of writing off investments. They have done the UK arm. Will that impact their other international subsidiaries? And lack of analyst coverage. Hardly 1 or 2 analysts track this. So this is a little bit of concern. And the execution risk, because there is, of course, inherent nature of the business model. So this is the entire picture for CMEC. I hope I have done justice in my analysis for you. But let's understand the basic parameters where we will be judging the company. This, of course, includes the income statement, balance sheet, cash flow, the usual ones. There is return ratios. I have mentioned to you about the high return ratios. So I'm going to give you those details. Shareholding, how much FIs have increased. Street cred, has this been a multi-bagger for a long-term investor? I'll tell you that, and yes, it has been. But what it will be, I'll tell you in some time. Valuation, is it still cheap after a run-up from November? That's the question in your minds. And the outlook. Short-term, is it volatile? Long-term, is it structural? These are the questions we'll ask, but let's go first one to income statement and look at that. 3-year CAGR numbers, very strong. Look at revenue, EBITDA, PAT, all of them showing a good momentum. That means there's a structural change at play and company is doing well. The Q4 numbers, remember the Q1 numbers are not out yet. They have been very strong. A good momentum is coming in the counter, and the margin profile also, let's have a look of how things have changed, and now it's coming back from the 37 in the 30s. Now it's back to the 40s, 42%, and the management has guided that sweet spot of 40 to 42%, and I'm going to give that guidance also in some time. But let's go into the balance sheet. Of course, income statement is a strong thumbs up. Balance sheet would be a neutral, because of course the borrowings also go up. At times the working capital comes in. जब भी ड्राई डॉक होता है, इनका वेसल पे जब काम नहीं हो रहा है, ड्राई डॉकिंग हो रहा है, so expenses do accrue. At times they put a little bit of pressure on the P&L and also eventually balance sheet. But cash flows are decent, 188 odd crore rupees. So let's give it a neutral rating as of now for the balance sheet. So we spoke about income statement, we spoke about balance sheet. Cash flows, let's see what's there. Largely, let's take a benefit of doubt in our analysis. The numbers have been really strong. Look at the conversion which has happened in from FY24. It has doubled the cash flow from operations. The PAT numbers also has doubled. The conversions is still 100% plus. And it seems like they're managing their working capital ratios very properly. So I'm going to give this a strong thumbs up as well. Let's talk about return ratios. I mentioned you that the numbers are going up. These are the lower numbers. You know, the last 4 years, it was just 10 to you could say 14 odd %, but the magic, the ROC numbers, that has started coming in, and look at that, it's hitting at 20%. Now, will this continue or not? That's what we'll try to understand, but the standalone numbers still look towards the late teens or even early 20s. That's what the street is expecting. So it's a thumbs up for ROCE. Let's talk about shareholders. And one side, FIs have been increasing the stake and they have doubled. I mentioned you earlier, I'll give you that entire information. And now look at that, from 3%, it has been doubled to 6%. That is where the strength is coming in. But the other hand, DIs have been selling. So this negates. So net, I'm going to give this a neutral rating as of now for shareholding. But I had mentioned to you that if you're a long-term investor, it's a multi-bagger for you as well. Last 5 years, decent returns. The stock is up 3x. But even for the medium-term basis, look at the returns which have been coming for the investors from November 2025 lows. Stock is up 80%, and this year also 29% up. It's a good momentum coming in the stock, and all of the type of investors have made some money or the other in this counter. So I'm going to give this a strong thumbs up. And valuations, I'm sure you must be wondering, अगर stock इतना भागा है तो क्या valuations महंगे हैं? Well, there's a very different story here. Currently, 12-month forward P is just 15 times even after this rally. The 5-year peak was astonishing. This was 115 times. But then let's play it in a fair game. 5-year average still 42 times. That means after this run-up, on the 5-year average, it is still trading at a 50% plus or 60% discount. That makes this valuations attractive. The question is there any lumpiness profits coming ahead? That's something which we'll be watching out for. But as of now, valuations are strong and a positive one. Let's talk about outlook and see what's happening here. Almost 15% growth outlook they have given in top line and PAT, and these are not some, you could say, sequential aberrations, but yearly projections. The margins are that 40 to 42% band. That means 40% plus they are stating, and they'll sustain that. 10 development wells by ONGC, that PRP9 project. These are the offshore projects, basically, to simplify it, and the Reliance KGDC blocks. This is where the oil and gas industry is showing a good momentum, and more opportunities in Saudi Arabia especially is expected to come in. But let's take things with a pinch of salt. Short-term basis, rates, there might be volatility. So let's keep it neutral. I'm going to give this a neutral outlook as well. But let's try to understand how much has CIMEC got in the KYC ratings. And of course, then we'll have the management with us. Largely, the numbers are pretty strong for income statement and cash flow. Return ratios has changed, and also FIs have been lapping up. But street cred and valuation, this is where the returns have been made, and the valuations, despite the up move, are still attractive. So that's a good story about it, and totally on the higher side of the average numbers. I'm going to give this 6.5 out of 8. This is one of the highest numbers of our show in KYC, but we need to understand the entire story, right? For that, we'll have the management. Naveen Mohta is the whole-time director and president of operations at CIMEC, and Naveen has been here literally his whole career, 25 years in this industry, almost 26 and 25 with the group itself. He's a qualified CA as well as a Costworks accountant, and this is where his loyalty lies in the company. But it'll be very interesting to have a chat with Naveen, but just after a short break.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals.
Welcome back to Know Your Company, and we are joined in by Naveen Mohta. He's the whole-time director and president operations at CIMEC. Good afternoon, Naveen. It's always a pleasure to have you with us at KYC. And interestingly, a lot of announcements were coming in from your company on the hiring, on the charters, a lot of action coming in the oil and gas space, the exploration and stuff like that. But we want to understand a little bit before we start our conversation what this, entire business opportunity is coming up, and before that, how's the business model looking like, especially that vessel charter business cycle? What does this actually mean? Because largely your stock or your industry is not talked so much. So we just wanted to set the conversation कि आपका धंधा क्या है actually, and where do you come in this entire cycle?
Good afternoon, sir. It is always nice to be here, and hopefully that the way it is, the things are going up, looking up for the company, and we are hopeful that it will be very good for all the stakeholders and investors also. While on the front that you are asking for our what we are literally doing, so we are having the diving support vessels which are used in the offshore oil field from where the crude is coming. So crude is coming either from shore or from the offshore. So here in the offshore where the crude is coming, so we need to have infrastructure to put in place to extract that crude. So whatever the infrastructure is placed, everything is metallic and it is prone to corrosion and prone to damage. So what we do is that our specialized diving support vessel, from where the diver goes underwater and carry out the maintenance of those structure, as well as whenever new greenfield installation are done, so they assist in installation of the offshore structures. So this is what briefly what we are doing. And these diving support vessels are working all around the world. Currently, one of our vessels is working in Saudi Aramco field, and balance all are working in Bombay High.
Fair enough. Now we understood what cycle of oil and gas you are there in this industry, but I want to understand now the order flows and the charter rates. So this is something to look at, because charter rates is something at times they are volatile. Order flows also, a lot of charters are getting worked out. So could you just give us the trends here? How are things looking like?
See, we have consciously tried to build a mix of charter where we try to put maximum vessels or maximum assets on a long-term contract basis, so which are either 3-year to 5-year contract duration, but also to take the advantage of the some spike which takes place during the start of the season. We have got two vessels which are we use on the EPC contract or lump sum contracts. So we try to blend in this because that 20 long-term contracts are the major contract which provide the revenue visibility. So maximum number of vessels are deployed on that basis. So right now, out of 6 of our vessels, 3 vessels are on long-term contract and two vessels are on the short-term contract, which we do on seasonal basis. Season being from October to May of every year. Because during the period of May to October, this is the monsoon period. So most of the EPC construction activity stopped in the Bombay High.
Fair enough, and that is why, of course, the seasonality comes in. That's very nicely put up, Naveen ji. But there is always a crisis at play, and जब crisis होता है तो opportunity भी आती है. I'm talking about the West Asia crisis. Of course, you have some good order flow from Saudi Arabia. I know that, but how does this plan out for you? Is there any opportunity here? And if yes, can you quantify that opportunity? What can happen?
See, definitely, due to this ongoing geopolitical issues, we are looking at a lot of traction from Middle East, particularly from Saudi Arabia and Qatar. Right now, all our assets are deployed, so we are not able to take any advantage of these kind of requirement which are getting generated, and that's why we are trying to expand the fleet. We are looking for some acquisition. So let us see how this work out. But yes, of course, this geopolitical issues has created a lot of traction in the market now.
Exactly. So a lot of buzz is happening, and just moving on from West Asia, coming back to India. Now, does this become a strategic necessity? Because that word which you used in your con call, I was hearing it, it stuck in my mind. So what is this strategic necessity now for this offshore exploration, and where does your industry and your company stand?
See, in India, government has tried to, government has almost mapped the entire country, and it is the offshore where they have got the most of the opportunity or possibility of the oil. Mumbai High is the one which is continuing for long and is almost meeting 70 to 75% of the production which takes place in the India. Apart from that, now the new area which are getting discovered are also in offshore. The Kakinada and this Godavari KGDC basin is there, and new prospects are the Andaman Nicobar, which are from the report what we gather are going to be a huge discovery as and when this gets commercialized.
That's a pretty interesting take coming in. But apart from this, I want to understand the Indian government's push, the way lot of incentives are coming, the open acreage policy was there. So how does this pan out, for the industry?
See, from the purely from the standpoint of the our company and kind of work what we are doing, it is going to be a very good market coming for next 3 to 5 years, because a lot of work is going to be done in this area. And as we have seen that ONGC is quite bullish, and they are almost doing a capex of 20 to 30,000 crore per year, and they are also adding lot many infrastructure in offshore. Plus, now they are trying to improve the output from their aging field. So it provides a lot of opportunity for companies which are in offshore services for to increase the work. It is going to be a good opportunity for next 3 to 5 years.
Right, good opportunity for next 3 to 5 years. We have discussed West Asia, we have discussed India, we have discussed Indian government, and also the company specific, story. But competition bhi to hota hai. You mentioned there isn't much in the fourth quarter con call, but is there any pricing pressure coming in from the competition right now, or it seems like it's business as usual?
See, we are, as I told you, most of the assets, most of the vessels are on long-term contract basis. So we are having only 2 or 3 vessels which we deploy on short-term contract. And even for the short-term contract, we are getting fairly good response. So I do not foresee any kind of pressure on the margin or the numbers. Rather, we have seen there are slightly uptick is there.
That's a pretty interesting take coming in on that front as well. But apart from the competition, there's a lot of acquisition you do. There are some asset monetization. Just could you explain us, is there any cycle to it where you do asset monetization or sale, or you do acquisition? Just we wanted to understand, how does this work?
No, if you have seen the shipping companies, whether it is in main fleet or in offshore, everybody try to take the advantage of the offshore of the cycle. So when the cycle is good, they try to get rid of the vessels which they think that were not going to sustain or last long. And maybe when we are just looking at the uptrend, at that point of time, everybody want to buy the ship so that when the uptrend is there, they are not left behind. So this is what every shipping company do, and this is what we are also doing. We are trying to dispose the assets which we think are not going to last long or are not having the enough requirement, and trying to go into the acquisition which we think is going to sustain for the longer period.
Fair enough. So we spoke a lot about, sea. Let's talk a little bit about land also. And when I mean for that, I mean talk about the tunnel projects, because it's monsoon season है, टनल्स की बहुत ज़रूरत होती है, गिरावट होता है, स्लोप का भी एंगल होता है स्लोप को प्रोटेक्ट करने के लिए. So I wanted to understand this tunnel project business. How big is it, and what's the growth or outlook looking like? I don't want any numbers, but I want to understand where the story is going.
No, we have ventured into this tunneling project through a special SPV with a company where we have done the tunneling for this bullet train project. There has been quite a lot of challenges that we encountered during the execution of the work, and it is difficult to work, I would say, on the onshore, because a lot of interference from external factors are there, which are not normally there when we are working offshore. So even after completion of this project, we are still taking cautiously and thinking that whether we should go ahead in exploring more opportunity or whether we should just stay away from this. So we are we are looking for always for the opportunities. If there are good opportunity, definitely we will be in. But for tunneling kind of project, this is something there is a lot of restriction, then environmental issues and seismic zone and all those kind of things are there. So we are just staying cautious on that as of now.
And just wanted to understand, Naveen, any fundraising plans and the capex numbers, what will it look like going ahead? I'm sure you have discussed that in the fourth quarter as well. So just could revise that for us.
Hi, Sharad. Can I take this question?
Yes.
Hi.
Please.
So, the capex plan that currently is on the anvil is $70 million worth of capex we are doing in this H2.
Okay.
And then there is another capex that we are targeting, not identified, but targeting to augment fleet of DSV, which will be in the range of $100 to $120 million.
Okay, so that's the very interesting take coming in on the fundraising and the capex plans.
So,
but Naveen, it's always a
coming to
pleasure to have
fundraise,
you with
Sharad.
us. Yeah, Naveen, it's always a pleasure to have you with us, and thank you very much for giving the entire story for CIMEC and the growth plans going ahead as well. Thank you very much. So that's the management of the company CIMEC. Of course, they spoke a lot about the industry, about the country, and also the entire story of how the oil and gas ancillary space is heating up. But yes, has the stock run up a lot, or rather valuation still attractive? That's the key question here, and the bullishness coming in from the management as well. So for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and the jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory path.
Benchmarks hover near day's high with the Nifty staying above 24,200 level. Sensex jumps more than 700 points in trading session today. IT, financial services lead the gains, pharma and metals on the back foot. Wipro under pressure after a weak quarter. Tech company misses on the estimates. Margins lowest in 12 quarters. BFSI segment continues to be weak, while degrowth seen almost across geographies. Tech Mahindra reports strong numbers in Q1 with beat at all fronts barring the profit, with 11th consecutive quarter of margin expansion. The company is on track to achieve 15% guidance by FY27. Meanwhile, Jio Financial Services delivered a strong start to the year with growth across businesses, robust NBFC momentum. CEAT's revenue grows strongly in the first quarter, but surging crude oil prices and natural rubber costs sharply hit the margins, dragging the net profit to just 4 crores despite the healthy top-line growth. Oil prices are heading for the biggest weekly gain since April as the US-Iran conflict escalates. Fresh US strikes on Iran and growing supply disruption fears have pushed Brent towards $85 a barrel, reigniting the war premium in crude. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's take stock of the markets today. And yes, there is gaining momentum seen in the market. 24,200 levels and above that being comfortable is definitely good news for the Indian markets and Nifty 50, especially when the crude prices are at elevated levels around $85 to the barrel. Let's also take a look at what's really working in the market and what's really contributing. Big boy Reliance Industries, remember, they post their Q1 numbers today, top gainer at that, and that is really coming in. And apart from that, remember, the banking space, which is the quasi investment into the economy, is seeing some positive flows coming in. So HDFC Bank, ICICI Bank are the ones which are really gaining in trade. On the flip side, remember, some of the other counters like pharma, which was doing well in the earlier part of this particular week, that is seeing a down day today. And also high beta metal stocks like Hindalco are the draggers along with Bharti Airtel. So this is pretty much the snapshot at the particular moment in terms of the market momentum. And of course, lots need to be seen in terms of the global cues as well as the crude oil prices and even the rupee movement, which have been substantially impacted by the global scenario. Harshal Dasani, who's the business head at INV Asset PMS, joins in now. Harshal, a pleasure welcoming you on NDTV Profit. My first question, markets are trying to stabilize. Today, 24,200 levels conquered and comfortably is giving a lot of consolation, which was really seeing a huge amount of resistance. How do you see the market momentum in the current scenario when crude is flaring up?
Well, firstly, good afternoon and thank you so much for having me.
If you look at markets currently, yes, Nifty is up around 200 points and we're seeing some buying from the lower levels. But if you compare the broader market at this point of time, right, there's a strong selling in the small cap index and the mid cap index. That is because of the global cues that we saw. We saw some selling in the US market also yesterday. We saw some selling in Taiwan and Korea markets also. So overall, the global cues are a bit negative at this point of time because once again, the uncertainty around the war has picked up. And as I always say, the markets do not really have a problem with the negative news, but they have problems with the uncertainty around the negative news. And you see, today, just Nifty is performing because banks, Reliance, and IT have been holding up the index. But overall, if you look at the broader markets are in a sell zone. Well, for me, what I have done is I've created a very simple framework to analyze the markets on the basis of crude. Till crude is ranging between $80 to $90, we are going to see the markets in a sideways zone. If the crude slides below $80, that is when we are going to see some spark or a rally coming into the market. And if the crude surpasses $90 and trades back above $90, that is when I think that the market should see a weakening. So right now, I feel that the markets are currently in a consolidation phase between $80 to $90 of crude range.
Right, Harshal, and very, very, nicely put in terms of segments compared to the crude oil prices, because clearly it is coming out to be the single largest factor. And what the economists have also been penciling in for this particular financial year has been an average of $80 per barrel. And looking at the crude prices, even after the war uncertainties coming back, we have that average being maintained or lower than average, at least so far. So that is giving some comfort. But Harshal, looking at the earnings momentum, and some of the earnings have already come out. Let's focus first on IT sector. Two of the companies really reported their results yesterday. Wipro has, and it's a mixed bag. Wipro has not performed as per the estimates. Tech Mahindra is doing better. TCS as well as LTM and the others also gave out some of the positive commentary which the market liked. How are you really looking at this sector, and are you already making a distinction between the performers and non-performers in top 5?
Well, for me, IT has been a bearish bet for the last entire 1.5 years because the major structural tailwind that the global markets are having right now is the AI and the semiconductor one, right? You saw Korea and the Taiwan markets doing fantastic, taking over on the Indian markets. But Indian markets have clearly not performed. They're not undervalued. I would rather say they're underperforming because the biggest sector out there, which is dragging all the markets up, the closest sector to that in India, Indian IT, is dragging the markets down. Even if you closely look at the Q1 results, right? They have been not positive, I would say they have been a little less negative. Because if you look at USD INR at this point of time, as you were mentioning at the start, we see a record high in USD INR. It's at 96. And when the USD INR is at 96, you see IT and pharma companies are the two sectors. These are the two sectors that benefits the most out of that. At 96 rupees a dollar, the IT companies are posting a growth of 1.5%. And if you actually check in constant currency terms, they are putting a negative growth. So if you look at the management commentary, they're growing at 2%. They're still growing at a single digit. So for me, a sector which is growing at single digit is absolutely not my choice at this point of time, when I'm going on a risk on mode, right? And even if you look at their P's, okay, people say that at this point of time, they're trading at a historical undervaluation. They used to average trade at a 25-30 P, and currently they're trading at a 15 P. But my simple argument to that is a company growing at 1.5 to 3%, can it command a PE of 15? For me, even a PE of 15 is very high. It's just the domestic institutional investors that have been constantly supporting the IT companies because FIIs have been constantly dumping it. Because as an FII today, if I have an option to invest into TCS and NVIDIA, very honestly, I would go towards NVIDIA because that is where the real growth is. That is where
That's right. The risk trade-off aspect that you mentioned, that is also playing out in the IT sector, which is global in every way possible. Harshal well pointed out this particular point. But let's also talk about the different segments and pockets. While Nifty 50 may be gaining and is showing comfortable results right now, 0.8% up and maintaining that, but it is not really giving giving the real picture of the overall market momentum, because the mid-cap universe as well as the small-cap both are down closer to 1% in trade, and we can focus on that. What's really happening in the broader market, and what is the sentiment mismatch that is really taking place? Is it that in uncertain times it is back to the flavor of the big companies, the solid companies where the money is flowing?
Well, for that, you need to look at the markets not from today's perspective, but probably from a month's perspective, right? If you look at Nifty right now, even if Nifty is outperforming mid caps and small caps today, right? Nifty is up around 1% and the small caps are down around 1%. But if you look over the last entire month, the small caps and the mid caps have been clearly outperforming the large cap index, that is Nifty, right? The mid cap index is close to its all-time high at this point of time. And if you look at Nifty is not even around 6-7% close to its all-time high. So I think that at this point of time, yes, today, specifically today, IT, we are seeing a dead cat bounce on the basis that we were expecting a very negative result on IT, but the results are negative. They are not positive. I would rather call this as a dead cat bounce. And after the Jio results, Reliance has been sustaining and Reliance has been on an uptick. But that is clear case that Nifty is performing, but the broader markets are not performing today. The broader markets are not performing because there is a little uncertainty around the global indices and overall around the war. But if you look on the larger horizon, right, small caps and mid caps are going to outperform Nifty on all the scales, because today when you study Nifty, right, what is Nifty made of? Nifty is made of Reliance, IT, banks, auto. These are the major sectors that are the composition of Nifty.
Sure.
IT is on a long-term downtrend, right? So IT is dragging the index down. And because of the AI disruption, I see a lot of consumption going for a toss, because when you see AI disruption coming in, a job that was done by 20 people is today done by 5 people. So there is going to be a massive layoff wave coming in. And when there's a massive layoff wave coming in, at that point of time, you're not going to buy auto and you're not going to buy real estate. So I'm seeing the consumptions going for a toss. So Nifty as an index is not an honest comparison.
Harshal, I am so glad that at least you raised this point that the job losses are going to have a direct impact on the consumption space and the overall economy, though with a lag effect. The earlier we really capture that particular theme, the better it is. Thank you so much for raising that point, because that is a very pertinent aspect, that consumption is intact in India only because there is stable job at the current moment. All right, thank you so much, Harshal. Always a pleasure chatting with you. Moving on, let's take it across to an NDTV Profit exclusive story. And sources tell your channel that the RBI is set to launch polymer banknote pilot soon, which will really precede the full-scale launch next year. Shrimi, my colleague, is here with all the exclusive details. Tell us, Shrimi.
Yeah, that's right. After announcing its decision to introduce polymer banknotes, the Reserve Bank of India is now set to begin the first pilot rollout as per the official sources. In fact, the pilot is likely to start with 10 and 20 rupee denomination notes, and that will help central bank assess the performance of polymer currency before a nationwide rollout. And a full-scale launch is actually from next year most likely. But do note that introduction of polymer notes will not replace the existing paper currency. Instead, polymer and paper banknotes will remain in circulation, with new notes being introduced in a phased manner. The rollout process has actually gathered momentum, with the RBI note printing arm floating a global tender, inviting expression of interest for polymer substrate sheet, the specialized material used in printing these notes. And this will of course, get more advanced security feature, making them more resistant to counterfeiting, etc. And the deadline for submitting the bid is August 18. So that's very important. But we reached out for comment, to the regulator, but it remained unanswered. But you will see a lot of action coming as far as polymer notes are concerned.
All right. Thank you so much, Rimi, for all those exclusive details. Now, let's shift focus to single largest factor for Indian economy as well as the markets. What's really plaguing is the crude oil prices, and that really getting a premium with the war resurgence in West Asia. And crude oil prices today, even though marginally in the uptick that is being seen, but it is finding comfort below $85 to a barrel, and that's probably also giving a positive sentiment to our Indian equities market. But this, remember, is far higher than the lower levels of $70 per barrel that we had seen when the war situation had really come to a negotiation stage. Let's find out from Peter McGuire, the CEO of Trading.com for Australia, and joining in now straight from Sydney. Always a pleasure chatting with you, Peter. So, of course, we knew that the volatility in the war situation will continue and that will reflect on crude oil prices. How are you seeing the overall momentum currently?
Well, good afternoon, Nisha. A couple of things. First off, as you know, it's up 10% for the week, and it's been a very, very volatile situation. You know, where is Iran going to sit itself? What's happening as far as strikes from the US, retaliatory actions, the Iran saying that they want to have an impact across the Red Sea, and of course Bab el-Mandab through the Houthis. So this is a very dynamic situation. It's live. It's very uncertain, and I don't think it's been put to bed yet, Nisha, in any fashion or form.
That's right, Peter. In fact, the war situation is such, it's very easy to start the war, but very difficult to come to an end with a peaceful negotiation. So that's something that all the experts have been stating. Looking at the current situation, what are your channel checks suggesting when we talk about the supply constraints from the Strait of Hormuz when it comes to oil as well as even the gas tankers? Because that has a direct correlation to the Indian economy.
Absolutely. You know, and it's all about supply. And if you crimp supply, as we know, Nisha, that's going to be a great impact as far as GDP growth, what happens across India and Asia. And if you have, you know, bottlenecks or you have other concerns, if that was to ratchet up from here, this is not a good sign from an inflationary standpoint. More hurt on Main Street as far as, you know, the consumption patterns and, you know, man and woman on the street buying fuel. All of those concerns are greatly impacting from a discretionary dollar spend and the GDP picture. So I would have thought it'd be over by now, but it's certainly gone the other way. And it's going to be, again, interesting how this plays out over the next couple of days from Iran's positioning and whether the US turns the heat up.
That's right. And also from the in-house view, Peter, coming in on the levels that you're seeing for crude oil prices, Brent crude is slightly on a negative tick today, below $85 per barrel is definitely good news given the current circumstances. But how do you see the dollar prices really settling in the current phase of uncertainty?
Well, the uncertainty is the key word, Nisha, and that is really the dynamic nature of the markets. Markets don't want bad news. They live on sentiment. They live on geopolitical concerns, and all of these factors are positioning themselves that if it was to escalate from here, then I'm sure that 85 to 90 is very achievable. Let's hope that it doesn't go to that point. But this is always the wild card. This is not a short-term situation. Everyone thought that the whole matter had been put to bed pretty much at the start of the month, and here we are on the 17th of July, and it seems to be heading in an uglier phase, not a better phase.
Right. So, Peter, you said $85 to $90 per barrel. Do you see a situation where the flare-up in the war situation can also lead to crude oil prices at the highest levels that we had seen in the last couple of months, above $120 per barrel as well? And what are the factors at play if they tip off, really, that crude can touch those levels above 100 again?
Well, it'd be massive retaliatory action from Iran, and it'd be an impact as far as Carg Island from the US, and it'd be probably creating much concern as far as supply through the Red Sea and Bab el-Mandab through the Houthis, and it becomes a very protracted and and intensifies. That's the issue. If it was to intensify, you can hit those numbers again. And that's the issue that we have at the moment, whether this is going to be a really short-term phase and it's all sorted by the end of the month, or we're here at this time next month and they've turned the heat up dramatically. That's the unknown.
That's right. And Peter, when we talk about the other precious metals, and they also had a fair bit of volatility because of the war situation. When we talk about gold, it continues to extend its losses. What are the levels that you're really looking at and factors at play?
Well, it's been, as we know, sold off. It was at 39.50, 39.80. It's back at 4,000 now. It's about $4,002 I've got on the screen. And you've got silver well down as well at under $56. So it seems to be, a downward draft. I'm thinking 38.50 to 3900 as a floor. Let's see, silver. Well, it's testing these support levels. Maybe you're going to see, the best part of a $53, $52 handle, and it's just a work in progress to see how long, the crude oil market, I think, is taking all of the energy and all of the heat out of it. So that's where the focus is. That's where traders are, I think, getting the best opportunity at the moment, Nisha.
And Peter, when we talk about the other metal prices, now they have had a rollicking time during the war situation, and some of the metal companies have really made their best profits, at least for this quarter. We are going to see that. How are you assessing the metal price movement and also the war impact as well as the upside that is seen? So the levels that you're really looking at when we talk about the other metals, ferrous and non-ferrous.
Yeah, sure. Well, if I look at aluminium, it's been big sell-off from the 3,500 handle down to what's at 3,185 at the moment on the LME, and you've had copper as well. So that's been sold off very, very aggressively, and maybe 3,000's the new handle. Just all the heat's come out of the aluminium market. Zinc's still holding at a pretty good price, and so is tin. And copper is sitting at the best part of 13,600 on the LME. So I'm still suggesting that their best time is going to be in the fourth quarter. We've just got to get through this third quarter issue, and let's see where it goes as far as global demand picture. We all understand from technology and data centers, AI build out, all of that, and the demand for the industrial metals is still strong.
Right, Peter McGuire, always a pleasure chatting with you and taking your expert take on all the commodities. Thank you so much for taking time and stopping by. Thank you.
Thank you.
All right, so that was all about the crude and the metal prices as well as the impact of war. Let's shift focus back to the Indian markets and let's see which are the stocks which are really buzzing in trade today and should be on our radar. In fact, my colleague Parth has drawn up a list. Parth, what all makes to your list today?
Yeah, with the markets in green today, overall, a lot of companies are buzzing right now, but here are the top three ones. The first one is Jio Financial Services. The company has reported a strong set of Q1 earnings, registering a growth across all of its business segments. The profits in the first quarter of FY27 saw a jump of 113% year-on-year to reach 96 crores versus just 45 crores in the same quarter last year. The company's NBFC vertical saw strong organic growth, while margins were led by the higher growth in its payment businesses. As a result, the stock has hit the highest level today it has seen in the last 2 months. The next one is Nilkamal, which has hit the highest volume today since October 2016. So almost 10 years since the stock has seen these kinds of volumes. The stock today has also touched the highest level in the last 5 months, and the reason behind this move is that Abacus Investment has bought around 2.8 lakh shares in the company. The last one is Heritage Foods, which has reported a weak set of Q1 numbers with profits down almost 38% year-on-year. The margins for Heritage were impacted by higher milk procurement costs and also input costs weighed on the profitability as well. As a result, the stock opened with a gap down of 2.5%, and up to the lows of up to the day's low, the stock had seen a downtick of almost 5%. The stock is now just 10% away from hitting another 30-month low. So a huge downside momentum is what we are seeing in this counter, and if it continues, it will be really bad for the company as well. So these are the top 3 stocks that you should keep on your radar for today.
All right. Thank you so much, Parth, for drawing up that list of stocks to watch. Thank you so much for joining in. Now, smart TV sales, they fall for a second straight quarter as price hikes really weaken the demand, especially in entry-level models. The premium TV demand really remained relatively resilient. Ridhima gets us all the key findings on that particular front. Ridhima, tell us.
So smart TV demand has reduced due to the rise in the prices, and the sales volume for smart TV has reduced by 5.7% in Q2. This number was 3% in Q1, and this is as per the IDC counterpoint and our channel checks. Now, there's been more demand drop seen in the entry-level TVs than the premium TVs. Sales volume for entry-level TVs has reduced by 6.8% in Q2, while for the premium TVs or your above 43-inch TV, the sales volume had dropped by 3.5% in Q2. Now, the main reason behind this is, of course, the price increases. In the entry-level TVs, the prices had increased by 17% in Q2, while for the premium TVs, the price increases were by 6 to 7% in Q2. Now, going forward in Q3, which is the July to September period, there is a price increase of 10% expected from our channel checks, and even the festive demand is, going to be flattish as per our sources due to the high retail inflation. Now, these are from the insights from IDC, Counterpoint, and industry checks. Now, stocks in focus include Dixon Tech, LG Electronics, Havells India, and let's understand why smaller TV prices are increasing more. Now, the main reason behind the price increase is, of course, the memory prices, which has risen by 4 times since 2025, and the rupee has also weakened, putting pressure on the import costs. Now, memory forms a major part for the manufacturing for the smaller TVs, which is why the more price increase, and for the larger TVs, more price comes from the display panels, which is why the lesser price increase in them. Now, premiumization is a trend which is continuing in the smart TV space. Now, the current market share for premium TVs is only 40%, while the entry level or the under 43-inch TV, the market share is about 60%. Now, this is changing really fast, where consumers are preferring to buy larger TV sets instead of the smaller ones.
All right, so the consumption aspect and the pressure building there. Thank you so much, Ridhima, for getting us all those important details. Taking a look at Nifty 50, yes, the gaining momentum really strongly continues, and a large part of it is aided by the banks, and the large banks like ICICI and HDFC really taking a charge on that particular front, along with the IT pack and Reliance Industries. But also the mid-cap universe continues to be on the downward side, 0.7% down on mid-cap index. In fact, take a look at some of the counters which are really gaining in terms of the mid-cap universe also, and that's coming in from also some of the sectors which are really gaining in trade. So we are talking about the real estate space where DLF is gaining. Adani Energy is one of the big gainers coming in, and also TVS Motor from the auto pack. With that, out of time on this edition of Markets at 12, but do keep it with NDTV Profit for all the news, views and market action. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अम्बा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech.
Welcome to NDTV Profit. You are watching Trending Stocks from NDTV Profit Suzlon Studio. I am Mahima Vachrajani and with me as always is Sharad Dubey and of course and he's joining us from the market pit and Sharad, tell us as to what's happening because we probably will end at the week's high point if things go as by because we are well above the 24,200 levels, but what are the key triggers for the market right now?
Well, good afternoon, Mahima, and you're right. And hopefully, we are near the day's high level, almost in that level. Now, is there a resistance play? That's something to look out for. But Nifty Bank also, let's pull out that and see what's the momentum looking like in the market. And it looks slightly better than that. But remember, it's the next 3 days will decide the interest rate sensitive stocks. I'm talking about the banking names, I'm talking about the Nifty heavyweight names. But before that, let me make you understand that we are going into an uncertain weekend. Nifty resistance, that range, we are quite close to it, 24,300, 24,400. Nifty Bank also the important levels to actually watch out for. But apart from that, let's get into the details about what things are going to happen. The interest rate sensitives and IT stocks, both of them are Nifty heavyweights. Almost 70 to 80% constituents comes from there. They are up. Profit booking is coming in pharma, so a little bit of sectoral churn is definitely there in the healthcare, and it's okay. The positions you should keep light over the weekend. A lot of things are happening. Geopolitical developments, your earnings, and of course, this is something which will keep us all on toes going ahead. Remember, rupee is also remaining weak. Some signals are coming on the macro indicators, but it might be too early. 35% of the Nifty 50 constituents will be reacting on Monday. This is what you should be watching out for. And also, the Q1 earnings today, the focus will be on JSW Steel and Reliance Nifty heavyweight as well. But Saturday is also going to keep all the banking analysts very busy. Why? ICICI Bank, HDFC Bank, Kotak Mahindra Bank, 8 large banks are coming, so that will be a very busy period. But a lot of things others are also happening here, and we will be talking about this. Everybody will be talking on July 20th, 12:30. It's like Sunday late night. We'll have this match, Argentina versus Spain. Question is, they are favorites to win the World Cup, and the Messi magic for one last time. That's what we'll be looking out for. So it's pretty much interesting, but yes, it's an uncertain weekend going ahead.
Yeah, uncertain and an exciting one. I mean, I would put it that way, Sharad, because there is, of course, the FIFA enthusiasm, but also in terms of where stock markets go, like Sharad mentioned, almost 35% of constituents coming out with their earnings over the weekend. So that's something that definitely we'll be watching out for. But let's also take a look at what stocks are buzzing in trade today and what's there on the watch list. I think two IT names in different ways, because Tech Mahindra Q1 has been a beat. They are on track to do the 15% margin. Stock, of course, gaining on the back of that, but you have Wipro, where Q1 was a miss in terms of where margins go. It was down by about 160 basis points, and that's why you see the pressure on the counter. Talking about pressure on the counter, I think CET is the other one where there was weak Q1 numbers. Overall profit plunged 96%. They've also announced heavy capex coming in. But Servotech is the other one that has secured a new solar power project, and on the back of that, you have the stock gaining well in trade today. In fact, we also spoke to the management. You can catch that conversation on our YouTube channels. Dixon Tech is the other one which rallied significantly yesterday on account of the PLI, mobile PLI coming in, plus brokerages have remained bullish on this one, and that's why probably you're seeing some profit booking coming in, but brokerages have still remamed bullish on this one. Adani Energy is the other one where MSCI inclusion is likely to be happening today. On the back of that, the stock is gaining around 3% You also have Nelco, where Q1 EBITDA was largely flat, but overall margins also saw a dip. In fact, we also spoke to the management today at around 11:10. You can again catch that conversation on YouTube channels. Geofinance is the other one where Q1 PAT, of course, surged 156%. There is a dividend bonanza also on this one, and that stock is gaining on the back of that. You also have Nilkamal, a fairly small counter, but Abacus has bought around 2.8 lakh shares in this one. Remember, yesterday Mrs. Bector's was one of those stocks where Abacus entered and gained quite a bit. Nilkamal is that stock today, which is also gaining on the back of the same news coming in. VWalk is the other one where losses, of course, have come down quite a bit on a year-on-year basis, but still they continue. I think the pressure was in terms of where margins and EBITDA go, but in terms of clean science, I think collaboration with Genus Chem AG is something that's proved to be on a positive, not on a positive footing, but the stock is, though the development was positive, but the stock is probably seeing profit booking in trade today. HCL Tech has been an outlier in the entire IT pack. It's been gaining since it posted its earnings, and a 7-year partnership with Guardian is something that's exciting the stock today as well. Eicher Motors is the other one where Kotak Security has gone ahead and upgraded the counter to add from sell, and on the back of that, we're seeing moves coming in for this one. Lastly, Heritage Foods is the other one where Q1 overall was a disappointing quarter. There's been inflation playing its part for this particular counter, where PAT was down around 38% on a year-on-year basis. So that's with regards to where our watch list go. But let's also now get in Sharad and get him to ask about all of these stocks to our guest for the day.
Thanks a lot, Mahima, for that. And of course, we are joining in by Sachin Sarvade. Good afternoon, Sachin. Always a pleasure to have you with us. We're starting our rapid fire round, and the first stock is Adani Energy Solutions, a positive corporate development, and we have seen a good technical build-up happening across Adani group of stocks. Your views on it, and this momentum will likely to continue going ahead, Sachin?
Yes, because the stock is actually going like bullish only, and it has actually changed the trend from up to down in all the time frames, basically daily, weekly and monthly. So the monthly targets in the next few months are coming around 2000 levels. So there is steam in this stock.
Right, so almost 10 to 15% upside potential for Adani Energy Solutions. Standard disclaimer also flashing on your screen. Another stock is Jio Financial Services. Very strong numbers, dividend income bump up also coming in from the parent company. I want to understand, is there any other technical moves, and if yes, what level should we be tracking?
So basically the trend for the G actually down. It is continuously making lower high, lower lows. Today also we can see it has taken the resistance around 100-day EMA. So this will be the move in case we are getting any kind of profits, then one should book profits and exit.
Right, the next stock is Nilkamal, and Abacus Group has been acquiring stake also in this counter. A good up move coming in. Yesterday we saw in one of the counters in Mrs. Bector's. Today we are seeing in Nilkamal also. Do you think this will sustain this buying momentum?
So today the stock has moved with the volumes basically, and it has surpassed its 200-day EMA as well as SMA. So from the last many months, it was not able to cross that, and today with volumes, if they are crossing, immediate hurdle for the stock is also very far away. It is around 1570 level. So we can see some kind of a momentum on the upside.
Right, and Sachin, your views on Eicher Motors? There was a broking upgrade. We saw initially the stock was doing well. It's up 1% but do you think there is a still consolidation at play and a proper breakout can come in this charts for Eicher Motors, or we need to wait it out?
So we need to wait it out because overall the trend for the stock is good, but the structure is not good. Immediate resistance are around 7600 and 7700. So there are multiple resistances on the upside. So we can keep this stock in a playbook, but not for the long term.
And Sachin, the last stock, Heritage Foods here. Of course, the numbers getting impacted and some volume sell-off also happening. Stock is down 2.5%. Do you think a good time to enter this stock, or should avoid a trade in this counter?
One should avoid this stock as the trend and the structure for the stock is not good. It is weak, downtrend stock. Whenever you are getting any kind of bounce, one should exit this stock.
Right. So that's the end of the rapid fire round. Over to you, Mahima.
All right, thank you so much, Sharad, for taking us through all of those names. But now let's try to focus on WeWork, because the company, of course, came out with its Q1 earnings, and overall, operationally, things have improved. Overall revenue saw an uptick of around 27%, EBITDA saw an uptick of 30-odd%. Losses have also narrowed, and EBITDA margins have also improved. To understand as to how things have shaped up, what is the way forward for the company? To understand all of that, we are now joined by Karan Virwani, who is the Managing Director and CEO of WeWork India, joining us now. Karan, thank you so much for taking out the time. First of all, Mahima this side. My first question to you is that, overall Q1 has been a strong quarter for you. It started on a strong footing, right? Just want to get a sense that operationally also things have improved. I mean, if I take a look at your operational area, total area, etc., members have also gone up. Occupancy is where there was a slight blip in terms of QoQ basis. Just want to get a sense as to what were the hits and misses this quarter.
Sure. Firstly, thank you for having me, and it's great to speak with you, Mahima. Like you rightly said, the business has been on a growth phase for the last few years. This is also another year with aggressive growth. So from a Q over Q basis, our operational capacity moved up almost 18%. At the same period, our member count moved up almost 30%. So members are outpacing capacity. That's led to revenue growing almost 28% and EBITDA growing actually almost 60% if you look at it on an IGAP basis, which is what we kind of look at. In the same period, profit or PAT has actually grown almost 6.5 times what it was last year. So, overall, the business is compounding and continues to kind of grow well. Now, what you spoke about in terms of the occupancy, yes, from a percentage wise, there's a small dip from the last quarter, but on an overall absolute term, there's larger capacity that's been added and a lot more members that have actually, been sitting. So typically what happens in our business is capacity comes in before revenue, and Q1, Q2 are a high growth, quarters for us this year. We're actually adding most of our expansion within the first half of the year. And so over the second half of the year, you'll see a lot of ramp up happening. And we're starting, like you said, on a very good footing, with high margins and good growth from last year.
The other aspect is, with regards to this new launch that I was looking at, and it looked very interesting to me. It's the new service launch that you've been doing. You've just recently kind of entered into it. Something related to member services. Give us more sense as to what this is about. What does this bring to the table, and how does this contribute to your financials?
Sure. So if you see the way that we think about the business evolving, we move from really being a co-working player, which was for small and mid-sized businesses, to becoming a full workspace as a service operator for extremely large global Fortune 500 and these large managed offices that we continue to do, we believe that WeWork will eventually move to being a fully integrated ecosystem over and above workspace as well. And a big part of that is the technology stack that we have and the ability to use that technology stack to deliver new products and services that are not necessarily linked to real estate, but allow the members or our customers to leverage us to be able to, tap into the best partners. So member services is a B2B marketplace essentially of different services that companies use while they're growing and expanding, that we have vetted, brought the best partners in, negotiated enterprise grade pricing. So whether you're a Fortune 500 business in our space or just a 5% startup, you will get access to these best partners at the best rates through the WeWork member services platform, and really eventually want to try to basically provide more value to our members over and above just workspace, so that they don't need to worry about any of this while they're growing their business. They should just focus on whatever they're doing, which they specialize in. And we are really the infrastructure backbone that allows them to kind of grow.
Hi Karan, this is Sharad here, and of course I'll talk a little bit of industry perspective from you. Mahima has spoken about the company specific. The GCC segment, that has been a driving force for an entire industry. The reports have started coming in. A lot of good momentum is there. Earlier, of course, there was a COVID play, which the street was looking like in your sector, and now it's a GCC explosion. Wanted to understand how big this industry is growing and what is your company growing at, so that we can get a little bit of market share picture from you, Karan.
So maybe to talk about the overall market itself, right? Commercial real estate today has, peaked in the first half of the year. It's almost 9% or 10% higher than last year. This first quarter alone, which is I think roughly about 24 million square foot, which has, been leased, is almost, growth of almost 18% from last year. And what's driving that, is some of this is like obviously GCC demand linked, but actually, in the first quarter, if you see, domestic businesses drove almost 45% of all the demand. And within that, flex operators has actually been about 27% of all commercial leasing. So today, flex operators are the largest category in terms of consumption of office space in the country. We are leading IT and tech as a segment. So the overall market tailwinds are in our favor, driven both by international companies as well as domestic businesses. So it's not entirely reliant just on GCCs. We see adoption happening through that segment, but also domestic and other businesses as well. And we continue to sort of see that adoption moving. Nearly 55% of all occupiers use flex in some way, shape, or form right now. So that shows you the type of penetration that we have across occupier segments, and that will continue to drive the industry moving forward.
Karan, the other aspect is that occupancies have been at a very strong footing, right? Be it on the premiumization side or otherwise. And we've experienced this firsthand as well. I mean, because you have a waiting period now, right? Just to get a space. But do you think that there is a supply constraint when it comes to cities where there, is more demand as compared to supply?
So what there is usually a speed of supply constraint versus the speed of demand. As you can imagine, in India, to get fresh supply of real estate up, there's, hurdles with approvals and actually delivering a lot of this new supply. Vacancy levels across the market today are the lowest. It's been even from pre-COVID levels, I think about 14% vacancy across the entire grade A market. So there is some tension there, but that tension is actually great for a business like ours, because if we have already existing supply and we're able to take on that supply quicker than end users, a lot of the demand flows through to our centers and then through the capacity that we basically kind of have. That being said, from our perspective today, we already have locked in supply of the remaining part of this financial year, as well as good visibility to FY28 and also some to FY29. So we feel feel like in a good place when it comes to the overall growth and pipeline that the business has. I think as of today, our AUM still has about 35% growth and capacity just from the levels that we have operational today.
Got it. And if I'm not wrong, I think FY27 guidance is to add around 28,000 desks. But you also mentioned 28 and 29. Can you throw us, some numbers in terms of where desk additions will stand at in FY28 or 29?
We will, I think, consistently be between, this 25,000 to 30,000 seat additions year over year for the next few years, as long as obviously these demand trends kind of continue. 52% of our growth is actually coming from internal members growing themselves. So there's a huge organic base that is growing within the portfolio that gives us a lot more confidence on, the growth coming up. But I would say there's the same range, Mahima, that we've been doing over the last few years. Last year was a bit lower. We did about 20,000 seats. This year's 28. The year prior to that was about 28 also. So I think we're, kind of just keep moving in the same kind of trajectory.
Karan, just one last question from my end, because in this quarter also, if I'm not wrong, you've mentioned that there has been debt reduction that has taken place. FY27, if you're planning to reduce debts, what would be the targets looking like?
So on a net debt level, we ended last quarter negative net debt, as in we had more cash than we had debt. This quarter we're slightly on the positive side, I think roughly about 30 or 40 odd crores. This is purely because of the peak capex cycle that we're in. Majority of the business is being, delivered through internal accruals and cash that we generate, which is usually, more than what we are able to spend. So we don't have any real need for large amount of debt, but we tap into it in peak times like this where we want to manage liquidity and cash flow. By the end of this year, we will be again net debt negative, on an overall basis. So the amount of cash on the balance sheet will exceed any gross debt that we have. And we think that's a healthy way of continuously kind of like growing this business. If you see, we've got approval for corporate restructuring process of removing our share premiums, etc. That is purely because eventually at some point we want to pay out dividends or do some share buybacks. And this will allow us to do that. Again, that's only possible because we'll have additional cash generation than the amount of spend we need for growth.
Karan, thank you so much for taking out the time. It was a pleasure speaking with you. We look forward to speaking to you when you achieve more heights. Thank you so much for taking out the time. All right, I think I'll also take a question with Sachin on WeWork because it's recovered quite a bit from the day's low point, though the stock continues to be under pressure. But any quick view on the charts for this one?
The overall trend for the stock is up only. Even structure is good, making higher and higher low. One more thing would like to add is today it has retested its previous breakout levels. Earlier it was resistance, now it is acting as a support, which is known as a role reversal. So I think buy on dips will be a very good strategy. Overall on the support side, 645, 608 are the downside supports. On the resistance side, we can see upside levels 786 and 908 in coming months.
All right, so these are the views coming in for WeWork India. Of course, stock down in trade as well, but kind of trying to moderate itself. But another group of stocks, the IT stocks, which are in focus yesterday post-market hours, we had Wipro and Tech Mahindra coming out with the results. Results are different. Reactions are also very different. But what's same is Jasmeet joining us. And Jasmeet, what's the exact impact analysis of both of them?
Well, let's start with the Wipro first. Let's quickly understand what's not working for the company. The first one is the numbers. We miss on the terms of estimate. When the margins are down to about 160 BPS and the margin slipped down to a 12-quarter low level. And why did this happen? The first reason is the wage hike which kicked in this particular quarter. And the second reason is the investment that the company has been doing for the AI deal wins. And the third one is the deal ramp up which is impacting the margin. If you look at the other key reasons, management has also few troubles across the BFSI which has been soft for the company over last couple of quarters. quarters, and also the Americas geography where there are few client-based issues. And lastly, we have also seen sub-segments like energy and manufacturing which are weak in this particular quarter, and that's impacting the particular stock as well. Now the second company, that's Tech Mahindra, have quick reasons what's working well for the company. While the first one, the management remains on track to achieve that 15% of guidance by FY27, and they also state that they will be closing FY27 by over 15% of margin, which is a key positive for this particular counter. The second reason is deal win. It remained over $1 billion for third consecutive quarter in a row. We are seeing good momentum in there as well. And the third one is the overall momentum that we are seeing. The company CC growth is up nearly 2.4%, the highest any large cap IT company has grown so far. So that's the reason why the stock is buzzing in today's trade.
Thanks a lot, Jasmeet, for that detailed analysis. Two stocks we discussed, Tech Mahindra and Wipro. Sachin, out of these two stocks, any trade is expected to be made here, and if yes, will it be profitable?
Basically, if compared to Tech Mahindra, Wipro is making lower high, lower low. So stay avoid category in the Wipro basically. But overall, Tech Mahindra has made a good base in last 2 to 3 months, and we can see today it is actually keeping a good volumes around that levels. But upside 1600 and 1700 is the immediate resistance, which is I think we should track for. But a trend is not good for Tech Mahindra, but yeah, it is improving the structure. So compared to both, I think Tech Mahindra is good.
All right, Tech Mahindra is the bet to take in the current technicals. But another stock, largely the news flows are not coming in this counter, but now it has started coming in. Large order win from Servotech Renewables, interesting mid-cap company, and Varsha is with us to make us understand what this announcement is, because its street is taking it very positively.
Yes, absolutely, and this is the another government-backed order for solar business for Servotech, and hence you're seeing the stock is spiking up. Well, they have the order is about for hybrid rooftop order, which they've received from UP Rural Livelihood Mission, and the total project capacity stand at around 900 kilowatt. Company will install system across 12 locations. Now this includes 75 kilowatt capacity, and the order also includes the battery energy storage system. But Servotech is not about only this story. The key triggers for this stock will be, of course, solar plus EV charging strategy, and they have also entered into retail business, which is the next growth trigger. They're expecting almost 50% revenue contribution from this segment in FY27, and also they are expecting BESS demand to grow up. And lastly, FY27 will be the utilization of the capex. So capex is largely done for this counter.
All right, thanks a lot for the detailed analysis, Varsha. But it's a very interesting take coming in, and the management also had a chat with us, and they were also giving quite a bullish opinion. But on the charts, what's the story looking like, Sachin? A quick view on it, whether any trade can be made here or it's still a consolidation play?
Continuously, right now the stock has changed the trend from up to down, and if it is crossing 116 levels, it has a very good potential. On the upside, 144 and 174 can be the targets on the upside. On the downside, 93 and 89 are the support levels. One can accumulate at that levels.
CED is the other counter, which is probably the accident of the day, and it's seen a downtick of around 6.6%. Not recovered, slightly recovery, of course, from the day's low point, but continues to be under pressure. This is on the back of the numbers it's kind of posted. Of course, revenue saw an uptick of 22%, but EBITDA is down by about 5.7%, and this is on account of higher raw material prices, which has impacted the Q1 performance. We've known as to how volatile crude was, and on the back of that, raw material prices inched up by around 33%. Gross margins took a hit of around 287 basis points, and the raw material basket cost overall increased in high teens, which caused that pressure coming in on both margins as well as the EBITDA. Even net profit kind of squeezed to around 4 odd crore versus that of 112 odd crore in Q1 FY26. So that's with regards to where CED goes. But Sachin, any view on the charts? Do you think this could be a buy on the dips or no?
Trend for the stock on a daily chart actually is down, but on a weekly chart it is up, so it is making some confusion. So buy on dips will be a good strategy, but the support levels are very far away currently. So 3300 is a good level to buy for the stock. But if currently the stock closes below 3530 levels, that will be the panic levels we can see, and then lower levels, what I have said, 3300, that will be then a good level to accumulate.
All right, Sachin, with that, thank you so much for taking out the time and giving us your perspective on the counters that we discussed that were, of course, buzzing in trade. But we are completely out of time on this edition of Trending Stocks. From myself, Sharad, and everyone who puts the show together, thank you so much for taking out the time and watching us. And do stay tuned. More news and updates on the other side.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back.
Benchmarks hover near day's high with the Nifty staying above 24,200. Sensex meanwhile jumps more than 800 odd points. IT, financial services lead gains. Pharma and metals were on the back foot. And Wipro underperforms its IT peers after a weak quarter coming in. Tech company misses on estimates. Margins lowest in 12 quarters. BFSI segment continues to be weak while degrowth seen almost across geographies. Tech Mahindra reports strong numbers in the first quarter, beat at all fronts barring profit with 11th consecutive quarter of margin expansion. The company is on track to achieve 15% guidance by FY27. Meanwhile, Jio Financial Services delivers a strong start to the year with growth across businesses, robust NBFC momentum. CEAT's revenue grows strongly in the first quarter, but surging crude and natural rubber costs sharply hit margins, dragging net profit to just 4 crore despite healthy top-line growth. And oil prices, meanwhile, are heading for their biggest weekly gain since April as the US-Iran conflict escalates. Fresh US strikes on Iran and growing supply disruption fears have pushed Brent towards $84 a barrel, reigniting the war premium in crude. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about Nifty 50, 200 odd point uptick that you're seeing coming in. When you talk about Sensex as well, about 800 odd points higher. So decent momentum when you talk about at least the benchmarks. When you talk about the small cap and mid cap indices, though, that's where you're seeing a little bit of underperformance really trickling through. So when you talk about small cap, that's down about 1 odd percent thereabout, as you can see on your screens. Mid cap as well, about 0.6%, 0.7% downtick coming through. When you talk about the entire list of sectoral losers and gainers, it's actually IT that makes it to the top of the list in terms of top sectors that are gaining right now. So that's up about 1.8 odd percent. Financial services is doing quite well for itself. Auto, Nifty, bank, realty as well, all of those sectors in decent shape. What's not doing so well is pharma, metals as well as energy. So those sectors are a little bit on the back foot. Now when you talk about from within the Nifty 50, Nifty IT pack, in fact, you do have Wipro that makes it to the bottom of that list, and even Coforge. Those are the top two losers from within the Nifty IT pack as well right now. So that's the entire picture as far as Nifty IT is concerned. You do have Tech Mahindra that's doing quite well for itself. TCS, Infosys, Persistent Systems, HCL Tech, all of those counters holding up quite smartly right now. And when you talk about the entire Nifty 50 pack as well, let's take a very quick look at the list of losers and gainers there as well. So you do have Jio Financial Services that's holding up quite well. 3.5% uptick coming in for that counter. Some of your tech names like Tech Mahindra, TCS, like I mentioned, in good shape from within the Nifty 50 pack as well. And Kotak Bank holding up quite well. Now, on the flip side, of course, you do have Reliance Industries that's in focus with that 1.8% uptick also, and it's key to watch out for the numbers as well. We get you a preview in terms of what you should be expecting when it comes to Reliance Industries as well, and that's also something to really watch out for. But Dr. Reddy's, Wipro, Hindalco, Cipla, all of those counters on the back foot right now from within the Nifty 50 pack. That said and done, let's also talk about the entire picture in terms of commodities as well, get you the check going as far as oil prices are concerned. And like I mentioned, some bit of rebound that you have coming in when you talk about oil prices. So some bit of strength that you're seeing emerge. When you talk about Brent as well, $84 a barrel thereabout, slight bit of an uptick. And when you talk about WTI as well, similar moves coming in. But when you talk about the entire picture on a weekly basis, it's a completely different picture that you're looking at, whether it be in terms of gold or oil prices as well, because when you talk about oil as well, it's the best weekly gain, the biggest weekly gain that you're looking at since the month of April as well. So quite some strength that you're seeing there in terms of the war premium returning. And when you talk about gold on the flip side, it's headed for the biggest weekly decline since June as well. So some bit of pullback that you're seeing, slip below the key $4,000 mark. And we'll also be talking about how the entire safe haven bit has really changed for the playbook for gold as well. In fact, joining us on the show right now, we have Kenneth Chainwala, AVP Commodity Research, Kotak Securities, as well as Vandana Bharti, Head of Commodity Research at SMC Group. Thank you so much for taking out time and joining us on the show. But, you know, first things first, Vandana, I wanted to take this across to you in terms of what you think is going to be happening for oil prices. And this is something that we've been talking about for a bit, right? It seems like the war premium is here to stay this time around, and you do have a lot of developments. It's very clear that the war right now seems to be a little bit of a longer term story. So what are you seeing in terms of key levels then for oil prices?
Yeah, hi Shreyanshi. This is a real concern as the war started in March, and that time the global inventories was on comfortable situation, but second time now the war has intensified with the higher scale. And this time, if we consider the US petroleum reserve, it is at the 40 years low. So this is a real concern for the market, and very soon we are going to see the $85-$88 kind of level, and that is the option positioning in showing us the strikes. They are heavily loaded near the level of $85 to $88. So that is a real concern for the market, and soon we have seen a very strong change in the statement of various governors of the Fed, and now they are indicating a rate hike in September. So higher prices or crude oil prices and higher interest rate scenario, this is a complete miss for the economy, and because of that the crisis situation is happening in the global economy. And silver, being the industrial metals and all, they all are moving down. So this is the ripple effect of higher oil prices on equity market, be it equity market, gold, silver, or any counter.
Absolutely. And Kainat, I also wanted to take this across to you. Try and understand what you think about oil prices, and we'll come to gold. And that's a bigger conversation as well, given that the entire safe haven asset conversation has really changed very drastically, right? But when you talk about oil prices, what's the highest that you can be penciling in terms of the levels? Is there something that you're watching out by the way of levels? Because, of course, $85 a barrel also. If a few months ago you sort of picked up the news and read about $85 a barrel, you'd be quite surprised as well.
Right. Hi, Shenzi. So basically, when we talk about oil, what we've seen in the last 4-5 months, it has been extremely volatile. And the upside in oil that we've seen, towards $120, $130 a barrel, it was because of the risk premium that was priced in. Okay. And, after the MOU was signed and we saw a quick unwinding of the risk premium that happened, pushing prices towards $70 a level, $70 a barrel. Now, again, we are seeing renewed tensions. What's different right now is that, Strait of Hormuz has been in news for the last 5 months. Now there is another strait that's come into picture, which is Bab el-Mandeb and Yanbu port. So now the thing is that, when we talk about these two, key corridors, Saudi Arabia, because Strait of Hormuz was having a lot of tensions, so it was kind of bypassing Strait of Hormuz, and it was using this corridor to export part of its oil. So almost 4 to 5 million barrels a day. Now, if Iran has already warned that, if US attacks its key civil infrastructure, its bridges, its power facilities, then it has, encouraged, it's kind of told Houthis to go ahead and, take control of this strait as well. So if this strait also comes under, tension, and if it comes under pressure, and if this corridor is also closed, then Saudi will literally have no place to, export their barrels outside the Gulf region. So that's going to be a major supply disruption concern. So if that happens, then definitely we are moving past $90. But that depends on how, the situation evolves over the coming weeks. Like as Trump has already said that if Iran does not come to the negotiating table soon, then we might have to, attack their facilities, power facilities, their infra. So if that happens, definitely it's moving past 90. But if the situation continues to be fragile, and if both, it's just a verbal spat, like what's going on right now, we might see crude oil comfortably sitting in $80 to $90 a barrel.
And when you talk about the choke point that connects the Red Sea to the Gulf of Aden as well, you do have some bit of commentary that has really come out as well in terms of Iran really doubling down and saying that the other choke points are something that they're really watching out for as well. You do have some commentary coming in terms of them really drawing the red lines on the Strait of Hormuz as well. So against that entire backdrop, I also wanted to try and understand if you think that higher for longer oil prices are a little bit priced in right now, because it doesn't look like the conflict, could get over. At the beginning, we were just sort of signing it off and thinking that it might just, be meeting a little bit of a peace end right now. But on July 17th right now, it seems like the entire playbook seems to have changed.
Right. What we have seen is that there has been a lot of back and forth conversations that have happened over the last couple of months. And that is why when this MOU came in and that 60-day negotiation window came in, markets were like pretty optimistic that, the things worst has come to an end. Clearly, that has not happened. Right now, what we are seeing is probably even worse than what we've seen earlier, because it will completely clog, exports from Persian Gulf region. Also, it raises the risk of attacks on, the entire Gulf region. And the infrastructure, and it could, have a ripple effect across, not just crude oil, it could have a ripple effect across other commodities as well, like natural gas. It could have an impact on metals. So this is definitely not a period where, we can say that, there is any, at least we are not seeing any resolution happening anytime soon, because both parties are clearly holding out on their points. US has been clearly mentioning about, they have taken a U-turn on the transit fee on Strait of Hormuz. But other than that, they are not able to come to a consensus on a lot of issues. And even Iran has remained very resilient about this, that they are not going to bow down, and they are not going to give the control of Strait of Hormuz, which is the main choke point. So right now, there is no resolution, we can see in the near term, at least given the statements by the both parties. If it happens, because we are already at the weekend, and we have seen a lot of things happening over the weekend. If there is some negotiation, because US has given a very short-term window for Iran to come back to the table. So if it does not happen by next week, then again, things could escalate, and we might see, again $85 to $90 range for Brent, and even above that if it holds and sustains.
Right, and absolutely, we're definitely penciling that in as well, and you can see that sort of tension and turbulence really being reflected in the oil prices as well. Vandana, I wanted to take it across to you and just try and understand what you think about gold prices as well right now, because it's slipped below that key $4,000 level, and this is a level that we've been talking about for a very long time. Right now, you do have gold really this week really taking a little bit of a hit as well, and we'll come to the safe haven bit in a bit. But before we do that, let's talk about the levels as well and what you're keeping an eye out on.
Yeah, so the new lower levels, they are in sight, Shreyanshi, because the 4,000 level, it has broken down yesterday. And if we see the new level now, it is 3850 to 3900 kind of level is there on card. And on higher side, now we can see the lower highs. And earlier it was $42.50 kind of level. Now this is $41.50, $4100. So we are moving in downward channel on chart. And if we talk about in terms of demand, physical demand, it is totally contradictory, because if we talk about the physical demand, the central banks, they are buying, China is buying on record pace. We have seen the GLD inflows in the vault yesterday, it was on the record pace. So yes, the panic is there, but yes, institutional players and big players, they are now into this ETF and physical buying things, and prices should move down towards the level of 3850, but that will attract the physical trader of this commodity. And on if you consider the MCX, the lower level should be of 1,37,000, because we are considering the premium on depreciation in INR because of the higher crude prices. If it goes towards the level of 97.5, the lower level of gold should be of 1,37,000 in MCX, and the resistance is now near 1,45,000. So clearly the trend is down. But yes, the key is in the hand of Trump. If he comes with some kind of a statement that, again, we are on the negotiation table and we are talking, suddenly you will see a jump from the level of $4,000 towards 4150. So market is completely reacting on Trump's statement and how Iran is retaliating. So these are the major concern on, because over on that, even dollar index and US Treasury yield is reacting.
No, absolutely. And the key really is right where you said, Vandana, it is, because that's something that we've been seeing, that the markets have been reacting to every single statement as well. But, Kainat, I also wanted to take it across to you and try and understand that safe haven bit that I mentioned earlier as well. Do you think that the safe haven narrative has fundamentally changed as well? And do you think that there's a little bit of a disconnect there? And also, can the gold rally then sustain if oil really remains elevated, with the Fed also turning more hawkish? What do you think about both of these aspects?
If we consider the safe haven buying, we consider it in gold, dollar index, we consider it in gold, and we consider it in Japanese bond yield.
Yes.
And the two other things, they are moving on, they are on class, and gold is taking the back foot because of the dollar and all, because of the it's a negative correlation with the dollar. So more we talk about the interest rate hike, more we talk about the inflation is going higher, it is giving like more signals to the interest rate hike in the month of September. Because of that, gold is trading very silently in negative zone. But yes, the two safe haven counter, that is Japanese bond yield and US bond yield, they are on the multi-year highs. So safe haven, they are in those two classes, and gold is on back foot. But yes, the recent correction from $56 to $4,000, again, it is going to be very attractive.
No, absolutely, and thank you so much. That's a very valid point as well, Vandana. Kainat, I also wanted to just check in with you in terms of the safe haven narrative fundamentally changing, and what do you think can really get it back as well if you think it's changed?
So basically, throughout this conflict, what we have seen is that, the safe haven, I mean, everyone was expecting that since this is a full-blown war, we will see some, uptick in gold prices, but the contrary has happened. And why that has happened is that because, this conflict it's the rate inflation transmission basically. So if the interest rates are rising and yields are rising, then gold, which is a non-yielding commodity, it loses its appeal, right? So that's what happened here, that the inflation rate transmission has happened. Other than that, also what we have seen is that the liquidation thing, initially when there was, very high panic, we have seen that traders have gone ahead and sold everything, including gold, to liquidate the asset and have money in hand. So even that has happened here. So I think when we are talking about gold safe haven, it's not lost, but in this case, it has not been very straightforward, because the crisis that has happened, it has changed the interest rate outlook. Okay, because when we started this year, we were looking at 2 to 3 rate cuts. And now, after this crisis happened, this war happened, then we were looking at almost like 1 to 2 rate hikes. So that's a complete shift in monetary policy. And whenever, of course, it's a rate hike, it's negative for gold. And that's what happened here, where we have seen almost like 30%, fall from the record highs of 5,600 that we saw earlier this year. So yeah, that's what has happened this year. And the one thing that's been supportive throughout for gold is the central bank buying. But having said that, what is most important is that Fed chair and even the Fed officials have clearly mentioned that inflation remains a priority. Now, if we take a look at the crack spread, 3-to-1 crack spread in crude oil, it clearly indicates that, the pain point is more about the refining capacity. Okay, they're not able to convert fast enough crude oil into the products. And if that happens, if the product market is tight, it is going to lead to higher fuel cost. And higher fuel cost is going to feed into higher inflation. And if that is going to happen, then June CPI print that came in, it will be just one instance where inflation has fallen down, and the other inflation prints that are going to come in will definitely be higher. And that is why I feel that gold is going to be remaining under pressure until this conflict is completely de-escalated. It might see ups and downs depending on the data and the news updates, but we don't see a very sustained upside in case of gold.
Absolutely, and thank you so much for taking time out and joining us this afternoon. So there you go, that's the entire safe haven puzzle as well that we've just about managed to solve in terms of the top factors why gold has been trading differently as well. But let's also move on and get you an interesting update in terms of first. Now, E20 fuel ruling. The Raipur Consumer Commission has in fact ordered Maruti Suzuki to replace a Grand Vitara after finding it incompatible with E20 fuel, and the company plans to appeal the order. Nimit Dixit joining in with some more details here.
The first case now relating ethanol blending of fuel has come up before Raipur Chhattisgarh's Consumer Forum, and the court has found and has in fact ordered that the car be replaced with an E20 compatible fuel, finding that the car itself was not. Now the complaint that was made was that the engine was stalling, the car was stopping a lot, required multiple repairs, and what was alleged was that this was because the car is not compatible the E20 fuel that is being supplied. Now Maruti Suzuki, the dealer itself said that this is not a fuel issue, this is not a blending issue, but this is because of contaminated fuel use from the stations that you get it from. But the commission has so far found, and we don't know the technical analysis that was done here, but the commission has found that yes, this was non-compatible with the E20 model, and now it has asked Maruti Suzuki to replace that car with a one that is compatible with E20 fuel, and in case it can't replace, give the full refund back of 20.5 lakhs. Now Maruti Suzuki has denied the allegation that its car is non-compatible with that fuel. It will be appealing this order, and it will be very interesting to see how this case comes through in the appeal systems and whether we see other cases around the similar allegation in the future.
No, absolutely, and thank you so much, Nimit, for joining us with that entire update also coming in. This is very interesting and very important to really watch out for. But speaking of interesting and important to watch out for, let's talk about PM Modi flagging off India's first hydrogen-powered train. And the train is going to be running on the Jind-Sonipat route as well in Haryana under Northern Railway for the first time. Hydrogen fuel cell technology is going to be used in India, and you do have NDTV's Aishwarya Jain bringing us the ground report from inside the train.
Hydrogen powered train that has been flagged off from Jind to Sonipat. The entire ecosystem has also been created in Jind. There is an entire operations with the capacity of 3,000 kilograms of hydrogen cylinders that has been kept just nearby the station of Jind, which can refuel the train in just minutes. That will take certainly 15 to 20 minutes of time. The sound that I can hear while traveling to this train is very less in comparison to the trains which are diesel powered or electric powered as well. And certainly it's a major game changer sector. Perhaps this is a very short route of just perhaps 150 kilometers, but the speed that this train can run, which can go up to maximum of 150 to 170 kilometers, but currently it is running at 75 kilometers per hour, and this will take at least 2 hours from Jind to Sonipat to cover as well. Certainly it has all those safety precautions as far as the coaches are concerned, which completely adheres the rules of the safety measures. The SOPs has been followed duly by the Indian Railways to build this train, and there has been also these these signboards that you can see, welcome to Namo Green Rail, and the different stations can be also seen clearly flashing on this screen as well. Every coach has this, so 8 coaches plus 2 1200 kilowatt powered hydrogen engines in this particular train, and this train now is running at 75 kilometers per hour of distance. India now has its own hydrogen powered train and became and now is certainly in that close combat of these countries which have the hydrogen experience so far.
Absolutely, and thank you so much for joining us with that very interesting ground report as well. But let's also move on and talk about some of the stocks that are in focus right now. So something like a Jio Financial Services, Nilkamal, or even Heritage Foods for that matter is going to be in focus right now, and has been in focus as well in terms of Heritage Foods, with that little bit of downtick also coming in 3% as well. Parth, let's talk about first things first, Jio Financial Services. That stock is definitely buzzing away in trade.
Yeah, sure. So Jio Financial reported a very strong set of Q1 earnings, registering growth across all of their business segments. The profits in the first quarter jumped 113% to reach 96 crores. Their NBFC vertical saw very strong organic growth, while margins were led by higher growth in the Jio payment solution business. And as a result, the stock has hit the highest level today it has seen in the last 2 months. The next one is Nilkamal, which has seen the highest volume today since October 2016. So almost 10 years since the stock has seen this kind of volume. The stock has touched the highest level today in the last 5 months, and the reason behind this move is that Abacus has bought almost 2.8 lakh shares in the company. And lastly, Heritage Foods, which has reported a weak Q1 numbers with profits down almost 40% year on year. Margins were impacted by higher milk procurement cost, and input cost also weighed on the profitability as well. The stock is now just 10% away from hitting another 30-month low. So these are the 3 stocks that you should have on your radar for today.
Absolutely, and thank you so much, Parth, for joining us with that update as well. Let's also put the spotlight on a very interesting conversation. You do have DD News speaking to the RBI governor as well about the geopolitical tensions in West Asia and how the progress of southwest monsoon is the biggest risk to India's economy. Let's go across and listen into a slice of that conversation.
जोखिम जो आपने कहा जी, जोखिम में जो बाहरी क्षेत्र की जो अनिश्चितता अभी भी बनी हुई है, चाहे वो पश्चिम एशिया में जो खतरा है, पश्चिम एशिया में जो युद्ध है, हालांकि एक सीज फायर वहाँ पे रहा, लेकिन वो भी एक टेंटेटिव है, वो हमारे लिए आज के दिन में एक जोखिम है। और हमें इस बात का भी ध्यान रखना होगा कि मॉनसून हमारा क्योंकि हमारी काफ़ी अधिक जनसंख्या कृषि के ऊपर में आधारित है, और लगभग 1/6 हिस्सा हमारा अर्थव्यवस्था का भी कृषि के ऊपर आधारित है। तो वो किस प्रकार से आगे विकास करता है, उसके ऊपर में भी हमारे को सचेत रहने की आवश्यकता है। तुलनात्मक दृष्टि से यदि हम देखते हैं तो भारत के रुपए की स्थिति एक तरह से सामान्य मानी जा सकती है, लेकिन जो विभिन्न कदम हमने लिए हैं, केंद्र सरकार ने कई सारे कदम हमने लिए हैं, और जो हमारी बाहरी क्षेत्र की जो अंदरूनी जो शक्ति है, उससे हमें भरोसा है कि निकट काल में विशेषकर जो केंद्र सरकार ने जैसे गवर्नमेंट सिक्योरिटीज़ में टैक्स रिलीफ और टैक्स एग्जेम्पशन किया है, जो हमारी गवर्नमेंट सिक्योरिटीज़ में रैशनलाइजेशन किया है, और 10 वर्ष से अधिक की जो बॉन्ड्स हैं उसको भी एफपीआईज के लिए, बाहर के निवेशकों के लिए खोला है। उससे वो काफ़ी सकारात्मक है हमारे लिए।
Alright, then there you go. So that's key commentary coming in terms of those geopolitical tensions. But the wait is almost over. Let's talk about why I'm saying so. Because Argentina and Spain are set to battle for football's biggest prize in what promises to be a fascinating clash of styles, experience as well as youth. Now, Argentina arrive unbeaten and are chasing another World Cup crown, while Spain's fearless young side is looking to compete a remarkable rise to the top. Beyond the trophy, all eyes are going to be on the tactical battle in the midfield, the duel between the captains, and whether Spain's next generation can end Argentina's reign as well. With history, legacy, and a new era all on the line, the World Cup final has every ingredient for a classic as well. With that, we wrap this edition of Lunchtime Trades. Small Cap Buzzers coming up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of Aurum PropTech. Now, this company has acquired Housing.com. The news came in yesterday for around 458 crore rupees. So how are they going to fund this? What are their plans going forward? Are the key questions that we'll be asking the management today on the show. So stay tuned and keep watching the show for this management. Apart from that, we'll be also talking about stocks like Neel Kamal. Now, the stock has been buzzing after Sunil Singhania managed Abacus Investment has bought close to 1.9% stake in the company. And if you look at the stake, value of the stake that they have bought, it has been bought at a price of around 1,335 rupees. And the volumes that we are looking at this counter today, post this acquisition, is the highest since October 2016. GNA Axle is another counter that remains in focus. The stock has declined its biggest single day move since May 2026, and this is after the company reported its first quarter numbers. Seems like a profit booking move, but we'll get in our analyst to get in more details on the GNA Axle Q1 numbers. Then when it comes to Fino Payments Bank, since they have snapped their 2-day losing streak and the stock is up nearly 12% in the last 5 trading session. The company had come out with a very strong June business update. So what's the way forward is something that we'll try to decode with the fundamental guest on the show today. And lastly, when it comes to Laser Power, this is a recent listing. The stock listed yesterday. The stock has gained over 15% since listing, and today it has hit an upper circuit in trade. So this is broadly what we are going to discuss on the show today. Now, if you look at the markets, Nifty, after consolidating for 3 consecutive trading sessions, it has now decisively moved above the 24,200 level. Currently, we are 200 points up, close to 24,270. But do remember that 24,300 continues to act as a resistance for the Nifty benchmark. And this gains that we are seeing in the benchmark today is largely led by Reliance Industries and private banks like HDFC and ICICI. And that is also the reason why the Nifty Bank Index is also gaining in trade. But if you look at the sector indices here, it's Nifty Pharma, which is the top loser, down around 1.5%. And on the gaining side, we have Nifty IT close to up by around 2%. And private banks, as I mentioned, HDFC and ICICI Bank are the top gainers. But Varsha, not a good day for the small cap names. Some profit booking activity looking like, but which are the key stocks here that are buzzing?
Absolutely, and I'll talk about first on the loser side. Not a good day, I would say. You have Asian Hotels, which is under pressure. Even Heritage Foods have seen some pressure. This is on the back of Asian Hotels is down almost 0.6%. Heritage is down almost 3%. This is on the back of a weak, I would say, Q1 FY27 numbers. Margins have seen a hit. A company has seen some kind of raw material pressure. Well, on the gaining side, you have Servotech Power. This is buzzing on the back of order win. I would say another government-backed order, and a company is expecting almost 50% contribution in revenue in FY27 from the retail segment, which is the next big mover for this company. Well, Dwarike Sugar is also up in trade, of course, on the back of strong volumes. You have Om Infra is up. Dwarikesh is up almost 3%. Om Infra is also up on the back of volumes. Fino Payments, as Somit was saying, good rally seen over here, and Media Metrics Worldwide is also in focus on the back of volume. So not a fantastic day, I would say. But one stock, which is in focus is, of course,
we'll just address the Federal Bank numbers.
Yeah, absolutely.
The NII seems to be slightly better compared to what the street has been anticipating. Net profit is largely in line. GNP and NNPA both have come in better compared to the street estimates. As you can see on the screen, the net profit is up nearly 37% at 1,177. I believe the street estimates was close to 1,180 crores. So pretty much in line with that. The gross NPA is coming at 1.52, lower than last quarter and also lower compared to what the street has been anticipating. So better on NII front and on net profit and on asset quality. The stock is up nearly 1.5% in trade, but NIM is the key number that we need to watch out for. Net interest margin that is yet to come out. The stock is up nearly 1% in trade. So we'll come back on Federal Bank when the NIM numbers are out.
Right. Speaking of the management that we are about to speak is Aurum PropTech is scaling up its platform business. They have actually acquired Housing.com at 458 crore. They're going to build India's first AI native real estate operating system. But to speak more about this, what lies ahead, we are here joined by we are here actually joined by the management who will be speaking about onto the Aurum PropTech, because a big deal when it comes to Housing.com at 458 crore is scaling up its platform play with the proposed acquisition. And we need to speak about how this acquisition has been funded. What should investors expect when this acquisition will actually become the earning accretive in FY27. So to speak more about that, we are here joined by Mr. Omkar Shetty, who is managing director at Aurum PropTech. So welcome at NDTV Profit. Just wanted to understand the synergies expected from this acquisition of Housing.com, which you have done at 458 odd crore.
Thank you so much for inviting me on the show. We've really worked hard for the last 4 to 5 years to stitch this integrated PropTech ecosystem at Aurum, which we call it Aurum PropTech ecosystem. It essentially covers the entire real estate life cycle for enterprises and also for the consumers, and uses technology to enable better consumer experience and, of course, better enterprise efficiency on both sides. In terms of synergies, there's clear synergies for both the teams. It's a win-win in a way for the housing business and also Aurum PropTech's business. The largest synergy, however, we see is that we are able to combine housing's marketplace dominance with Aurum PropTech's transaction management and fulfillment capabilities at the scale that we operate in. Today, every real estate journey typically starts online when a consumer searches for a property to buy, sell, or rent. And that intent is first captured by a search engine and then by a marketplace like housing.com. Housing today is one of India's largest digital real estate marketplaces. It attracts approximately 14 million monthly unique users on the web and 45 million monthly app sessions. They monetize this marketplace intent by selling listings, by selling advertising, by selling qualified leads to developers, brokers, and consumers. Aurum operates on the other side of the value chain, and through our ecosystem of transaction management across rental, sale, resale, and financing, which we operate at a scale of 15 cities across the country, we participate in the fulfillment side of the demand. We help consumers complete transactions, developers complete sales, brokers improve their productivity, and consumers access financing and rental solutions. So the real opportunity actually lies in combining both of these. And instead of stopping the monetization journey at the point of click, we are in a way leading it on to the transaction and completing the entire life cycle, thus increasing the LTV of each consumer that gets captured at the housing's marketplace.
Right, got that view. So how is this acquisition being funded? If you could give details on that.
I'll give you a quick deal economic on this. The deal is really significant for us because from a point of view of the incoming shareholder, REA Group is one of the largest leading digital real estate companies across the globe. And in fact, they are the largest publicly listed PropTech businesses globally as well. They are listed, for information, they're listed on the Australian Stock Exchange, and their market capitalization is approximately 35 to 40 billion. Equivalent to a 2 lakh crore. REA operates market-leading digital property platforms across multiple geographies, including the realestate.com.au, which is their flagship product, which is Australia's largest digital real estate marketplace. Now, it's significant in size as it is one of the largest PropTech deals done in the country. Aurum is acquiring 100% of housing.com at a 458 crore. As a part of the transaction, we will issue approximately 1.98 crore equity shares of Aurum PropTech at 231.42 per share. And post-issuance, REA will become a 24.9% shareholder in the company. So essentially, it's a complete debt-free, cash-free acquisition from our point of view at a very value-accretive transaction value.
And just wanted to understand, sir, is housing.com profitable at this moment for your existing minority shareholders? Will this deal be EPS accretive?
You're right. I think this is one of the key themes that we have also worked very hard on. We ended FY26 at 412 crores of revenue, and we ended it at a minus 3% of PBT, which we really worked hard on. Last 2 quarters for us have been profitable. But now with housing.com coming into our fold, we do see certain losses coming in for the next 2 quarters. Largely, housing does around 10 crores of revenue from the housing core business that they continue to exist and operate. And they do a significant loss of around 180 odd crores, which we feel we have a classic playbook of integration and turnarounds that we have demonstrated across various businesses that we have acquired in the last 2 years, where we've been able to successfully turn around a loss-making PropTech company into a profit-making PropTech company. And I can give you as many examples. From the same group, we acquired PropTiger last year in September 26. PropTiger at that point of time was doing an annual revenue of 80 odd crores. They were doing a loss. They are doing an expense of 105 crores. As of last quarter, they will do around 8% of profit after integration with PropTech.
Okay. 2 quarters of losses that could come in from housing.com. After that, internally, what is your target? Where could the loss number come down to? When internally, what are you targeting it? When will housing.com at least become profitable on the EBITDA level?
So we see largely around three odd quarters to bring this to stabilization and break even. We have identified key levers of where we see the losses to be reduced. Essentially, what's happened is housing discontinued 2 of its operations last year, the Housing Edge business and certain businesses which they sold to us. But the teams typically that were operating these businesses were repositioned and continued on to. So we see certain efficiencies to be built in there. We also see certain efficiencies because the fulfillment and the transaction management business and capabilities that we bring on will be able to do certain cross and upsell, where we also see certain losses to be adjusted against higher revenues to be brought in. We have identified synergies worth 150 crores between housing and Aurum PropTech's existing businesses, which will add to around 30-40% to the bottom line. So I think three quarters of stabilizations is what we are looking at to once we bring housing into our fold.
Right. Now, sir, it's FY26, Aurum turned profitable. This is after, 4 years of losses that you have seen. Now, what about FY27? Because if housing.com comes into picture, and of course, you'll have some kind of teething issues and, integration issues in start of the year. So, 1 crore of net profit you've seen in FY26. What about 27, 28? Will a company on a consolidated level will see losses?
So largely, I can talk about the existing projection, where we are looking to end FY27 at profit. If we look at Aurum PropTech's existing business standalone, but yes, we do anticipate certain losses coming at FY27 for Aurum PropTech with housing. We are targeting a revenue projection of around 1,000 crores with the housing business and the synergies that we unlock with them. It's early days, to be honest, to talk about profitability because it's a marketplace business. We are looking at adding transaction to it, which of course brings in a large flywheel of transaction revenue. However, we do anticipate certain efficiencies to be brought into the unit economics of the housing business, which will better its profitability.
Right. And what market share target do you have when it comes to, or you are targeting when it comes to, property discovery and digital real estate transactions over the next 3 years?
So combined, we will become the largest marketplace and transaction business between housing and Aurum PropTech. And we don't see any similar model which is operational today between the existing PropTech players and companies. Each holds a certain part of the value chain. Somebody holds the discovery and search part. Some teams hold the transaction management part. But with housing and Aurum PropTech combined, we will own both. And that gives us the right to win and also the largest market share. But just to give you a quick number on this, we at housing, we are between number 1, number 2 in the search and discovery on web. In the app, we do dominate this space. We are the largest in India when it comes to app metrics and usage around it. In terms of transaction management, we will be the top 3 in the country between the other 2 players when it comes to transactions of rental, buy, sell, and mortgages.
And lastly, sir, sorry if I missed this earlier, but I believe the company will also be issuing 51 lakh warrants to promoters. The funds that will be raised via this, what will be used for?
Thank you for bringing this out. Aurum PropTech has a very solid promoter in form of Aurum Ventures Group, which is a full stack real estate design, development, and asset management company. We do close to 20 million square feet of asset development in Mumbai metropolitan region. And the team has solid backing from the balance sheet of Aurum Real Estate. we do anticipate certain support coming in for the scale-up journey that we will do with housing to be provided from Aurum Real Estate Group.
Thank you, sir. Thank you for joining us and giving us the way forward for the company post this big acquisition that you have announced. Well, that was the management. Let's also welcome in our fundamental guest, Lancelot Deconov, CIO of ValueX Wealth Connect. Sir, you heard the management, quite an optimistic growth plan that they have and a big acquisition that they have done. How are you looking at this counter? Is it a buy post this acquisition, or one should wait and watch?
Good afternoon, Sumit. I think, looking at this acquisition, we need to put certain numbers in perspective. Like, for example, the market cap of Aurum PropTech is about 1,375 crores. This acquisition of 458 crores is not really a cash acquisition because they're issuing shares to the promoters at a certain price. And that is probably becoming maybe there'll be some dilution of equity. Over and above that, there's going to be further dilution in terms of the 51 lakh warrants that are being issued to the existing promoters. So that is going to help them maintain their equity stake in the expanded capital. However, when you look at the profitability of the existing business as well as the business they're taking on, the business they're taking on has a loss of 180 lakhs, and that's a difficult business to manage. Also, in the since there's no visibility of actually profits coming in, it's very difficult to to put a valuation to this, because monetization of these various assets is what is most important. Having the flow or the traffic to the site is not really going to drive valuations up. It is now more of how much can be monetized and how quickly can be expanded across the region. So I think it's necessary to wait and see maybe another 2-3 quarters. One would get a better idea of where this is moving, and probably at that time it would be you'll be better placed to take a call as to whether to look to invest or or maybe if it's high, then you can exit. But I think at this point in time, it's too early. We should just look at waiting and monitoring. This is an interesting development.
Right. Thank you. With that, let's slip into a short break and we'll address the other small cap stocks on the other side.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in
Welcome back. You're watching Small Cap Buzzers. Well, Neil Kamal, let's pull up that stock. The stock is buzzing on the back of Abacus Investment Managers, who has bought 1.9% of stake at rupees 1,335. The company, rather stock, has seen highest volume since October 2016. Now let's see what this company does and what might be the growth triggers when it comes to this company. Well, this has transferred from plastic furniture to complete furniture solution provider and is into material handling products, into molded furniture, metal racking and storage system. Now the focus area for this company going ahead is of course expanding its B2B presence, growing retail footprint, that's where the highest margins are, increasing e-commerce contribution and enhancing brand visibility. Onto the capacity expansion, the focus remains more on sustaining growth management, and of course they are following calibrated capacity expansion strategy. By FY28, they are expecting revenues of around 4,590 crore. EBITDA is expected to be at around 513 crore and PAT is expected to reach at around 253 crore. So overall, the focus area is of course B2B and retail footprint, and a big fund manager coming into this stock is the reason why you're seeing the stock is up. Lancelot, coming to you on this, what's your view when it comes to Neil Kamal?
So, I think merely the fact that somebody has bought the stock doesn't necessarily change its business or its business plan. So if you look at this company, it has a market cap about 2,000 crores. It's trading about 17 times multiple, and revenues have been mainly flat over the last couple of years. Margins are very low. Return on equity is about 8%. So it's not really a fast moving growth story unless this new diversification or this business change that they are anticipating will increase both volumes and revenues and profitability in a short period of time. The stock looks pretty expensive, so I think one has to just wait it out and see how how it pans out, its business change in the business, and then one can take a call as to whether it's also a very competitive space. So there are a lot of players in that space. So we'll have to just wait and see how it plays out.
Okay. The next stock in focus is Fino Payments. The stock was buzzing few days back when they came out with their Q1 updates. It's been buzzing today as well. Let's get in Shivam to understand what's the story behind this counter.
The stock is seeing a strong momentum based on the strong business update that the company has given for the June month, and the new accounts has been increased by 31% on YY basis. And if you look at the loan referral disbursal that the company is referring the loans to the customers, that has also gone up by 253%, which is a substantial boost. Also, the renewal income has seen a growth of around 6%, and the transaction throughput has declined by 35% on YY basis. The transaction throughput has declined due to the customers which are moving from cash to UPI basis for the transaction purpose, and this reduction pace has slowed down if we compare it to the past month. In terms of recent developments, the company has also partnered with the Easy.ai, and the bank has will aim to deploy its AI-enabled loan origination system, and also will improve on the collection management system too with this partnership. Apart from that, the company is also aiming to build a lending ecosystem for its upcoming the seamless small finance bank transition system. In terms of financials, the company's revenue has gone down by 31%, but the revenue margin has improved by around 40%, and that was due to lower product costs. In terms of management outlook, the company remains focused on the CASA growth and is mainly aiming towards seamless transition to the small finance bank. And in terms of margins, the company is targeting around 8 to 10% for its small finance bank structure, and lending focus will be mainly on affordable housing, MSME loan against property and gold loans. In terms of stocks performance too, the company has given positive returns in 1 week and 1 month time period.
Any view on this, Lancelot, on Fino Payment?
Fino Payment was originally as a business that was generating fee income from soliciting business for banks. Now it is moving into a business where it will become a small finance bank itself, which becomes very much capital oriented business. From a technology driven business, they're shifting to a capital business, and that business has its own risks. One is in the management as well as of course, in the loans and the NPAs and the liabilities come up. So I would be a little cautious at this time because, its existing business parameters have grown. Once the, small finance bank comes into play, then the impact of its expense on the capital is going to be a crucial factor in determining how the profit grows thereafter. So it's better to wait and see how it goes. At this point in time, you can't look at this results and take a valuation call.
Understood. Well, thank you so much, Lancelot, for joining in and having a conversation with us. Pleasure to have you at our show. Thank you so much. Well, viewers, with that, it's time to wrap this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and do that. But this is also a very special Ask Profit because we are putting some impetus, some focus also on the banking space, and we'll be joined in by a special guest to answer those stock-related queries. So at 2:10, those questions will be answered. But first, let me start with the markets because it's been another day where you've seen buying coming through, and that has fortunately sustained through today. So at 24,250 odd, you have the index ending the week, and hopefully we end here to have a good note as well, because we corrected about all the way up from 24,400 down to 24,000 and have been range bound for the last 7 to 10 days odd, and hence today's session is remarkable in that sense. When you look at the heat map also for the Nifty 50, you're seeing that across through in some individual names. Jio Finance was a good set of numbers by the company. That stock has sustained through the gains, but Tech Mahindra has actually seen buying through the day and now up almost 4.5%. TCS also up 3% right now. Kotak Mahindra Bank before results tomorrow is doing well. HUL, Infosys and Eicher Motors are some of the other counters doing well. You also had a big upgrade coming in from Kotak Securities on Eicher Motors, and that led to the gains on that counter. Hindalco, Wipro and Cipla are some of the negative reactions today visible on the screen right now. As you see the sectoral heat map as well, that has been the other key factor, because multiple sectors going through. You have Nifty IT because and led by the earnings by Tech Mahindra is continuing to do well. Private banking as well as auto is also up today as well. But the advanced decline ratio is the other key factor for the broader markets. Now, we've largely been talking about the benchmarks over the last week or so, and there have been bouts where the broader market have come back into focus. Today as well, you see largely the broader market seeing consistent declines today. Mid cap, small cap reflect this pain that's visible right now. And in terms of the BSE 500 as well, that is the other key one, because you have seen pronounced moves on certain individual stocks today. CEAT was one, a casualty essentially with a very weak set of numbers led by raw material impact. Welspun Corp, Sterlite Tech also down almost 5% and locked there. Grenville Norton has actually been seeing some pressure through the day, now down 14%, while Relaxo was up almost 12% in the morning, now up 18%, and that has transcended into some gains for Campus as well. Fedbank after results is reacting positively too. But let me welcome in our guest now for the day, Ruchir Jain, Vice President Equity Technical Research Wealth Management at Motilal Oswal Financial Services, and Sameer Dalal of Natwar Lal and Stan and stockbrokers joining in now. Gentlemen, both of you, thanks so much for joining in today. Let me go ahead and just start taking the first query. This one coming in from Vanita, and she was actually asking about Z Entertainment. Now, Ruchir, it's a stock that came back into focus because of on the fundamental side of things, because of the FIFA World Cup rights, and then some momentum built through. But that has fizzled out. What would you recommend to Vanita? Should she exit since she's bought at 94 in the gains right now?
I would suggest to hold on at current levels, because recently when the dip came from that high of 120, the stock managed to take support around its 200 EMA, which is at 96. So just around the cost price, just above the cost price. So keep a stop loss below that 96 rupees and continue to hold the positions for now.
Got that view. The next one, and this one's coming in from Biswajit from Kolkata. He's holding on to SBI cards for the last 2 years, he wants to actually know that if it's a good time to buy now as well this counter for the next 2 years. So he's not entered this counter, wants to buy right now. Sameer, good afternoon. This counter has also been a rank underperformer since listing, right, way back 4 to 5 years ago. But would you recommend an entry right now in SBI cards?
Yeah, hi. Good afternoon, Puneet. So, it has been an underperformer. Look, the business opportunity for this company is great from the fact that, the penetration of cards in India is still very, very low. But then you also are competing with UPI in India, right? So card, even penetration, if it's there, it need not lead to that much growth. But having said that, the difference being that this is credit versus that is payment out of your bank. Now, having said all of that, the issue with credit card businesses is you're making money only, good money, good profits is when your customer does not pay the full amount, because the charges are very, very high. So you're kind of playing on the fact that your customer is in trouble and cannot make the full amount of payment, and which is where you make the profit. So that always remains a big risk for the business, which is why the stock has been a bit of an underperformer, if you ask me. The NPAs have been high, the write-offs have been high. But if I were to look at it from a slightly longer term, not 2 year, but maybe a 5-year perspective, then it warrants a buy, because I think the collections and the data and all of that, which was being done over the last many years, will start panning out well for them. But for the 2-year period, I think the stock is still going to be a sideways kind of movement, maybe a 10% upside. So not a screaming buy, but yes, one can look at it from a 5-year perspective.
Got that view, Samir. But the next question coming in, and this one's a caller from Mysuru. Mohan has a stock-related query for us. Mohan, good morning. Good afternoon, actually. Thanks so much for joining in. What's your query?
Good afternoon. I got this Relaxo footwear at 25 shares at the rate of 984. I'm holding this stock from past 2 years.
Okay.
So I just want to know long-term perspective. How is it actually? Where I have to, I'm totally under loss.
Yeah.
So the shares are not going as anything. Today only I can see some shares. This share has gone up little bit.
Right,
so I
right.
just wanted to know what is the status of this, whether for long-term perspective, how it is.
Got it. And Mohan understood, got your query. Samir, unfortunately, Mohan might have bought it at that peak of 2024 move that we saw in the mid and small caps. What would you recommend to him now? He's bought it at 984. What would be the strategy according to you?
So Relaxo, unfortunately, we don't have coverage, but I'll talk about the general space, right? Which is the footwear industry, which has gone through a very tough period where growth has been subdued. Same store sales growth has been low. So the two stocks that we cover are Metro Brands and Bata in that space. And both have also seen a very, very poor performance over the last few years, if you ask me. And this is simply been because consumption has slowed down. We believe that the entire footwear industry has a massive scope of growth, right? We are very positive out there. We think the opportunity is very large. And the reason we like Metro Brands over all the other players is given the fact that premiumization in the Indian market is growing and they have the opportunity there. Now, unfortunately, like I said, I don't cover Metro Brands, but given the fact that we think the entire space is going to do well, I'm sure Relaxo would also stand to benefit once the consumption comes back. So see what the valuation multiples and the expansion plans that they have. But I think the entire space is going to do very well.
Got your view, Samir. But another question now, and this one's coming from Vijayawada. Krish is dialing in for a stock-related query. Krish, good afternoon. What's your query?
Good afternoon, sir. And I have been a very big fan of NDTV Profit. And the thing is that I bought this Federal Bank at 190 rupees.
Okay.
Some 2 years back. So now the stock has gone up well. Just I want to know whether I continue or whether I sell it off, book some profit, or shall I add something more?
Well, Krish, firstly, thanks so much for the wishes. I'm glad you tuned in to Ask Profit. You bought this, with a fundamental view, I'm guessing, Krish? Krish, I think we lost you, but I think, okay, we seem to have lost him at this point of time. But Samir is bought at 190, which is a very great price, right? Would you recommend and advise him to continue holding if you got a quick glance of the results as well? I know it just came about half an hour ago, but any view?
So I haven't seen the results, but look, fundamentally, the bank continues to do well. We are very, very positive on the entire banking industry. We think the next 2-3 years, once investments, capex picks up, the infra spends we know are very good. Consumption starts seeing an uptick, and consumerism, funding of consumer loans continues to grow well. We think the entire banking and NBFC will do well. Federal Bank is a strong bank, good management. Valuations have moved up a bit, but if we have another 2 years, I say stay invested unless you have another bank to invest in or another stock to invest in. If you ask me a preference in that space, my preference will remain IDFC first and IndusInd, but Federal is also very good and you can hold on to it.
Got it. The next question is coming in from Ravi, who has a question on RBL Bank. Ruchit, he's entered the counter, currently sitting on some decent gains. What's the chart structure suggesting? He's bought it at 340 odd. But because on the fundamental factors, of course, you have the results that are scheduled through today. But if it's for someone who's already holding, what's the strategy?
At the start of April, when the broader market started momentum on the positive side, the stock gave a breakout. And post that, whenever there have been any corrective phases or declines, the stock has managed to form a support base around its 50-day EMA and resume its uptrend. That 50-day EMA is right now around 355. So I would suggest to hold on at current levels, but keep a stop loss below 355 on your long position.
Got that question and got that view as well. The next one coming through, and this one's on Amara Raja Lakshmi, who's from Telangana, has bought these shares at 1100 odd. holding for more than a year, asking what she should do with this counter now. Samir, what's your view? Going into the new energy business side, we of course had a conversation with them on Wednesday, but what's your opinion?
Yeah, I watched that interview, and I'm quite positive on the stock. Look, the new energy business that they're scaling into is going to take time. They've just set it up. The order inflows are going to take time. So, in the initial years, you're going to see a bit of a drag on the earnings, which is going to pull the ROEs down a bit. In fact, the second phase and third phase of expansion, once they start coming on board and the operational efficiencies and benefits start paying, that's when you'll really see positivity. So for the next year and a half, I think the stock is going to be a bit range bound. We are not very positive from the 1.5 year perspective, but from a 3-year perspective, I think one can look at it. So maybe what you can do, my advice for most investors in this counter would be wait it out for another 6 months to a year before buying into it. And if you already have it, maybe take your money off the table for the time being, because I don't see any run up happening in the very short term. And a year later, let's review how things are and then take an investment, but positive on the entire space, but it's going to take a really long time.
Got that view, Samir. But, we spoke about at the start of the show that, banking is going to be dominating the headlines today, tomorrow, over the weekend, as well as on Monday, because big earnings coming through. You have Federal Bank, RBL coming out today. Federal Bank already numbers out, stocks reacting as well. Tomorrow will be the big ones. You have the big guns, HDFC, ICICI, Kotak, Axis, all coming through with their set of quarterly numbers. And we want to just, give viewers an opportunity to get some perspective today. And if you have any queries also, now is a good time for your banking related queries. You can pick up the call, speak to us, because we have Parag Thakkar, Head Fund Manager at Fort Capital, joining in. Parag bhai, very good afternoon. Thanks so much for joining in. It's Puneet this side. Just starting off with the big numbers that are coming through, right? We have, of course, HDFC, ICICI coming through, and we have a few stock related queries for those as well. Venkat, who's from Andhra Pradesh, had actually asked if what's a better pick right now between HDFC as well as ICICI. Both earnings coming through tomorrow, but slightly more different picture that we're seeing on both fronts, right, Parag bhai? How are you looking at? Firstly, let's start with HDFC Bank. What will be some of the key ones that you're watching out for?
No, so HDFC Bank has come up with a business update already, right? So YOY advances growth was 15%, which was expected to be around 12.5. So they have beaten that estimates on the advances side. Deposit growth was also 14% YOY. So now one is, and HDFC Bank has always, asset quality will be absolutely robust, like ICICI also. So I would say that the only thing to watch out for is NIM tomorrow, and I feel that NIM will be either 2-3 bips QOQ reduction or stable. That is my guess. Let's see what happens. But I think more valuations are very compelling, so there is no point in selling HDFC Bank at this point.
And, the other question also, Parag bhai, if it's a good time to enter as well for Venkat, because, we've seen and everybody's seeing the stock recover from that 740 to 820 odd mark. So some are a bit wary, and a lot of our stock related queries also on HDFC Bank, if now is a good time. You mentioned about, of course, that you'll be watching out for the NIMs. If those come through, would you recommend with the stock? Of course, we're waiting for the results, but what's your view?
See, from medium to long term perspective, I can tell you that HDFC, ICICI, Axis, Kotak, all four, and SBI, this 5 from long term perspective, if you ask me, there is no reason in selling. And one can actually add on a staggered basis, because now that one rally has happened, and as you know, ICICI Bank is my top holding in my portfolio. It has rallied from 1,225 non-stop to 1,440. So I would not say that go all in, because sometimes on Monday what can happen is that everybody has bought now. So some traders will sell on if the stock opens gap up, right? And so finally you see that profit booking coming in on Monday. But so I'm not talking from absolute short-term perspective, but from medium to long-term perspective, two things are very clear: credit growth is back, and asset quality is very good. And these are the two basic fundamentals which should be there if you are buying a banking stock. And I wish that this West Asia war conflict does not last long, so that crude oil does not spike up significantly. Otherwise it upsets the entire thing. But I would say that right now, as we speak, asset quality is absolutely good in these large cap banks, and credit growth is very good. The only thing is NIM. But in all probability, NIM should bottom out in this quarter, as Union Bank also said this, that NIM should bottom out in this quarter.
And Parag bhai, also let me squeeze in the other couple of bigger names, right? You have Kotak as well as Axis Bank coming out with earnings tomorrow. For Axis, what you have also seen is that Puneet Sharma, the familiar voice on con calls, won't be there this time around. But the banking update has been extremely strong, and always the comparison between the two, given the size, given the stature of those as well. Axis, of course, a much bigger book, but at 18% growth that we've seen in deposits, do you feel that? And also, what do you think of the stock right now? What will you be watching out for? Because a very important earnings, we've seen management change come through, but what will you be watching out for?
Yeah, so I have a huge respect for Mr. Punit, and him joining HDFC Bank is also a welcome thing for us because we are HDFC Bank shareholders also. But I would say that coming back to Axis, see, deposit growth was 18%, advances growth was 18%. So now the asset quality is going to remain good, plus there'll be treasury gains in my view. So the only thing to watch out for is NIM margins, I would say. And this net interest margin, it is widely anticipated that net interest margins will fall by 10 bips QOQ. But if they surprise on positive side, and if the NIM decline is say less than 5 bips QOQ, I think it will be taken positively by the markets.
Got it. And also, Parag bhai, we discussed, of course, in India Market Open a few days ago when the musical chairs between the positions were coming through, and we've seen, of course, for Kotak Bank also that update come through that Mr. Vaswani won't be continuing post his tenure ending. Do you feel that will have a hampering on the stock that we've seen? Like last 5 to 6 years, there's been no returns for shareholders. Probably the next couple of quarters will also be similar as well. Do you think that this needs to be addressed in this particular con call as well as the results? Because we've seen that 13 to 14% growth being consistent, but you've seen players like Axis come through with a much higher growth. At the size and scale of Kotak, do you feel that could be a challenge at this point of time and that needs particular attention in this particular con call?
Yes, as a Kotak Bank shareholder, of course, we have bought very recently, and at current valuations of just 1.6 times price to book with 2% ROA, it is absolutely cheap stock. The only thing, as you very rightly said, in this result itself, they should come out with the potential replacement for Mr. Vaswani, which is, I think, Mr. Anup Saha. If they come out with that, and if they submit a proposal to RBI that we want these two, whatever, internal people, either of the two which RBI selects, as a potential CEO after Mr. Vaswani retires in December, then that will be a great positive news for Kotak Bank shareholders.
Got it. Well, Parag bhai, we'll of
because
course...
the valuations are very attractive, stock has not done anything.
Most certainly. And of course, Parag bhai, we'll touch base with you again, of course, on Monday on India Market Open. Probably get in touch with you tomorrow as well on the big earnings. But thanks so much for joining into this very special Ask Profit edition, focusing on the banking names. And viewers, we will be continuing to do that over the next few weeks as we get into the earnings season as well. But let's now start with the rapid fire round with Ruchit as well as Samir, and both of you, thank you for patiently waiting by. The first question coming in from Satya on Bajaj Consumer. He's bought at a 538 odd, bought 278 shares. Samir, is it good to enter this counter now, add more shares for the next 2 years? Is this question?
Sell.
The other one's coming in from Prashant, between Maharashtra Bank or Indian Bank, which is a better stock right now with the current entry price? Ruchit, what would you recommend?
Indian Bank.
Indian Bank, correct. Next one, and sticking, because we're getting a lot of queries here on financials. Aadhar Housing Finance. Our viewers, Sunny has bought shares at 470. A view, Samir, if you have on the stock, on the space?
Sorry, this one I don't cover.
And within the space, do you like anything in the housing finance space specifically?
LIC Housing Finance, Samman Capital, but that's diversifying. Both are very good.
Got it. The next question, and this one's on a smaller player, Prism Johnson. We don't talk about it too much, Ruchit, but our viewers bought the shares at 133. This is Kirtana. What would you recommend on this counter? Exit, got it. Next one's on Lumax Industries. Sampath Kumar has bought he wants to invest into this counter right now. Samir, we've seen a massive run up on both the Lumax counters. Any view on either?
I would not buy it at this point. No, wait for more correction.
Got it. The next one, and this one's on Tata Capital, bought at 349, 285 shares. Ruchir, is it still a good one to hold?
Yes, hold with stop loss below 335.
Got it. Is it a right time to invest in Bajaj Auto? Is what Ms. M. Sudhir is asking. Would you recommend that, Samir?
Yeah, one can invest in Bajaj Auto.
Next one's from Gaurav from Gandhinagar. No, I think this is a very smaller stock. But let me take the next one from Shriram on Paytm. Bought shares at 967. We are waiting results, Samir. But what's your view on the stock?
Hold at the moment.
Next one's from Ravi, who's from Mumbai on Vedanta. He's been holding for the last 6 months at 300. Should he still continue to hold, Ruchit?
Exit on pullback moves.
Next one's from Shankar on ITC Hotels. Bought shares at 169. Samir, any coverage on this one? Results also came recently. What's your view?
Buy.
Next one coming in on Vedant Fashion. Bought at 586. Jatin has been holding for a year. Samir, the results have been quite disappointing for a considerable time. What's your view on this one?
So I'm also feeling the pain, Puneet, but yeah, I'm holding on to it. I'm not buying. I want to see the actual growth in SSSG.
But also let me ask you, since you hold the counter, the post the GST rate cuts, do you think that it's slightly become more unfavorable, a little bit tougher because of that 2,500 GST rate cut, the rule?
So it definitely does become tougher, but look at the scale that he has, and this is a play on consumption. So if consumption bounces, I don't think it'll be a problem for them.
Got it. Well, that was the last question of the rapid fire. Samir as well as Ruchit, appreciate your inputs and your time today on the show as well. You saw 90 queries over both editions, so appreciate your time today. But viewers, out of time on the show, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because to just get a point of view as to how different jury members were looking at various participants, and the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it.
Hi, thanks so much for joining in. Good afternoon. My name is Alex Matthew. With me is Mahima Vachajani. We're coming to you live from the NDTV Profit Suzlon studio, and this is India Market Close. Let's take a look at how the markets are faring, and it's a tale of two ends of the market. You're seeing a spike in the benchmark Nifty 50. It's actually a couple of stocks that are really pushing the envelope this afternoon. The broader markets are not looking that good. We'll get to that in just a bit. I want you to pull up a couple of stocks just at the start, and that's Reliance Industries and ICICI Bank, and the third one is HDFC Bank. Reliance Industries at the high point of the day, up 2.1%. ICICI Bank has seen a spike. It's trading very close to the high point of the day, 1.7% higher. HDFC Bank ahead of the results, 1.7% or 1.6% higher. And these are the heaviest stocks on the Nifty 50. You want to look at the heat map?
Yeah, absolutely. And I think that is causing the spike in the benchmark, right? But unfortunately, like you said, it's the tale of two ends because broader markets are not performing well. But Tech Mahindra are doing very well on the back of strong set of numbers plus margin upside is what the management is guided for. Kotak Mahindra Bank, of course, ahead of earnings. Jio Finance on the back of, again, strong set of numbers plus a hefty dividend. TCS is gaining around 3% today as well. Reliance, again, another heavyweight doing fairly well. HUL, surprisingly, is doing very well today as well. You also have Eicher Motors, M&M, some auto names also doing fairly well. But on the flip side, you have Hindalco, which is taking profit booking today. There's also Wipro on the back of weak set of numbers, missing estimates down by about 1.2%. And you have something like Cipla, Bharti Airtel and DRR also in the red. But there's more green on the screen, which is good to see.
It is certainly good to see. And let's pull up the contributors chart because that will really drive home the point of what is moving the needle. So Reliance Industries contributing a good 46 points. HDFC, ICICI Bank cumulatively another close to 90 points or thereabouts, or 85 points, right? So cumulatively, it's accounting for a good part of the total gains for the Nifty 50 today. But take a look at the broader markets because they're not doing particularly well, and the breadth is not really very good this afternoon. 0.5% declines for the Nifty mid-cap index, not too far away from all-time highs, by the way, and more cuts for the small-cap index. Pull up the advanced decline ratio because you will see what I'm talking about. The benchmark Nifty 50 for once is actually doing significantly better than the broader markets, and the breadth looks pretty bad actually.
I think yesterday when we were talking to Sunil Kaul also, there are a lot of brokerages which are now saying that they are shifting funds towards the large cap, and that's where the more risk to reward ratio stands. So it's interesting. Let's also try to pull up the sectoral heat map before we move on to the market lines and see as to how sectors are doing in trade right now. You have private banks topping that chart, followed by IT and bank, of course, doing Nifty Realty in the green today, of course. But on the flip side, you have pharma, which is down. So of course, defensives down by about 1.4%. Healthcare as well, and metals is something that's also tanking in trade. But let's take a look at how market triggers are going to look like from here on and what to expect, because you have a lot of heavy names in terms of where earnings go, and that's something that definitely we'll be watching out for, Alex. And Monday will be crucial to watch out for because 35% of constituent on the Nifty 50 is going to post their earnings in the weekend.
Indeed, and those are the stocks that are reacting right now. Indeed, in fact, after 3 days of consolidation, you have the Nifty that is decisively broken above that 24,200 mark on the upside. 24,300 continues to remain a strong resistance. It's actually very, very close to that mark at 24,294 right now. The support is seen at 24,100, 24,000. and 23,950. In fact, that 24,000 mark was held in trade yesterday quite comfortably so. Profit booking is seen across small and mid-cap names. They've run up quite substantially. The Nifty Bank is gaining quite considerably ahead of the private bank's results. You have Kotak, you have ICICI Bank, HDFC Bank, all of them posting numbers. We'll get you details of what you should watch out for. Resistance for the Bank Nifty seen at 58,200, 58,400. Support is seen at 57,500 and then at 57,000. The key factors to watch, we've already spoken about this, but I'll reiterate: Reliance Industries, HDFC Bank, ICICI Bank, Axis Bank, Kotak Mahindra Bank are going to be posting their numbers post-market hours and over the course of the weekend. That accounts for 35% of the benchmark Nifty 50, and all of them, as Mahima just pointed out, will likely react. Joining us this afternoon is Jay Bala, founder and chief market technician at Cash the Chaos, as well as Deepan Mehta, founder, director of Elixir Equities. Gentlemen, thanks so much for taking the time, and good afternoon to the both of you. I'm going to deviate from the norm and go to Deepan first today, because really the frontline stocks are the ones that are moving the needle today. Deepan, there seems to be a little bit of excitement or the hint of a suggestion that the numbers for these banks is going to look reasonably good. So there seems to be buying ahead of the weekend. Are you sanguine about these numbers, HDFC Bank, ICICI Bank, Kotak and Axis?
Yeah, good afternoon and thank you for having me on your show. No, I think the numbers will be good because the pre-quarter releases were quite strong for the banking sector and HDFC Bank as well. So I think that numbers will be better than what Street is expecting. I hope so. And I think that to an extent, I think the underperformance will get covered because of better numbers. Also, the XCNR scheme is heating up, and we are seeing a lot of news flow announcements coming from various banks, and that could be a big profit boost for a lot of the banks, especially the larger ones who have got global operations as well, because that way they have access to very attractively priced deposits, and that will certainly enable them to bridge the gap which they are facing just now in terms of deposit mobilization versus the demand for advances. So what is happening is that the demand for loans is very strong, but deposits is of course being very competitive over there because of a lot of local savers moving to capital market, other financial products. So this FCNR scheme, when it is actually operationalized, it's actually operational, but when it actually scales up, it will provide a lot of boost to the liquidity of these banks as well. And that's, I think, also the Street is gradually pricing it in.
Deepan, a very good afternoon to you. What about Reliance? I mean, we're expecting the numbers today, of course, in the evening. But anything that you make of before the earnings kick off, and anything that investors should be, aware of?
I think Street is expecting good set of numbers from Reliance Industries, and the oil to chemical business also, should do much better, considering that the refining margins have moved up over there, and other factors also favor that business. But end of the day, Reliance is becoming more of a conglomerate of many businesses, and that may, impact investor interest. For example, if I want to specifically just have an exposure to telecom, then I cannot buy Reliance Jio shares as well. Same thing if I want to exposure to retail, I'm not getting only Reliance Retail. And if I am a player who is very positive on the oil market and the refining business, then I'm not getting an exposure to that also specifically. So three large businesses in one company tends to kind of, diffuse if any specific investment theme that you want to play. I know the management is addressing it, but if there are going to be only IPOs, then eventually Reliance will get into a holding company discount stage as well. So these are, I think, complex companies and complex situations that we are in. All I can say is that in Reliance underperformed for a long time. There could be a nice trading rally. This quarter's numbers could be good, and that could reverse the underperformance of the declining trend.
Yeah, and it also turns out that in the June quarter, you had the promoters that increased stake in the company, deploying as much as 9,000 crore rupees, roughly back of the envelope calculation, 0.5% stake increased to 50.48%. And that news update perhaps leading to a little bit of a fillip to the stock in trade today. Let me go across to Jay Bala as well. Jay, good afternoon once again. And what are the trends that you're seeing for the benchmark Nifty 50 heading into the end of trade today? And of course, a lot will depend on the texture of the results that get posted post-market hours today for what is seen on Monday morning.
That's right. Thanks, Alex. Thanks for having me on your show. See, the short term has been the one that's been ambivalent for the Nifty. I've been saying that the Nifty is heading for fresh all-time highs and possibly closer to 29,000 in the higher time frame. So what happens in the short term has been a bit of flux. The key resistance for the Nifty is at about 24,602. Once 24,602 is crossed, that signals the short-term ambiguity is done, and the longer-term and the higher time frame trend is asserting itself. So watch out for it. And yeah, you're rightly pointing out that Reliance has been the laggard, and the HFC Bank is also another laggard. So once Reliance crosses 1345, that'll take the large cap Nifty higher, and the Reliance will also come out of a short-term consolidation. So watch 1345 on a closing basis as an important level for Reliance.
All right. Okay. So that's the view coming on Reliance. But let's dig in and try to get our stock of the day. And the stock we've chosen today is Adani Energy Solutions. The stock has rallied after brokerages highlighting likely inclusion in MSCI in India index. And Varsha joins us with more details on this one, plus other growth factors for the company as well. Varsha?
Well, yes, one of the reasons why you're seeing the stock is up almost 3% is likely inclusion when it comes to MSCI index. And this inclusion could lead to almost 3,300 crore plus passive inflows. And also, this is one of the biggest expected beneficiaries of the review, and passive funds buying is also expected if included, and also the global institutional participation, if you see, may increase. Now talking about the key growth triggers, because this is not just a transmission company, Street is actually now looking at companies as a multi-business utility platform, and because company has presence when it comes to transmission, distribution, smart meters, then BESS, and also cooling solutions. Now let's deep dive into each of these segments, starting with transmission, which is the core business. They won 29% share of transmission bids in FY26, and of course they are it is expected to maintain 20 to 25% of share of future bids. Number one, near term transmission capacity, if I were to speak about, is estimated at around 1.5 lakh crore, and medium term opportunity is estimated at around 9 lakh crore. Talking about smart metering, this is the leadership position that the company has. The recent acquisition can create India's largest smart metering platform. Company is almost over here targeting 30 to 35% of market share in smart metering, and 103 million meters are still awaiting tendering. So huge growth over here. Moving on, data centers, which is the next biggest opportunity for the company. If you see the capacity, India's data center capacity could reach to 10.5 gigawatt by FY31, and Adani Connex has increased 2030 capacity target to 3 gigawatt, and this has been raised from 1 gigawatt to 2 gigawatt and now at 3 gigawatt. So huge growth over here. Then you have commercial and industrial power, wherein the segment is emerging as a growth driver. Portfolio could actually go to nearly 7 gigawatt by FY32, and company is aiming to grow this business 10x in next 5 years. Talking about battery storage energy system, let's pull up that also. BESS, everybody is actually bullish on when it comes to this sector, can bundle green power with BESS solutions. And overall, if you see, Morgan Stanley is actually bullish, when it comes to Adani Energy. They've actually hiked the target price, which is raised from 1,940 to 1,943 from 1,133, and the brokerage has maintained an overweight rating on the stock. So overall, MSCI inclusion and of course brokerages having an overweight on the stock is one of the reasons why you're seeing the stock going in bus.
All right. Thanks so much, Varsha, for that. Deepan, if not an individual view on Adani Energy Solutions, could you give us a sense on whether you still see opportunities in the broader power ecosystem? Because some of these stocks have actually run up quite considerably because that theme played out. People were thinking about this whole data center requirement and the fact that you will need power generation, transmission, etc., etc. BESS also has been spoken about. So how would you play that theme?
Oh, I think that this is a multi-year investment theme, and there'll be many players over there, starting right from the equipment companies, the renewable power equipment companies, then we have the HVDC companies, thermal power equipment companies. So there are many segments within this entire investment theme of increased energy usage and data center. Specifically when it comes to data center, I think that there's no specific single stock that one can really play it, with the exception of maybe E2E. But apart from that, I think there's no specific standalone data center company that we can invest in. But I think a lot of companies are setting up data centers, and that provides opportunities to many segments. But end of the day, I think India has to generate more electricity, and from that point of view, I think electrical equipment players are something which we focus on. We're particularly impressed with the numbers which came from BHEL and the kind of order book position that it is sitting on, and even in the quantum of order increases as well. So this is one company which has seen a fantastic turnaround, and I think from these levels also this company can really outperform. It's a reasonably large size company, part of derivative segment as well. So I would say that it is still reasonably valued if you look at the kind of growth dynamics which are in play over here. So that looks interesting. And also I think that maybe now in the renewable space, the time has come to slightly shift away from the equipment companies to the actual companies which are utility companies which are setting up renewable capacity. The likes of say GSW Energy, or there's another new listing, I think Clean Max, I think that's the name I recollect. Then there is NTPC subsidiary which is engaged in renewable energy. So these companies I think are scaling up capacities dramatically. And as and when those capacities come on stream, you will see exceptionally good numbers coming through. So just a slight bit of strategy shift from equipment producers, which is getting very competitive because of large capacities coming up, to companies which are actually setting up new renewable power plants, where I feel that because of additional capacity, their revenues and profits should grow materially over the next few years or so.
That's certainly very interesting. You know, there's something that you all don't know about Mahima. She's a fan of good music, and just the other day I caught her singing a song that I never thought that she would sing. If you heard Guns N' Roses and Axl Rose belting out that song, "Welcome to the Jungle," weren't you singing it the other day?
I think you're a better singer than me.
No, but I can't say Axl Rose.
I think let's get in Sharad to do that, right?
Sharad
for us.
should do that. The reason we're talking about this, by the way, is the song "Welcome to the Jungle." I don't know if that was the inspiration behind this next piece. I'm going to let Sharad tell you more about that. Sharad?
Well, exactly. That's one of the key inspirations. But yes, it's welcome to the IPO jungle. And why I'm saying this is because IPO market is roaring back, right? From what it was like a meow 2 years ago. Now it's roaring back. Why is it doing that? That's important. Let's have a look at it. SBI funds, recently we're talking about the IPO. The bid which has come in, that's 3 lakh crore rupees. Again, there is fire in the IPO markets. Of course, Reliance Power was the highest, 7.5 lakh crore, followed by LG Electronics and Bajaj Housing. Another important data I would like to talk about is the SME market. The IPO sentiment is back in the SME space as well. Recently, Millworks Tech came out with its IPO, and second highest ever bids have come in, and the amount is 22,000 crore rupees. Can you imagine that for an SME IPO? And the BSE SME IPO index, interestingly, that has also gone up almost 35% from March lows. That means the sentiment is roaring. Also, what are the factors, helping this primary markets roar back? Strong DIFI support. Companies are focusing more on path to profitability. Even valuation cuts are happening. Astute investors, mutual funds, family offices, they are taking positions in SME IPO. Also, the appetite for larger IPO issues is increasing. That means not so much of a liquidity concern and fairly priced IPOs and the grey market premium, which is what we are seeing in the markets. Also, the merchant bankers, that's where we see that number has also gone up. Just compare that for the last 26 years, the merchant banking registrations is 244, and look at the issues. It has doubled up in the last 26 years. We have been comparing these numbers. But what lies ahead? That's also important. What are the key IPOs to look forward to? And this year is going to be very busy for us as well as the entire ecosystem in the primary markets. And look at the larger names: Reliance, Jio Platforms, NSE, Zepto, Parle Products, Manipal Health. All of them we'll be tracking and showing you that primary market is back and the jungle is roaring.
All right, Sharad, thank you so much for putting this all together and in such an attractive manner. But the interesting part is it's not just the big IPOs, Alex. It's also the smaller ones that are gaining a lot of traction. Just last week, I think this week, if I'm not wrong, Kusumgar saw a premium listing of around 37%.
Yeah, it was oversubscribed over 135
times. Yeah, so a very interesting one for sure.
We should mark the results that have come through from JSW Steel. They look pretty strong. despite the fact that the margin performance seems to be, just on the face of it, better. Revenue uptake of as much as 10%, 47,364 crore rupees or thereabouts. That's on a sequential basis. Remember, the PAT number has come in much better than expected, 4,651. I think that there is also an element of a one-off that has come through in this earnings as well. The stock is spiking on the back of those results. There is a one-off gain that the company has reported. EBITDA performance is also quite significant, though. The EBITDA performance has come through higher than anticipated. The margins have expanded to 19.8% compared with 18.5%. Now, very quickly, before we get into a conversation on the primary markets, Dipan, in case you're familiar with the numbers before we have talked about it right now, you've been obviously looking at some of this in anticipation of the numbers coming through. But steel companies would have had a good Q1, wouldn't they? With the prices having gone up and the fact that their realizations would have gone up. The fact is that JSW Steel has posted an improvement in the margins as well.
Oh, certainly, I think that all metal companies should report good numbers. But a lot of the positives have got captured in the stock price, and valuations also are not as attractive. And my strategy would be to remain invested as an investor. But fresh investments at these levels, I'm not so sure that the risk return profile favors you. Of course, JW Steel is all about volume gains as well, and there are massive capacities coming on stream. Some amount of protection is given by the government also when it comes to HR coils. But end of the day, I think a lot of the good news has got priced in, so I would be a bit cautious. And in my opinion, I think amongst the steel stocks, some of the emerging players I think may give better returns, like Lloyd Metal, which has its own captive mines, and that those iron ore volumes are increasing significantly. So that is one company which comes to mind. And then there's NMDC as well, again a company which is a PSU company which is sitting on very rich iron ore deposits, and they are also scaling up their capacity significantly over the next 3-4 years or so. So my preference would be more for the integrated players who have got captive mines as well. Tata Steel also, from a risk return profile, is far better than some of the other listed companies, and the risks arising out of their global operations that have now got contained. So there are a few opportunities within the steel companies, but broadly, I think on the sector, we are kind of neutral rate.
Let's talk a little bit more about JSW Steel, though, before we move forward, because it's seemingly a pretty big beat across most parameters. In fact, 19.8% is the EBITDA margin compared with an estimate of 18.5% and compared with a comparable number of 16.9% in the previous quarter. Parth joining in to talk about some of those key highlights, as well as to tell us what the one-time gain was about, and the fact that the other income has gone up quite substantially as well, that bolstered the bottom line. What are the key details to focus on, Parth?
That's right. So it's a very strong set of numbers that has been reported by JSW Steel. First, let's go through the key highlights. So the steel sales for the quarter were the best ever in Q1 at 6.25 million tons, seeing a growth of around 4% year on year. On the domestic side as well, the steel sales stood at 5.34 million tons, up 1% year on year. And also the company has mentioned that sales to sectors which are sectors like auto, renewables and appliances sectors were also the best ever they have seen for Q1. If we have a look at the numbers, then profit has outperformed the estimates by a huge margin. The profit came in at 4,651 crores versus an estimate of just 3,000 odd crores. So a huge outperformance is what we have seen in the EBITDA front as well. 9,383 crores of EBITDA, which has been reported by the company versus an estimate of 8,300 crores. Also on the exports front, company has mentioned that the exports stood at around 68 lakh tons, which saw a growth of almost 50% year on year, contributing to 11% of the sales in their Q1. Now, the other details behind the results were that because of the better steel prices that were visible during the quarter has supported realizations for the company, even if some of that revenue growth was offset by the volumes, but those better realizations is the key reason why we are seeing this beat in earnings. EBITDA per ton is something also that has improved sequentially. So now the key things to watch going forward will be how does the domestic steel demand outlook looks like, and also FY27 volume guidance would be something to watch out for by the management of the company. Also, the progress in the capacity expansion front is something that we need to look at the management commentary as well.
All right, okay, Par, thank you so much for getting us those details. That improving of EBITDA per ton is an important thing to note for sure. But the one time, gain that we were talking about was in Q4 FY26, which pertains to one, of course, impact of labor code, and the second one was gain on loss of control over the steel business undertaking of BPSL, and that's the reason as to why the base was also a little skewed. But we were talking about primary markets and the action which is picked up in primary markets. I think to understand as to what the momentum looks like right now and what it is going to look like going ahead, we're joined by Pranav Haldia, who's the MD of Prime Database, joining us now. Pranav, thank you so much for taking out the time. As Sharad has put it, right, the primary markets, the IPO market has gone from a meow to a roar now. What do you think has changed the sentiment? And considering that we have a huge pipeline going ahead, what is it that you're expecting in terms of flows, both from FIs and DIs?
Well, good afternoon and thank you for having me. I would say that it's still too early to say that we've gone from meow to roar. Yes, you've had this successful issue and it attracted a lot of funds, but I think still the primary market or the IPO market, as we've seen historically, always takes cues from the secondary market. And I think till the time the geopolitical situation is not under control, I still would expect some amount of volatility to continue in the secondary market, which would have an impact on the IPO market as well. I think going forward, yeah.
No, please go ahead. Complete your point.
Yeah, going forward as well, of course, as the data also shows, the pipeline is extremely strong. In fact, this is the strongest that it's ever been. You have close to 250 companies which are already holding SEBI approval or awaiting SEBI approval, looking to raise 5 lakh crores. Some of the marquee names which were mentioned earlier in your show as well. But I think, over the next 6 months, it remains to be seen how many of these get launched. We've seen historically as well that companies have chosen to let their approval lapse as well and not launch in case they feel that, it's not an opportune time, in case they're not getting the valuations that they desire. Because for the company, it's actually, if you look at an IPO, for a company, it's a once in a lifetime event. And they would ideally like conditions to be, near optimal.
Sure. No, absolutely correct point that you're raising, Pranav. But the comparison was with the first half of the year. And to say that the situation as things stand right now, given the IPOs that we've already seen take place, and the pipeline that you were just referring to, and the fact that a lot of them have advanced quite significantly, the pipeline does look significantly better. But it's not just IPOs, is it? It's also the QIP pipeline heading into the end of the year, and that's quite robust as well, which indicates that there are companies out there that feel that the appetite for their paper is quite considerable.
Absolutely. I think you've seen a pickup in QIPs, not just QIPs. One very heartening development has also been various OFSs which have been launched by the government towards divestment. You've also seen several block transactions. So I think these are, all good signs which bode well for the market as a whole and generally are a precursor to IPO activity. I think talking about liquidity, which also Mahima had mentioned, I think what you've seen, of course, over the last 2-3 years is abundant amount of liquidity coming in primarily from the domestic institutional investors. In fact, last financial year was the first financial year when mutual funds alone overtook FPIs as anchor investors in Indian IPOs. Increasingly, what you're also finding is that some of the smaller IPOs which are happening actually can go through just with the support of domestic investors and do not even require the support of foreign investors, which is not the case with larger IPOs. At the same time, you also find that mutual funds now are increasingly playing a very critical role in pricing of the IPOs as well, which was not the case earlier. So I think, domestic institutional investors, primarily mutual funds, which are, receiving month-on-month healthy inflows through SIPs, are the primary investors in these IPOs. And there, I don't see any, liquidity issue per se.
That's a good point. Over 30,000 crore comfortably coming in gross flows into SIPs every month, most of them into equity funds. Pranav, thanks so much for taking the time and for giving us that perspective. Pleasure having you.
Thank you.
Let me head back across to Jay, just to give us a sense of a couple of the cohorts that we've spoken about. One, of course, the metal pack, and specifically JSW Steel, it's seeing a bit of a pop. And two, we missed out on asking you what your individual picks were at the start of the program. So let me amend that and ask you right now.
Yeah, you had discussed about the power space, and I'm very bullish on the power space, and I have one pick from there. And I anticipate the BSE Capital Goods Index to scale 99,000 from current levels of 78,000 odds. It's very close to a completion of a short-term correction. So once that's done, it's resuming its uptrend. So the pick I have from the power space is Siemens India, with a stop loss of 33.90, with an objective to scale fresh 52-week highs past the 4,000 mark. The other pick I have is from the brokerage space and related space. Probably this got something to do with NSE listing that's in offing. CDSL with a stop loss of 12.98, possibly scaling to 1850, maybe even 2000. And when it comes to the metal space, metals have had a good run, and I'm bullish on the higher time frame, but in the extreme short term, their run up is done, and I wanted to correct somewhere close to the I would say 11,500, 11,000 mark. Once that's done, then the metals would have undergone a reasonable proportionate correction, and then we can look at specific stocks within that space. JSW Steel has had a good run, and it's due for a deep correction. So I would not touch that stock for the moment. It needs a considerable amount of correction. It's had a good run from 2022, and without a significant correction in the process.
Watch out for Siemens, and I'm sure Jay, the Germans will appreciate the correct pronunciation of the word Siemens. Let me go across to my colleague Somit Sarkar now to find out what he's hearing from all of the chatter in the dealing rooms. Somit Sarkar joining in to tell me what he's hearing on the street. Somit, good afternoon.
Good afternoon, Alex. Good afternoon. The first stock on the list is Global Spirits. Now, the company has come out with their numbers, but dealers are indicating that there could be a potential fundraise announcement next week that could come in on this counter. So keep an eye out for Global Spirits in trade. For GNA Axle, dealers indicate a block deal by one of the promoters is expected to come in very soon. For Petro and LNG, there are sell flows on the large HNI and the PMS desk, and dealers are saying that there are weak. They are indicating that the regasification volumes are on the weaker side, and hence this sell flows are coming in for Petro and LNG. For Bharat Forge, there are buy flows on the DI desk. Dealers indicate strong Q1 numbers. For Laurus Lab, there are buy flows on the at lower levels on the HNI desk, and dealers are expecting a strong set of Q1 numbers to come in from Laurus Labs. And lastly, when it comes to Bharti Airtel, there are sell flows on the PMS desk. Dealers indicate a potential Singtel block deal to come in post Q1 numbers, but this has been a rumor for a very long time, so keep an eye out for Bharti Airtel as well.
All right, Somit, thank you so much for getting us those details. Deepan, I'll come to you from a slightly macro perspective, right? We've been talking about how things are now in fact, focus is shifting towards the large caps, indeed, right? Are you also, from that side of the argument, or do you still prefer that mid caps and small caps will do better in terms of where earnings growth go? Because the risk reward ratio right now in mid caps and small caps, seems to be a little capped.
Today, just one day, we have seen the large caps do little well. It's not a change of a trend or anything.
Okay.
End of the day, for several weeks and months, and maybe several years also now, we have seen small mid-cap stocks outperform the large cap stocks, and that's the norm everywhere as well. So I think depending upon the risk appetite, we remain very positive on small mid-cap stocks, because that's where the growth is. I think if you look at the entire large cap universe, the top 50 or the top 100 companies in India, the growth rates over there, only a handful of companies can deliver mid-teens type of growth rates. The rest are all kind of in slow growth mode. So from that point of view, I don't think that we are seeing a change in the investor appetite, and that now large cap stocks start to do well. I think large cap stocks, in fact, catching up with the gains we have seen in the mid cap stocks. So mid cap index, by the way, has already hit an all-time high. So from that point of view, and Nifty and BSE Sensex are still some distance away from the all-time high. And I expect this outperformance of mid-cap stocks, mid-cap index to sustain for the next several quarters, if not more. So I don't think it's a change in the entire scenario over here.
One day, one swallow does not a summer make. Thank you so much on that note, Dipan. Jay, thanks so much for taking the time, and wish you a great Friday and a happy weekend ahead. Okay, we have to slip in a very quick break. We're holding out. Let's pull up the benchmark Nifty 50. Just take a look at the intraday chart for the benchmark. And we should be holding out at the high point of the day. We are indeed at 24,330, well above that resistance level of 24,300 that we had identified for you. A few of the large caps, the absolute mega caps that are powering that move today. And let's see if that heads into the remainder of the session as well. We'll get you that on the other side of this very quick break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc. And we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined.
Welcome back. You're watching India Market Close, and let's quickly take a look at as to how the markets are doing, because we'll probably end at a very high note, at least for the benchmarks, not for the broader markets. And there you go. We're trading with gains about 1% now, and 24,300 levels is what we are tracking. And we have to see whether the next half an hour is when we continue to hold those levels or not. But broader markets continue to be under pressure. Let's also try to get in our guest now for this segment. We're joined by Vinay Rajani, CMT Senior Technical and Derivative Analyst at HDFC Securities, and Neeraj Dewan, independent market expert, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. Vinay, I'll come to you first. What is it that you're watching for in terms of where the benchmarks go, because broader markets clearly under pressure, and we are going to enter into this weekend with a lot of earnings. So any specific trades that you'll be looking at?
Yeah, good afternoon. So as far as Nifty and Bank Nifty is concerned, they are doing very good. In fact, closing on a strong wicket. And Nifty has broken out from the last 5 days range, and 24,260 was the previous swing high that is taken out. So far so good, we can say, but still the overall consolidation is still on. 24,530 was the 2 weeks high, last to last week's high. 24,530 that needs to be taken out for getting confirmation as far as Nifty is concerned. But yes, Bank Nifty is closing on a strong wicket before the large cap private sector banks are coming out with results. So we can say that till now the broader markets were outperforming. Now Nifty and the Bank Nifty and as well as the large cap IT stocks have taken the lead. I think it is a normal rotation which is going on in the market, because we have entered into the result season, and in result season it used to happen many times. So it's a good sign. I think we should take it positively. We have started outperforming the other emerging markets. That is also a positive sign. So longs can be protected with the 24,000 stop loss in Nifty, and we can expect stock specific move to continue. So yes, today broader markets are underperforming, but next week we can again see resumption of an uptrend in many of the mid caps and small caps as well.
The question though is, what are the individual stocks that you're liking, Vinay, today?
So we are bullish on IT space from here as well. So Emphasis is one of the stock which is looking good on the charts and likely to break out from the consolidation which was there for last 1 month. So Emphasis around 2400 one can go long. 2050 should be the trading stop loss. On the upside, we can expect an immediate target of 80. The second stock which we like from is the cement stock, Dalmia Bharat Cement. So cement space entirely have been performing since long and now started performing and showing some traction. So entire sector is looking good. Dalmia Bharat Cement has also given signs of trend reversal. So around 18201 can go long. 1780 should be the stop loss. On the upside, we are expecting immediate target at 1900.
So those are the stocks that Vinay likes on the charts. But banking in focus, and for good reason. A large part of the bank index and indeed the Nifty 50 will be posting numbers tomorrow. But beyond the results, it's action in the corner office at HDFC Bank that is going to probably capture the headlines tomorrow. At least that's what sources are telling my colleague Piyush Shukla. Piyush joining in to tell you what he's hearing about the possibility of another term being given to HDFC CEO Shashi Jagdishan. What are you picking up, Piyush?
That's right. Sources tell NDTV Profit that HDFC Bank's board may consider reappointing Mr. Sachida Jagdishan for 3 years and recommend his candidature to the RBI tomorrow in its tomorrow board meeting, when the bank also finalizes its Q1 FY27 financial results. Now, Mr. Jagdishan's reappointment has been delayed quite a lot because of the bank wanted to understand what the legal firms had to say about ex-chairman Mr. Atanu Chakraborty's allegations against the bank, and after the legal firms have given the clean chit to the bank on governance front, the bank's board is likely to back Mr. Jagdishan for another 3-year term. And as we are aware, the bank had recently also appointed a full-time chairman, Mr. Rajiv Kumar, for 3 years, and the bank also has hired former Axis Bank CFO, Mr. Puneet Sharma, as this new CFO. So the succession view is getting clear now, and expectation is tomorrow that Mr. Jagdishan will likely get another 3-year term.
Okay, so but let's also talk about numbers, and let me ask you to talk about both HDFC Bank and ICICI Bank. We already know what the disbursement numbers and the deposit growth is looking like for both of these banks. I guess the key talking point is going to be asset quality, is going to be the margin picture, right? So what are the key aspects to focus on here?
Right, both HDFC and ICICI Bank are likely to register around 7 to 10% sort of a growth, YOY growth in their net profit for the quarter ending June. According to Bloomberg estimates, HDFC Bank's NIM is likely to drop by 6 bips Q on Q, whereas the NII is likely to grow by 9% and PAT is also expected to rise by 9%. Now, as you mentioned, credit and deposit growth of HDFC Bank has been in the double-digit range, and the non-interest income, however, could see a sharp fall, because in Q1 FY26, the bank had made gains from its stake sale in HDB Financial Services, which is its NBFC. So that gain is not here in this quarter, so the non-interest income may fall a bit, but overall the results for HDFC are likely to remain strong. Asset quality is likely to remain stable. The key monitorable, like we mentioned, first is CEO reappointment, the amount of deposits bank has gained under the FCNRB scheme, and third is also the NIM guidance, the deposit growth forecast that the bank gives. Similarly, on ICICI Bank too, according to Bloomberg estimates, its NIM is likely to fall by 14 basis points Q on Q, whereas the PAT is likely to grow 5% year on year, and net interest income is likely to rise 10%. The business growth for ICICI Bank is likely to remain strong, and the fee income too would be good, but the treasury gains can be a bit capped in this reporting quarter. The analysts will be watching out for any slippages in the agriculture portfolio of the bank because of the seasonality effect. But apart from that, the business guidance for the full year, how the margins pan out, are some of the key monitorables when it comes to ICICI Bank.
Right, okay, Piyush, thank you so much for getting us those details. Neeraj, very good afternoon to you. I'll come to you on both of these names, HDFC Bank and ICICI Bank. What is it that you'll be watching out for in both of these, and also from the broader end of spectrum, because a lot of banks posted earnings in this weekend?
Yeah, good afternoon. We've already seen some good numbers coming from banks and financial services companies. So I feel that these two, HDFC Bank and ICICI Bank, should also continue that. I think the updates which came also, there's definitely some improvement which is happening in the business. So HDFC Bank, there was a concern because of the uh, the earlier allegation which were made. So that already the investigation, the audit is complete regarding that. And some continuity, if that happens, like your reporter was reporting, will be good for HDFC Bank. ICICI Bank also valuation-wise is trading at a discount to its long-term average valuations, and we've already seen that ICICI Bank has been outperforming. So among the pack, which is ICICI Bank, Kotak Bank, HDFC Bank, I like these in this order: it's ICICI Bank, Kotak, and then HDFC. I think large private sector bank should do well over the next part of the financial year, and valuation-wise also, it's supporting them.
Okay, so clearly that's going to be a talking point, and of course, beyond what occurred in the first quarter, you're going to have a lot of commentary that could come through on what these banks are seeing in the FCNRB mobilization, because that is going to have a bearing on the deposit growth in the second quarter as well. And most of the mobilization of the FCNRB is expected to take place in the quarter July to September. So let's see how that pans out. While we're at it, let's take a look at the charts for some of these banks, because they're pretty much all trading at the high point of the day. Let's pull up HDFC Bank, let's pull up ICICI Bank, let's look at Kotak as well. HDFC Bank trading gains about 1.4% or so. Kotak should be not too far behind. Actually, it should be higher than that, 1.5%. There you go. Kotak is at the high point of the day, one of the top performers on the benchmark Nifty 50. Pull up Access as well, just to see how it looks. And while we do that, let's also head across to complete the list. Let's head across to Shivam to talk about what the key data points are for the remainder of the lenders that will post their numbers. Shivam?
Let's see how the results for banks will be going to be for quarter first of FY27, starting with the first metric, which is credit growth. So credit growth of around 17 to 18% is expected, and the growth will be led by mainly the agri loan business, MSME and corporate business segments. In terms of deposit, we have seen a weaker side, and the deposits growth will be around 12%, and the CASA will decline for the most banks going for sector wide. In terms of margins, the margins are going to see a contraction for most of the banks, and will likely bottom out in quarter first of FY27, and a gradual improvement in NIMs from quarter 2 is expected. In terms of asset quality, the stress in MFI segments and credit cards and personal loans has been normalizing, and in terms of agri slippages, there can be a sequential rise due to seasonality. In terms of profit growth, sector-wide PAT growth is expected at 12%. For private banks, the PAT growth could be around 16 to 13%, 6 to 13%, and for PSU banks, it could decline from 5 to 10%. Now, if we come to the question like which banks will perform better, private banks or PSU banks? So, in terms of the expectations, private banks are going to perform better, and they will benefit from funding mix, asset quality, and better earnings and valuations going forward, while the PSU banks will remain more vulnerable to MSME related cost and credit cost too. In terms of what should we look at for the coming period, so there has been MSME quality, deposit mobilizations, the deposit flows from the FCNR, and also the credit cost trends will be the key monitorable.
All right, okay. Shivam, thank you so much for getting us that entire roundup of the banking names. But Vinay, I'll come to you on Kotak Mahindra, as well as HDFC, ICICI, any of these that you think could be possibly the stocks that you can trade right now, or anything else in the banking space that you're liking?
Yeah, so entire banking space is closing on a strong wicket. Most of the private sector banks are looking strong. In fact, Federal Bank after results is closing on a strong note. So entire banking space is doing good, but it is very difficult to judge the movement, short-term movement, especially before the result announcements. So technical do get changed after the result announcement. So I would not like to take any bet before the result announcements on any of the large-cap private sector banks. So I would wait and watch. But yes, we have been liking this space entirely, NBFC and banking space, and we have recommended to our clients the ETF on the private bank. So that is still open, and the view is positive there. So yes, we are overall bullish on the private sector banks, but stock specific, I would not recommend today for anything in the trading.
Got it. Okay, okay. Let's head across now to what I think is going to be a very interesting piece. It's our regular feature, Bulls versus Bears. And this time we're talking about Eicher Motors. Puneet joining in to tell you which case is stronger. Puneet, it's a tough one, I think, in the automotive space, because if you are somebody that enjoys the automotive space, then your heart will tell you one thing, but your brain will tell you something else.
Well, most certainly, and it's a call on valuations too. It's not cheap by any means, but it's a big brokerage call that has come through on this particular counter, and that has provided a big valuation jump in also. So Kotak has actually upgraded the stock to an add from a sell rating earlier, and you know, the target price is 7930 versus 6500 earlier, giving some upside from the current levels as well. Now, what they have spoken about is multiple key points, but you know, the premium demand is something that's remained concentrated with only a few pockets of the country that they've also highlighted. So 6 to 8 big regions like Delhi, Punjab amongst others are big premium bike markets that still need to expand. So that's point number one. The other one that Kotak has also highlighted is that the new capacity addition will drive further acceleration in terms of market share gains amongst others, because currently the inventory is only running at just 4 to 6 days versus the usual 2 to 2.5 weeks that it runs through. So very, very lean inventory is what the company has, and that's only because of higher capacity utilization and lack of any available factory capacity right now. What also is interesting, and this has been doing some media rounds, that Eicher Motors is considering entry into the 250cc segment. Now, Kotak is one of the first brokerages to have put that into estimates where they feel that this has a good value to it. What on the other side though, the bear case does highlight that in the 350cc and lower segment, you have seen increased competition led by Triumph. So the Triumph 400 bikes, the 400cc earlier, are now tuned in to 349cc, and that benefit is only because of the GST rate cut. So lower GST below 350cc bikes, and hence competition has suddenly increased over the last couple of quarters. Finally, I spoke about the 250cc segment for Eicher. Kotak is putting a value of 802 rupees additionally in case Eicher does that. So that's why I mentioned that it's one of the first brokerages that's putting the thought and the business proposition into financial numbers, and hence could be something. So that 7,900 target price has this 802 from the 250cc space. But valuations are something to watch. 27.5 times price to earnings. It's expensive than Bajaj, a little cheaper than TVS Motors, but you have to watch out for that 250cc opportunity. That's a big one if that fructifies in FY28 or going forward.
Right, Puneet, thank you so much for getting us those details. Neeraj, I'll quickly come to you on Eicher Motors. What do you make of, what Puneet just talked about? Because like he mentioned, valuations are looking cheap, but if, the entire thing of 250cc kind of pans out, it should do better for the counter. What do you make of Eicher Motors, and anything in specific that you like in the auto space as well?
Yeah, actually, I'm more positive on the commercial vehicle space. So like Eicher Motor as a portfolio stock, and whenever there's an opportunity, whenever there's some correction in the stock, I recommend to my investor. But right now, I'm more positive on the commercial vehicle space, whether it's commercial vehicle OEMs or even the auto ancillary, which are catering to commercial vehicles. Because last year also we saw a decent performance as far as production and volume growth was concerned, and even first quarter updates for commercial vehicles have been very good. So that should translate into better numbers for the company than auto ancillaries catering to commercial vehicles.
Okay. Vinay, anything on the charts in the auto space or auto Ank space that you're liking, which is potentially looking like an entrant right now?
Yeah, so Bharat Forge is looking strong on the charts, and it has broken out from the long-term consolidation. So it looks like that it is into a clear-cut participation phase around 2190. It is looking good. But yes, it is trading at its 52-week high near its all-time high. So one have to be very cautious also as we are passing through the result season. But yes, going by the momentum and indicator, it looks like that it should extend this rally. And the short-term support is around 2140, which can be utilized as a stop loss in the long positions.
That's the view coming in Bharat Forge. Vinay, the other sector, that's been slightly volatile but has also seen an uptick from the low point is real estate. Of course, today it's back in action, but in the last 2 days it was under pressure. It's the one space that everybody right now seems to be bullish on. Anything in specific where you're liking in the real estate space?
Yeah, so some of the stocks like Prestige and Godrej Property, these have done exceptionally well, and the when market was struggling, it took a lead and started moving on the upside. And after running correction, we last 3-4 sessions there was a running correction in most of the realty stocks. But today again they are resuming the uptrend. So I think in this we can say that this realty space is entirely outperforming space right now and can continue to do so. So yes, looking strong on the charts after running correction, they are resuming the uptrend. So Prestige Estate, Lodha, Godrej Properties, these are the stocks which are continuously looking good to us and can be utilized to go long and generate some trading alpha in that.
All right. All right. By the way, Reliance Industries trading at the high point of the day. Just to take you through a few numbers that you should watch out for. You have the revenue that is expected to see an uptick of as much as 2.4% on a sequential basis at just over 3 lakh crore rupees. EBITDA is seen growing by as much as 5%. The margins are seeing slightly better on a sequential basis at 15.4%, and as a result of which you're likely to see a net profit uptick of as much as 20%, coming at 20,451. Now, segmentally, you have the O2C space, and there might actually be a read-through from what you saw in MRPL earlier on in the week. Whether that's going to have a bearing on the earnings performance, we'll see soon enough. The O2C EBITDA is seen growing by as much as 11% to 16,146 crore rupees. Retail EBITDA, though, is still going to be under a tad bit of pressure. And this is really where most of the pressure lies for the company. And that might actually be a soft spot. If there is a better than expected performance here, expect there to be a positive reaction for Reliance Industries as well. Oil and gas, there is also expected to be an EBITDA degrowth of about 1%, and Jio ARPU, which is the important number to track the average revenue per user, is more or less flat at about 216. That's the estimate of where things are seen. And the subscriber base, you probably already know this because this is data that is released on an ongoing basis, seen at 53.3 crore rupees or thereabouts. Key things to watch out for: commentary on crude sourcing strategy, because this is going to have a bearing on their cost structures going forward, the margin outlook in the refinery and in the petchem business, the growth pickup, if at all, in the retail segment is going to be watched very closely. The outlook on new energy business is something that the street will look for as well. The geofiber growth, commentary on capex outlook and debt, and very importantly, the timelines, if at all, that could come through for the Jio IPO. So let me come across to Neeraj on a question on Reliance Industries. Neeraj, of course, the stock is buzzing in trade today after quite a bit. It's up about 2%. What strategy would you employ here?
Yeah, today I think the kind of signal that you got from the stake sale increase by the promoter, there is something positive. It's a good signal coming from them. The kind of confidence they have still in the company. So I think that is why you saw this move today. Otherwise you've seen Reliance has underperformed. So I think it's more like a buy on dip, accumulate stock. Because I think we've seen a very long stretch of underperformance from Reliance Industry. I think from the high it is still down about 300 rupees. So and a lot of positives can happen, like you rightly said. O2C business or chemical business is one business where there's expectation of some improvement happening, some margin improvement, some volume growth. So that can really lead as far as the oil segment is concerned. And retail has not been that great in the last quarter, which was doing very well last year. So I think retail is one segment where again we'll be looking at how the numbers are panning there. But some consumer companies have come out with good updates. So there's a good chance that even Reliance Retail should be improving and there should be better updates from there. And then, what is most important right now is the capex that they're doing for the new energy. So some update there and on some timeline on what further capex is required or when you're going to see some revenue coming from that. That will be very important to watch.
Neeraj, CET is the other one which's probably been the accident of the day, right? And it's not like the top line has not grown. Like, it was a good growth, but overall inflation has played its part. Of course, we know that how crude prices had gone up and has impacted overall EBITDA and margins for this one. What do you make of CET earnings one, and overall in the tire space, what's the view like?
I was positive on the tire space. I'm still positive on the tire space. Before even last year, the numbers were very good. March numbers are very good, but the stocks have not really moved. The reason for that is definitely high fuel prices, high crude prices, and they are a very important part of their raw material. So I think looking at the numbers and the growth projection, things are looking very good. But as far as margins are concerned, there's some immediate concern. But I think for the medium to long term, we've seen that some resolution if there was a ceasefire, and the way the crude prices corrected from the peak to below pre-COVID level. So sooner or later some resolution will happen there, and crude prices should come down because there's ample supply which can come once that pressure eases. So then the margin will also improve, and a lot of these companies are even undergoing capex, like JK Tires has announced a capex, and all these factors will be very good for someone who's investing for a couple of years. So this kind of consolidation, correction in the tire space can be a good opportunity to accumulate.
By the way, it's announced a significant expansion in capacity. On that note, thanks so much, gentlemen, for taking the time. A pleasure speaking with you as always, and have a happy Friday and a great weekend ahead. Just a couple of minutes to go for the close of trade, and we're ending likely at the high point of the day for the benchmark Nifty 50, and we've spoken about the reasons why. All of the companies and banks that are going to be posting numbers over the course of later this evening and the weekend are buzzing in trade today. So pull up the heat map for the Nifty 50. You will see what we're talking about. On the top of the list, you have Jio Financial Services that remains one of the top gainers with gains of about 3%. Tech Mahindra on the back of numbers gaining over 4%, but you will see Reliance Industries make it to the top with gains of about 2.5% or so. In the top gainers, you also will see ICICI Bank, you have HDFC Bank that is gaining about 1.4% or thereabouts. It's broadly a pretty picture.
Yeah, even Kotak Mahindra and Axis Bank ahead of numbers, but I think Hindalco is where the pressure continues. DRL also has been a bad week for this counter overall, and Wipro of course on the back of weak set of numbers. But let's try to pull up the broader end of spectrum as well, because that's been under pressure, and the advanced decline ratio at the start of the show also indicated that the mid cap 150 we are ending with cuts of about 0.4% and the small cap 250 with cuts of about 0.6%. I think the advanced decline ratio will also be interesting to see, because we've seen it.
I think we've closed the gap just a tad bit.
Just a tad bit, but still around 1600 odd declines versus 960 odd advances. So broader markets per se, it's not been a good day, but definitely a good day for the benchmarks.
But we've come off the low point of the day, I think, for the small cap index. So pull up the intraday chart for the small cap index, and you will likely see that we've gained a little bit towards the end of the session, and that bodes well. You seem to be seeing a little bit of buying creeping in towards the end of the session as well. Just to make the point on the big gains and the big contributors today, pull up the contributors chart for the Nifty 15. You will see all of the stocks that are contributing. Most of them, Axis is flitting in and out of this list, but most of the stocks that are contributing big to the benchmarks move today are those that are posting numbers, and broadly you're expecting to see a decent set of numbers from the banking pack at the very least, with margins expected to be maintained more or less. ICICI Bank has managed to do that with gusto over the course of the last several quarters, hasn't it?
Absolutely. I think even the broader list would be interesting to watch out for, the BSE 500, because overall it's very stock specific yet again, because you have counters like Relax after a really long time doing very well, locked in upper circuit. E-Clerks also up by about 9% odd. Federal Bank up 6% as well. Kalyan Jewellers, yet another day of gains coming in for this one. I don't know when this is going to stop gaining like this, but on the flip side you also have something like a CET which has taken a knock of around 7% odd, closing also at that low point. HFCL, Sterlite both locked in lower circuit, something that some of the stocks that were riding on really high momentum. Torrent Pharma has also been one of the accidents of the day. Not sure as to why, but 5% of a down.
Yeah, there are a few of these stocks that are reacting to numbers and earnings for the first quarter. But you heard the final bell, and you've ended with gains of about 1.1%, well above that resistance zone of 24,300. The start on Monday is going to be determined by the numbers that you see over the course of this evening and tomorrow, and for that you should stay tuned to all of the live action on NDTV Profit. From Mahima and myself and the team that put this show together though, thank you so much for watching. Stay tuned. This is NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the $64,000 mark on macro-driven concerns. Softer US inflation fuels leveraged Bitcoin and Ethereum rally. BlackRock's record second quarter highlights tokenization push. Visa introduces platform for stablecoin minting. Well, those were the top crypto headlines at this hour. With the deadline to file crypto taxes just round the corner, let's get you some expert opinion. Let's hear from Mayappan Nagappan. He's the tax partner at Trilegal, who talks about the common mistakes when filing for crypto transaction.
In terms of the common mistakes that several people do while filing income tax returns when it comes to crypto, one of the key things is trying to figure out how the transaction should be reported in the provided for crypto transactions in the income tax returns. So the way the form says is that you need to report it in a transaction-wise basis. But however, there are many doubts that clients come to us and ask, should I do it on a per Bitcoin basis or per Ethereum basis? Can I club the transactions and aggregate them at the time of reporting? What happens to sort of the profits or losses within the same set of coins or across multiple crypto assets that they may have held? So in that case, so to give you an example, let's say I have bought 2 Bitcoins, 1 Ethereum and 3 Solana tokens, right? In terms of reporting the gains and losses, what the department may expect in the reporting is that you do it on a per transaction basis, which is there are 6 tokens that I own that I have bought and sold, 2 Bitcoins, 1 Ethereum and 3 Solana. So there should be 6 transactions that are reported for. But many times what people possibly are doing is saying that, they're reporting only the Bitcoin, 2 Bitcoin transfers as a single transaction, the Ethereum as a separate one, or Solana as a separate one. So you're reporting 3 transactions as opposed to 6 individual transactions. Or alternatively, some may also be clubbing the profits and losses across multiple tokens and reporting it together. So if you have made a loss on the Ethereum sale, but you made profits on the 2 Bitcoin sale, you may report it together. Now, all of this can get picked up for audit and scrutiny, right? Because the way the form is worded, it says on a per transaction basis. And this is something that, they should be really careful about. The other thing for, newer sort of investors to the space to keep in mind is to understand that the 1% TDS that the exchanges deduct is not a final tax by any means. It is only a withholding at the time of the transactions, and they still have to sort of reconcile their, their filings with the TDS reportings. So when they are trading on multiple exchanges, another common issue that comes up is there is a mismatch between the withholding tax returns and what the final returns say in terms of the actual income earned.
Thanks for that. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933 बरसों से सरसों।
कुछ तो बात है इस दिल में
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The big
Welcome. You're watching the Editor's Cut, and we've already started all of our banter before we've hit roll, but we'd love to include you in it. We have Gautam Trivedi, co-founder and managing partner at Nepean Capital, joining the table today. Gautam, welcome. This is going to be exciting. So here's before we get to all of our questions and what you think about the market, just for our viewers, here's what we're going to do. We have 3 propositions that we are presenting. All of us will be presenting, and then we have a debate on it on what you think one way or the other. But before we go to number 1, the bigger question is how markets have really ended this week and shown a real sense of faith in what India can do, isn't it?
Yeah. No, I agree. I think if you look at from the start of the war, 20th of February, and then up until the 30th of March, if I remember right, where the market actually, the drawdown was about 13.5%. If you look at that drawdown versus previous global accidents, if I can call them that, it's been the best. So in spite of oil, as in Brent doubling, rupee crashing as the way it has, we've come out actually pretty strong, and the market's rebounded about 8 to 9% since, which I think has been a great outcome. Results are starting to come in, which are so far pretty good, including IT, which I'm sure we'll talk about later. But I think I'm pretty impressed with the way the markets handle this, and I think. And we'll get into this in more detail, but I've always sort of said that you've got one side, you've got the economy, the other side, the stock market. And sometimes for a very long period, the two are not connected. This is definitely one of them.
You're saying the economy is not going to do well, but
No.
the markets is doing well?
I think the economy, well, earnings growth for FY27 started off with about 15-16%, which they always start off high at the beginning of the fiscal year. But because of the war and the absolute impact on raw material costs, and this is across industries, they're now being pruned down to about 10 to 12%. I mean, we're a collateral damage from the war. We've got nothing to do with it, frankly. But it's unfortunate. Otherwise, this could have been a great year for us.
That's true.
Let's get started on the first topic, which I think is front and center, right? We've seen the headlines: a guardian of the Strait of Hormuz, a 20% charge to ensure protection. So the question that we're asking is, are Indian markets developing a little bit of a thick skin? Because through the week, you saw a little bit of resilience, didn't you? I think that is in fact the case. And the fulcrum, as we've been saying throughout this conflict, for Indian markets is crude, and crude at 85 is not a bad deal for India.
It is a bad deal for India.
It's not, relatively speaking, right?
No, so this is a continuation of what we were discussing last week, where
I knew she would say this.
Of course, because I said it last week also. But
you like to say I told you so.
I'm not saying I told you so, but
Trump is very unpredictable, so we don't know how this particular war will really continue going forward.
But he's predictably unpredictable. I agree with you, but the fact that he's predictably unpredictable, here's the thesis that I want to present. The more you say weird things, the less people take you seriously. And so you look at what happened with that 20% fee that he talked about. First, everyone panicked, and then he came and said, okay, actually, I will not take a fee. I'll make you invest instead, and then became the Gulf states who are investing. And he says, I'm the guardian of the Hormuz. And Iranians say, we've always been the guardians of the Hormuz. It's like a bad superhero movie because no one asked for a guardian. But then if you ask me that question, my contention is we're developing a thicker skin. I'm not saying it can't get worse. It can. Just the tolerance levels have shifted higher.
You reckon?
Yeah, I think so. I think every week we have a new, or almost sometimes many times in a week, we have a new guidance from the White House of where they position. From war, we've gone to ceasefire, back to war, which is obviously very unfortunate. So I think the markets have started to get a little bit tired about it. And they're putting money to work. And as are we, from our fund, irrespective of what's happening in the broader spectrum with respect to the war and global impact of that.
Right. So if I can, present one particular aspect, while you stated that the economy and the economic reality is because of this war, and the markets are a little decoupled, I would say that the economists had been penciling in $80 per barrel as an average for this particular fiscal year to come to all sorts of macro data. Now, till that is crossed, there won't be a mayhem, and therefore the markets will not react adversely. And the last few weeks where we got the crude oil prices below about $70 per barrel has given us a headroom of this 80 and above up to 90 for a short period of time. In my mind, that is the calculation that is playing on the market's mind.
Yeah, so let me just address the market part, which you said about decoupling. Let's understand who's playing in the market and what's driving the market per se. It's all fund flows. Let's get real. Okay, so FIs since the beginning of last year, since January 2025, have sold almost $50 billion worth of stock in India. All right. Where does India stand today from an overall perspective? I think with relation to Asian peers, it's the worst performance on a relative basis in the last 30 years. Okay, of course, the two outliers there are Korea and Taiwan, so they've completely moved the average up. But the reality is that the domestic flows are just incessant, relentless. Okay, so we saw $88 billion of, I'm dollarizing everything, so we compare it to the FPI flows. $88 billion last year, $51 billion already this year, so far, as of, I think, yesterday's close. So if you look at the absolute numbers from the domestic side, they don't care. There's a war, there's inflation, crude going to 150. They seem to be just putting money into the market as if everything's hunky-dory. Now, what's causing that? Let's understand that. I've done some deep dive on that. Did you know this, that 5 states in India, account for almost 48 to 49% of the 130 million or 13 crore unique investor base. I'm not counting demat accounts, I'm just counting the unique investors. So all 5 of us are unique investors. We may have multiple demat accounts. So I'm not counting those. The top 10 states account for 73% of total number of unique investors. What does that tell you? The equity penetration in this country has not even reached the halfway mark. Okay? And you'd be surprised, if I look at the top 5, you'd be surprised with number 5. And I shouldn't say this, it's a BJP ruled state.
Please say 1, 2, 3, 4, 5.
I'll say 1, 2, 3, 4, 5. And this is on the this data is in the NSE database. Number 1 is Maharashtra, that's not a surprise. Number 2 was Gujarat, now it's Uttar Pradesh. Number 3 is Gujarat, number 4 is Rajasthan. Number 5, I've given you a hint, which is, it's now a BJP state, West Bengal. So my point really being, I mean, I'm not talking about West Bengal being number 5 as being important or not important, but the point is, there's so much more money still to come. The 3 legs to the stool is the way I see it. FPIs, domestic flows, and the third leg, which is not counted in the domestic flows, are family offices, AIFs like myself, PMS, and investors who go directly into the market via discount brokerages. So that leg and that amount of money, I don't have data on that, how that's doing. But the FBI number, of course, has been usually negative. We just said 50 billion of selling since the start of last year.
I personally think that it's a great time for folks like Gautam, simply because the FI selling happening at the large cap end keeps the Nifty subdued. But the bottom-up identification of businesses, I mean, he grounds his shoes to go to the plants, etc., in remote India, which are small caps, and he's able to identify this is a business for the next 10 years, buys into that, and makes money. The FI can't do that. So I think it's a great time for people who are doing bottom-up.
And a lot of these companies are relatively insulated, right? One can argue that, yes, okay, to a certain extent, inputs in a lot of spaces do get affected. But equally, you have a situation where they're strong enough, or the system is strong enough to allow for a significant amount of pass-through as well.
What's the answer to the question? Gautam has answered, we have answered, both of you haven't.
Who is both of you?
Alex
I
and Neeraj.
said at the start, I think that
You
there
agree.
is really...
Gautam focused on the penetration bit, but I would still say that we still need the FIIs to come back with rupee again depreciating so sharply in this particular week is a cause of worry. Therefore...
to the specific question about whether we're getting
developing
more immune, developing a thicker skin, you said only till, crude is at that average of below 80.
So my view is at 85, we might be looking like that. If crude were to go to 100, if it does, then I think things will change.
Okay.
That's my view.
Okay, let's go to question number 2.
Okay. Question number 2, and it flows in beautifully with the point that Gautam was making, is the Korean market volatility a boon for India? Right? Now, I have some points to present here very, very quickly, right? If you saw 2 things that have happened. One, the 3x leverage SK Hynix ETF is down 90% from its peak just a month ago, 36 to now 4.5, 5, right? The 2x one is down 70%. And after being down 70%, the AUM in it is over $6 billion. This is serious leverage money out there, which is now getting eroded and eroding investor confidence. And 2, volatility itself in the Korean markets. So the Kospi volatility index or volatility number is some 80, 81.
Hit a peak of 98.
98. And the bottom was 28.
Or 23 or something like that.
28. And at least in Jan was 28. And last point here, the 2 stocks, which is SK Hynix and Samsung, at times account for 80% or 85% of the total trading volume in a single day. This is serious concentration. And if this is unraveling, maybe, just maybe, foreign investors might prefer slightly more benign markets like India. Maybe.
Sorry, you want to take that?
No, please make a point.
So, here's the thing. Is there a case for FIs to come back to India, given how much they've been selling? September 2024 was really peak interest in India from FIs, and they've been selling, of course, non-stop, with the exception of the month of February. We saw about 2.4 billion of net buying that came in from FIs. So look at where we were in September 24, which was the peak. Our weightage in the MSCI emerging market index, which is obviously the benchmark for global mutual fund and asset allocators, was as high as 20.8%. We're now down to 11.3, so almost half. Okay, that's one. Two, foreign ownership of the Indian equity markets, and that mark-to-market number as of last week was $720 billion on a base of a denominator of 5 billion. So that number is now down to about 14.5%. Again, that's a 10-year low. So we've seen a lot of selling that's eroded the FI participation in this market. The hope is it doesn't get any worse than this. And to your point about whether it's Korea or Taiwan or even back in the States with respect to the tech, the dependence on tech for incremental capex, for incremental growth. So for the current quarter, i.e. the second quarter numbers, which will come out in the US, for the S&P 500, the growth is supposed to be 22%, as high as 22%. But 60% of that 22% is AI hyperscaler capex and infra. So huge dependence on tech and AI. We don't have that because we don't have tech and AI. We have IT services, which is not strictly tech in that true sense. So yes, there is a case to come back to India, and I hope they're paying attention, listening, watching this show. Please make sure it goes global and everybody from San Francisco to Hong Kong is watching this.
Very well mentioned, because all the foreign money is right now chasing AI. And today, as we speak, Xi Jinping has made an announcement in the AI conference, and he has said that we'll be the global leaders in artificial intelligence. We will beat the US. So there is this big momentum where India seems to be lagging behind. And also we have our import bill, which is a big worry for the FIIs. So putting both of these factors together, whether we'll benefit from any other emerging market being down is a serious question.
So you don't agree?
I don't agree.
I second that in that sense, because even with everything that's happened with the Kospi, I think from the start of the year, you're still 60% up on that index.
I think now, well, as of last Friday, it was 108% dollar return. This is in spite of the fact that FIIs out of Korea sold $100 billion worth of stock. So, obviously they were regretting it until last week, but this week's been a completely different story.
So you've not slid back entirely.
No, even 2025 is a banner year for Kospi, right? Per se. So there's no taking away that fact. The question is only this, and I'm just hoping more than an assertion that what could be woes for the AI trade could actually be beneficial for an anti-AI trade like India.
No,
that's my submission.
So the reason I'm making that point is I think the AI trade, people have gotten a little skeptical about it, but they've not gone off it yet.
Hopefully happens
that inverse correlation will take place only if serious investors start saying that, okay, this AI story is looking really flaky. I think we're ways away from that. Unless you have great corporate results which make valuations look more attractive in India, and then that's a different story. You have the SIP investor story that Gautam was talking about. That's still a wall of money that's going to keep valuations elevated. Maybe they'll stop selling as much, but I don't know if it's going to be a Korea versus India binary.
And it's not a binary. It's not a binary. It's just an AI trade versus anti-AI trade. I'm hoping that turns out to be true.
I think our big IPOs will actually attract more, foreign money because it's locked in as anchor book and one company. I think they are doing, and the roadshows are also much more focused. So I think that will attract a lot of money for us. But overall, we'll be more self-sustaining with more domestic participants having much more faith in the thing. And just one more thing, that AI thrust, the use of technology in manufacturing is slowly seeping in. And our big thrust is towards manufacturing. India is good at manufacturing, low-cost manufacturing. If AI technology is utilized there, that can be a tipping point for the next wave of investments to come into India. At least that's what I gather from a lot of investors.
No, so I'll quickly make my point, right? So a lot of the flows that come through, and we've spoken about this in the past, from the outside in are not active, they're passive. And so therefore, the view from the outside will be generally to look at valuations as a collective and not at individual stocks. And it's not reached the point where vis-a-vis other potential targets for foreign institutional investors, we've come out so substantially that it becomes lucrative enough for foreign institutions to say, I'm going to rebalance right now. Will that happen? I don't know. you could have a time-wise correction from this point. We've seen pretty much that take place for quite a while. What could also take place is an earnings re-rating, and I don't know if that's going to happen very quickly based on what we're seeing, right?
Just said 12%.
So therefore, if anything, I think that might have to be revised downwards if this conflict continues, because you will have certain pockets that will have to take a hammering, which they have not done in the first quarter. EBITDA margins to a certain extent might get scrimped a little bit, though you see the revenue uptick that takes place because consumption has been broadly okay. But in the second quarter, that is not going to happen.
So while we paid so much attention, Neeraj, you have something to wrap this discussion?
Gautam, if you can, 30 seconds. Do you think that's becoming India Inc.'s kind of response, that when pushed to the wall, they bring that best foot forward, show margin resilience? It happened in COVID. It's happened in quarter one as well.
It seems to be happening so far. We haven't seen the play out of the results as yet. But I think to the point about the AI trade, we've been playing AI in India through our fund, through power.
Okay.
And that's the only way to do it, because there aren't enough data center companies listed as yet. 2-3 years down the line, you'll see more companies getting listed. And, we produce 20% of the world's content, 3%, and we have only 3% of the world's compute power. So that's going to be a massive, and what I've said in the past is the entire ecosystem, the two ecosystems we're looking at right now, and we've heavily invested. So power as a percentage of allocation is the highest for us. So we're 21% of our AUMs are in power. So we've taken a big bet. And the second highest is, I think, is definitely financials, which I think is about 16 or 17%. So that's how big. I mean, who would have thought 5 years ago somebody would be putting as much as 21% into a single?
But is it generators? Is it transmission companies? Is it equipment manufacturers?
I'm glad you asked that. So within the generation, transmission, and distribution, the weakest link actually is transmission. And component manufacturers within the transmission space. That's the big, big capex that's coming. Again, data center capex. We've got a bunch of small cap names which will become large caps over the next 3 to 5 years.
Right. I'm glad you mentioned about the artificial intelligence, because our next question that we are debating is the Indian IT services sector really living up to the AI challenge really coming in? What's your view on that?
I've been asked this question time and again, and we do discuss it every now and then, that I won't name the stocks, but the stocks have fallen as much as they have. Well, if I can talk of TCS, great company, ticks all the boxes, no debt, super management. Stocks down 55% since January of last year. The Indian IT index is down 40% in the last 2 years. So is now a good time. And TCS, again, keep going back to that, but TCS is now trading at 13 times FY28 PE. Wow. I mean, it used to be 3 years ago at about 26, 27 times. So it's, halved from there as well. And yes, 55% correction. So math adds up.
So Gautam, enriched by the earnings season, and we have pretty much all the companies really doling out the numbers, and also putting out good narrative on the artificial intelligence thrust. So how do you now assess, after being enriched by the recent announcement, because in the last quarterly result, they actually got a taste from the market that we need that AI thrust, and this time a lot of that work is being done by the companies.
So if you look at the narrative that's coming from TCS, they've said their AI transformational work projects the ARR is $2.6 billion, okay, which is about 8.5% of total revenues. But these are all short-term projects. They're not your traditional long duration projects. So that 3, 4, 6 months, or even 9 months, I think in some cases. So I think it's early days to start re-rating these stocks. Would I buy some of these stocks at this price if I had a large cap fund? The answer is probably yes, because I don't think you can get any worse from here. They're smart people. I mean, TCS, we don't own TCS for the record, just want to make that clear. But the fact is they've, put $7 billion as a commitment to put money in the data center business. That's great news. At least they're pivoting in the right direction, which is where India needs capital. The others haven't really expressed or seen. HCL, I think HCL Tech announced something as well.
But 1,500 crores.
Yes. So, yes, it's a good step. It's not as big as TCS, but the fact is, if they start pivoting in this direction, it's the right place to start going into, given the amount of cash they're sitting on.
Just a quick question on that.
Yeah.
So the tendency has been to look at these IT companies and judge them on a quarter-on-quarter basis.
Yeah.
And you look very closely at their margins as well. So if they're pivoting from a services business to a data center business, then you're going to have to be okay as an investor to say, oh, the margins are not going to be what we're used to. There's going to be erosion.
That's one company.
I'm saying,
So if you look at the remit of the question, will Indian IT service sector live up to the AI challenge? My two bits would be yes. But would that make them as valuable and as interesting and as important in the Indian ecosystem as they've been? Perhaps not. Remember, everyone was excited about the Indian IT service sector, apart from an investor valuation metric, because these were the companies that flew our flag high. They created those high-value jobs. It gave that pride of, India is sort of the data center for the world. All of that will also change. So the way you look at these companies will also change. They'll then be one of many trying to live up in that AI race. Will they fail at it? I don't think so, because I'm a little sentimental also about the ability of some of these companies.
They will live up to that challenge, is what
they
you
will
say.
live up to the challenge, but will they then be as valuable as they are now? Because they were earlier able to provide something not everyone was.
Right.
That might change.
I think they'll be more valuable than they are now. They may not be as valuable as they were 3 years ago. Because the multiples have to expand from 12 times to...
From here, they will recoup, basically. What do you think?
Let me just, before Alex says something, let me add something to what you just said. The fact is, if Indian IT companies figure out a way to get more and more embedded within the AI space, even if it's 10 to 15%, but of revenues, they're not there yet, but I'm saying if they start showing that, and the ability to actually get to a higher number over the next 5 years, these stocks will get significantly re-rated. I can guarantee that. We have a small cap company, I don't want to get into the name, but that's until now it's still making hose pipes. But that hose pipe now has a completely different application, i.e. liquid cooling of the GPUs. The stock has ripped.
Yeah.
Their revenues haven't even started as yet in the data center business, but the market's already foretelling what it's going to be. The management thinks in 3 years' time it'll be 50% of revenues. Okay, 50% is a high bar for some of these companies that have a pretty big base, but I would think there would be a significant re-rating of these stocks by the market if they start demonstrating more penetration in the AI space.
Alex, what's your verdict?
I think that there's going to be a separation of the wheat from the chaff. There's going to be a few winners in this story, and those that are going to get their bets right at this point in the next couple of quarters in terms of mobilization of funds and reorientation are going to win the fight.
There will be a segregation between winners and losers. There will be a change of pecking order, and I would say collaboration with already existing AI capabilities is the way to go. Those who are doing it, like HCL Tech with Sarvam, and there is a buyout happening in several other companies also. If that collaboration happens, because the two scripts are totally different.
Commentary is getting definitively positive on AI, say in the last couple of weeks than it has been for a while. So that is something to go by. Before we wrap up, very quickly, quick poll. How much will you pay for first access to Trump Media and to Truth Social posts? Because this is the strangest story I have seen all week.
So I will pay whatever it takes so that they don't take away my US visa. Okay, so I'm a big fan of Trump.
This is a vested interest.
Completely.
Answer.
But Neeraj
I'm only happy
also
on national television.
had a last parting kick
The last
question.
parting kick has to be who wins on Sunday night, 12:30 a.m. our time, or Monday morning, right? And I'm rooting and betting on Messi and Argentina.
I think it will be a messy match.
Messi match, okay.
Yes.
With an I or Y?
Yeah, exactly.
That's a good one. I've been supporting Spain through the competition.
Okay.
I have proof.
I'm not going to pretend to care. So please pardon me, all football lovers.
We can talk about the offside rule just in case you want.
I think Argentina, because this, from a divine perspective, will be the best parting gift for Messi.
Yeah, cool.
Yeah.
We
should discuss this on Monday.
We should love to have you back, but I was just going to say, I love it how people who are so passionate about football and who are otherwise so logical about everything get emotional about it. That's a divine gift to Messi. That's what we'll end on. We've absolutely run out of time. Thank you so much for joining us in this edition of Editor's Cut. We'll be back same time, same place next week.
The weather is changing and so are the diseases. Dengue is no longer just a monsoon illness.
We look at what climate change means for infectious diseases and what India must do to prepare for this new normal.
This week on NDTV Lifeline, understand the changing disease landscape and the simple steps that can help protect you and your family. Only on NDTV.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV.
Nifty ends the week in the green, up nearly 0.5%. IT leads the charge as TCS and Tech Mahindra rally on earnings, while broader markets trail benchmarks. JSW Steel posts a strong set of numbers. All key metrics outperformed the estimates. Best ever steel sales for Q1. US launches strikes against Iran for the 6th straight day. US Defense Secretary posts a picture of destroyed maritime tower of Chabahar port in Iran. The growing supply disruption fears have really pushed Brent towards $85 per barrel mark. Sources tell NDTV Profit that RBI is set to launch polymer banknote pilot. Pilot likely to begin with 10 rupees and 20 denominations. Full-scale launch is expected next year. RBI Governor Sanjay Malhotra flags twin inflation risks, West Asia tensions and monsoon worries. As global uncertainty grows, weather and geopolitics remain key concerns for India's economic outlook. India takes a major leap in green mobility with its first hydrogen-powered train. Prime Minister Narendra Modi flags off train from Jind railway station. India's private space ambitions near a historic liftoff as Skyroot's Vikram 1 prepares for its maiden orbital test flight tomorrow, marking a defining moment for India's commercial space journey. Chinese President Xi Jinping first address on intelligence conference in Shanghai. Xi calls for a step up of global efforts in AI as US curbs squeeze China's tech access. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But now let's take a quick check on the markets. So viewers, benchmark indices have ended the week on a strong note with Nifty gaining over 1% and the Sensex rising nearly 1,000 points. So as robust earnings really outweighed weak global cues, sectorally, IT was a sea of green with only metal and pharma ending in the red. And for a complete market roundup, let's go across to my colleague Jasmeet Singh. Hi.
Well, a good day for markets today. Nifty 50 ends in green and gains about 1%. While in terms of top gainers in Nifty 50, we had stocks like Kotak Bank and Tech Mahindra both gaining over 4% in today's trade. While if you look at the markets over last 1 week, we see markets have ended in green and gained about 0.5%. And in terms of top gainers for the week, we have stocks like TCS and Tech Mahindra both gaining the most throughout the week. If you look at TCS, that has gained about 10% in this current week, while Techchem has gained about 8%. And this up move in IT IT stocks is coming on the back of that IT result which we have seen in the Q1, when most of the earnings have met the estimates. Now, in terms of the broader market, that has underperformed the benchmark in today's trade, while Nifty Midcap 150 ends in red.